Good morning, everybody. Welcome back to the second day of the External Statistics Conference here in Kraków. And I'm very happy to see so many faces after a very nice dinner event last night. My name is Claudia Mann. I'm from the European Central Bank, but I'm more than sure that you didn't come to listen to me, but rather to our distinguished speakers who join me here on the panel. And we have Venkat Yusula, sorry for this, from the International Monetary Fund, together with Emmanuel Manolikakis, also from the IMF. We have Gustavo Felipe de Sousa from the Central Bank of Brazil and Tobias Gruhle from the Deutsche Bundesbank. Together we will spend the next roughly an hour on a very interesting topic that's slightly deviating from what we had discussed yesterday, despite it's not totally distinguished, because it will be on measuring crypto assets in external statistics. Given the slight time constraints that we are having, maybe we can keep the presentations to a maximum of 15 minutes, so that then allows the audience also to ask some questions. The first presentation will be by the two colleagues from the International Monetary Fund, and it will be on measuring crypto assets in the BPM 27 and the 2025 SNA frameworks, and in particular about challenges, guidances, and the way forward. The presenters will be Venkat Yusula and Emmanuel Manolikakis, and they are both senior economists in the Balance of Payment Division of the IMF Statistics Department. And the floor is yours.
Right, so good morning, everyone. Thank you very much, Chair, for the nice introduction. So my name is Emmanuel Manolikakis from the IMF. So we're going to be discussing today, measuring crypto assets, in the BPM 2025 SNA framework, challenges, guidance, and the way forward. But before I start the presentation, I just want to mention quickly, the usual disclaimer for IMF presentation applies, okay? Just want to make sure I can keep my job. Thank you. Right, so let's see if this works. Perfect. So crypto assets, are growing rapidly within the global financial ecosystem, but their borderless nature, anonymity, and a rapid evolution make them difficult for statistical compilers to produce timely, accurate, and policy-relevant macroeconomic data. So this presentation provides a structured overview how to integrate crypto assets into the macroeconomic accounts. And it draws primarily on the draft crypto asset compilation guide that was also produced by the IMF. So the outline will begin with how to integrate crypto assets into macroeconomic accounting using the guidelines, in the aforementioned manuals. This is going to be followed by a brief examination of the data sources and compilation challenges that countries face when trying to track these assets. And this part of the presentation will be presented by Venkat. And we will conclude with a discussion on future work and way forward. Great. So, as was mentioned earlier, crypto assets have grown substantially over the years. In October 2025, the market capitalization was approximately 4.3 trillion. Now, despite this growth, they remain relatively small when we compare them, to traditional, financial instruments. And yes, Bitcoin is still the dominant crypto asset. Now, crypto ETFs have also emerged as a major institutional investors in Bitcoin, particularly following the introduction, of spot Bitcoin ETFs in the United States in 2024. Now, in the background, we've included a slide as well, that you can look at your own time, basically showing, the assets of ETF holdings. Okay, we're not going to do it today. So, given the major investment funds hold an enormous chunk of the global Bitcoin supply, and now all this has, basically, been started or supported by, changes in the regulatory framework. In the United States, we had the Genius Act, and, in Europe, you also have the markets in crypto asset regulation. So legislation has made digital assets data much more accessible than it was 5 years ago, but it hasn't made it simple. We have moved from an era of complete darkness into an era of fragmented light, if you like the pun. The data is there, but it still requires a massive amount of cross-referencing and forensic work to see the full picture. And that's what necessitated, basically, the compilation guide. Now, looking at the methodological framework for crypto assets, this topology and classification is based on the BPM-7 and 2025 SNA. Now, please note that the paper and the presentation is limited to only fungible crypto assets. However, readers seeking additional details on non-fungible tokens may consult either the manuals or the forthcoming compilation guide. Now, fungible crypto assets are classified into 3 broad categories, as you can see here. So fungible crypto assets with a corresponding liability under categories 1, those are the ones that are designed to act as a general medium of exchange, or under categories 2, designed to act as a medium of exchange within a platform, as well as the third pillar, security crypto assets, are all classified as financial assets. In contrast, fungible crypto assets without a corresponding liability under categories 1 and 2, the ones where you can see are basically highlighted in yellow, right? Those are crypto assets designed to act as a general medium of exchange without a corresponding liability, and those that act only as a medium of exchange within a platform without a corresponding are classified as non-produced, non-financial assets. And they are recorded as a separate category, in the capital count of the BPM-7 and in the capital count and balance sheet of the 2025 SNA. Now, given time constraints, we're not going to go through, all, basically, the compilation and methodological framework of crypto assets, but we're just going to mention, a couple of them, here today. So when we're looking at, what we're talking about crypto mining, validation, and staking, what we say here is that the output, of that activity is basically the sum of explicit fees, the transaction fee, and an implicit fee, which we refer to as a block reward. And the output is basically a service, just, they're providing a service. Now, the implicit fee is collectively paid by existing holders and is treated as a cross-border transaction by convention. However, if you know the payer of the implicit fee, then by all means, you classify it into the proper, sector. However, if you're basically going to be recording it, with the rest of the world, this may result in global asymmetries. Now, when we look at the practice of lending and borrowing of fungible crypto assets, the lending and borrowing is basically applicable to both crypto assets with a corresponding liability, like stablecoins, and those without a corresponding liability, bitcoins. So lending of crypto assets without a corresponding liability, basically these are institutional units that lend these assets, they remain the economic owners. And we're saying that there's a transfer of legal ownership. So this will be recorded similar to securities lending, and the fee is going to be recorded as interest. Now, lending in stablecoins is recorded along the lines of cash lending, and the associated revenue or payment, again, is going to be recorded as interest. Now, one particular question that comes to mind is that are fungible crypto assets consistent with, or considered, as reserve assets? So according to the BPM-7, it states that crypto assets without a corresponding liability, such as Bitcoin, cannot be included as part of reserve assets. Stablecoins that can be readily available to and are controlled by monetary authorities for meeting balance of payments financing needs can be qualified as reserve assets. So basically the criteria whether they should be included or excluded, has to follow basically the criteria, for reserve assets. Now, I'm going to be turning over the presentation to Venkat, and he will be basically, discussing the compilation practices and way forward.
Thank you very much. We will look at now data sources and compilation methods, having understood what is the methodological framework we have in BPM 7 and 2025 SNA. From a compilation perspective, crypto assets pose significant challenges. We can understand that, and all of you are aware about that. However, crypto assets ecosystem exhibits a substantial degree of centralization, which is really useful for measuring crypto assets. That's what we are going to do. So we are going to follow the traditional way of data collection, right? So here you see some data sources and compilation methods. Type of data sources we have is one set of data sources are like administrative data sources. The other set we have included are other data sources, but in our guide we have given detailed elaboration of all these data sources. When you look at administrative data sources, they could be data from regulators. So one example of the country which is already compiling following this approach is Estonia. Then you can look at tax data on crypto assets. When we talk about tax data on crypto assets, it is important to mention about two important initiatives. One is OECD's crypto assets reporting framework, and then another one is DAC8 of EU. These are two important initiatives which are expected to bring us good amount of data, basically standard reporting relating to crypto assets, acquisition of assets, and related data relating to crypto assets, which can be useful for statistical purposes, provided you have to talk to tax authorities, and all those things apply. And the other one is International Transactions Reporting System. I will not talk much about this. We have presentation from Brazil. And then other important data source is data on crypto seizures. This is something very important for crypto assets. As we all know, we come across all kind of news reports that crypto assets seizures are taking place. Here, then we have to work with our law enforcement agencies or whatever agency is relevant in our country to get this particular data. Then you look at other data sources, financial reports. Important ones are like crypto mining financial reports. We have seen those reports and we have provided detailed guidance on how we could use those reports. They provide information on crypto assets mined and holdings of crypto assets by these entities, basically Bitcoin holdings by these entities. That's what we have seen. Then stablecoin issuers financial reports provide you information on liabilities on account of stablecoins issued and information about the assets backing those stablecoins issued. The most important one here in terms of crypto flows and stocks is crypto exchanges or custodians like Coinbase, Binance. They provide information on crypto assets under custody, mostly by type of crypto assets under custody, like Bitcoin, Ether, and all type of crypto assets. And then other one which Emmanuel slightly mentioned in his initial introduction is that certainly we should not forget about these crypto ETFs. And some corporations have started holding crypto assets. That is also important. You have to look at them. Then one question comes to us at this point of time is that you talked about all the data sources, but we have a lot of data from Chainalysis and commercial data sources. What about that? So those data sources are useful, but we need to be very cautious. We clearly mentioned in our crypto assets compilation guide, in our paper also, which you will see when it is published, is that those commercial data providers' data is maybe helpful for identifying macroeconomic data, macroeconomic trends, not that you can plug in the data from those data sources into your BPM 7 or 2025 SNA data frameworks directly. So they have limitations. You need to be careful. We mentioned about that, how they could be used. So when you look at all these data sources, there are some certain cross-cutting challenges. In compilation guide, we have provided detailed pros and cons of all the data sources. But for the purpose of presentation here, we said that, okay, there are some cross-cutting challenges, basically consistency with BPM 7 and 2025 SNA standards. And again, data of crypto assets may not be available with corresponding liability, without corresponding liability. That breakup is important. And the other important requirement is residence and institutional sector of the holders of crypto assets. This is quite important for us. That is something lacking. That necessity, that requires some kind of complex proxy methods. We talked about that also in our guide. So if you don't have this classification, we know that there could be misclassification between financial and capital accounts and difficulties in compiling BOP, IAP, and sectoral accounts. And other one is location of stable coins issuers. This is something very critical. They jump from one location to another. So complicates the identification of residents and recording of cross-border liabilities. So to overcome these things, basically, we have to identify the suitable data sources, and to fill the missing gaps, we have to targeted surveys you need to conduct. That is something we have to do. So now I move to international data collection and sharing. This is something we want to put a proposal before all of you and to get the feedback. We know that administrative data sources may not always be comprehensive, or financial reports for that matter. And the problem with crypto assets is that residents may use crypto assets providers from other countries, and compilers need to access data in foreign jurisdiction. We know that even getting from domestic sources could be difficult, and what about getting data from exchanges located abroad when if your residents are doing a lot of holdings, keeping them abroad. So we propose that there should be international data collection and sharing should take place. This could be through some international agencies or some international collaboration. That's what we are proposing. So we will go a bit to the next slide to tell you that our proposal is not just in words, and we want to further elaborate on this, telling that whether it is possible, international data collection. Our vision is that to have a kind of crypto holding statistics. Like we say that security by security statistics or something, so crypto holding statistics, can we develop that kind of database by international collaboration? So we are giving the example of Coinbase. When we look at the Coinbase, one of the biggest crypto exchanges and custodians, we see that it is possible. The first step for doing this is that at international level, we have to develop a register of crypto exchanges custodians, then come down to some 10, 15 top exchanges. And looking at the Coinbase example, we can say that these crypto exchanges maintain centralized ledger to track customer holdings and transactions as per KYC, know your customer requirements. So this centralized ledger may facilitate the compilation of aggregate data on crypto asset positions and flows. And regarding the data on holdings, that is positions, you can have opening and closing positions with breakdown by country. This we understand that there is, certainly we will have a very good data on this. So Poland wants to know what are my crypto holdings with the Coinbase can tell. These are the crypto holdings of Polish residents. So I will stop here without going into further details, but there is a net acquisition of crypto assets. That is basically you want to get the transactions data. It may not be very accurate. The point is that there are some difficulties with on-chain transactions. We can talk about this further, but we have elaborated this in our paper. So finally, we also propose some kind of reporting templates and potential data sharing of aggregated data by holders of each country. So let me quickly move to, in the interest of time, to move to future work and way forward. So future work in the sense that international collaboration is important. We are completely emphasizing that. So global forums like AEG and Balance of Payments Committee, they should have crypto assets as a kind of standing agenda item. Certainly we have it as a standing agenda. You will see next slide. Then capacity building with support of international organizations is critical. We need not to say more about this. We all know that that is important. Then as we say that it has to be on the standing agenda, you can see that in the research agenda, BPM 7 and 2025 post research agenda, we have already crypto assets without corresponding liability continues to be on the research agenda. And in addition to that, securities lending, gold loans, and crypto lending is on the research agenda. In addition to that, we have identified some minor issues as part of developing crypto assets compilation guide based on feedback from our members of the advisory expert group and Balance of Payments Committee. These minor issues are like USDC and stablecoin rewards, and sector classification of stablecoin issuers, and treatment of crypto airdrops. And I will not elaborate much, but happy to provide further details. Then what is the future work and way forward? Like crypto assets are increasingly shaping financial activity, no doubt about that, often advancing more rapidly than established statistical frameworks. They are running more faster than us. That is the problem we have to tackle. And they're likely to remain part of the financial landscape, yet their long-term adoption remains uncertain. It is Likely that a limited number of service providers and stablecoin issuers could attain global scale, and in that case, it requires additional considerations for their integration into macroeconomic statistics. It is happening already, but it may further converge. So finally, an effective response requires continued international cooperation, particularly in data collection and sharing. So that is what we are emphasizing. We want to hear more feedback from you. And a final word, as Emmanuel mentioned that this is we are drawing mostly from Crypto Assets Compilation Guide. I would like to inform that we are going to post Crypto Assets Compilation Guide for global consultation around mid-June, getting endorsement from AEG and Bobcom for its posting. And we will be happy to receive your feedback you may have at that point of time as well. Thank you very much. Yeah.
Thank you very much for this very structured overview of the outline of the conceptual frameworks, but also I understood that there is some practical compilation challenges, and actually the next two presentations will concentrate precisely on those. So the next presentation will be by Gustavo Felipe de Sousa from the Central Bank of Brazil on crypto assets in macroeconomic statistics, innovations, data sources, and remaining challenges in Brazil. Gustavo is working for the statistics department in the Central Bank of Brazil, and his work focuses on the production and compilation of economic statistics, particularly related to the external sector. The floor is yours.
Good morning. My name is Gustavo Felipe de Sousa from the Statistics Department at the Central Bank of Brazil. Thank you for the opportunity to share our experience and challenge in integrating crypto assets into the balance of payments. The paper was prepared together with Thiago Vieira and Fernando Lemos. In case of crypto assets, Brazil experience started with traditional sources, but using new approaches. Given the nature of crypto assets, new data reports were necessary to improve the coverage. This new data report is supported by a specific regulatory framework related to the provision of virtual asset service providers. We focus on how we moved from best effort identification to a more structured framework. So, in the agenda, first, the evolution of our compilation process. Second, the regulatory framework. The third, we'll talk about the expected data and its integration with the external sector statistics. And to conclude, the next steps and remaining gaps that we still have. The primary source of BOP compilation is the ITRS reporting system, the ITRS. They're built on FX settlement records. So banks report detailed information, include the identification of resident and the nature of transaction. That's where we first observed measurable cross-border crypto transactions. Over time, we moved through two phases. Phase one, when crypto was not specifically coded and relied heavily on free text fields. And phase two, when we introduced dedicated identifiers and improved classification. So, in phase one, there are no specific ITRS codes for crypto assets. Transactions related to crypto were recorded under broader categories, and identification required reading free text fields description in the FX contracts. So the statistical challenges were separate crypto-related FX settlements from other transactions when they share the same transaction code. Our approach was text-based detection. We searched for token names, platform terms, and market participant names, such as exchanges, in this text field. At that stage, the evidence from those texts indicated that transactions were predominantly crypto assets without corresponding liabilities. The first publication of the Central Bank of Brazil was in August 2021. In phase two, we made two improvements. So in In 2023, regulation introduced specific FX codes for virtual assets, which greatly improved the identification quality. So we no longer rely only on text to flag crypto transactions. Second, in August 2024, after supervisory guidance by the Banco Central do Brasil, financial institutions began indicating the type of crypto asset purchased or sold in the FX contract text field. This enabled an automated process to classify flows into assets with and without corresponding liabilities. Technically, we apply a predefined text pattern standard plus a reference list of crypto assets, and we match identified assets into the domain to maps where a corresponding liability exists. And then we compute totals separately for each group, flagging unknown patterns for further review. My presentation, the version of the presentation, I sent another, but it's not here, but I will talk that the volume of transactions related to crypto assets grew sharply, and especially related to crypto assets with corresponding liability. So, as I told before, in the first moment, we identified a lot of transactions and terms in the text field related to crypto assets without corresponding liabilities. But since we start to have this better information, we saw that the biggest part of the contracts were related to crypto assets with corresponding liability. Comparison data is also available. Brazil Federal Revenue Service publishes information based on mandatory declarations of crypto asset transactions, but it includes domestic and cross-border activity, so it's a broader scope. After normalization for comparison purpose, the both numbers show trends consistent with the ITRS. It's the yellow line, and the blue line is the number of the Tax Authority of Brazil. Even with improved identification from this phase 2, ITRS covers only transactions with FX settlements through the domestic FX market. So the data suggests an accumulation of crypto assets, but those assets are likely being used to pay for imports, services, and other cross-border transactions that may occur without domestic FX settlement, and therefore remain unobserved in the ITRS. So this is partially addressed through the next part. Closing coverage gaps requires extending data collection beyond traditional FX reporting through targeted regulatory reporting. Brazil built a dedicated regulatory framework for virtual assets. The foundation was established in 2022, defining virtual assets and requiring authorization for VASPs, for virtual asset service providers. In 2023, Banco Central do Brasil was designated as the responsible regulator. In 2024, the BCB ran public consultation to gather information from market, and after this first round of consultation, there was another public consultation with the draft text of the regulation proposed. This process culminated in late 2025 with 3 core regulations. One related to authorization procedures, the other related to operational and prudential requirements, and the third related to integration into FX and foreign capital flow framework. So this regulation was designed to serve multiple purposes: monitoring, supervision, and statistics. For external sector statistics, Specifically, the regulatory framework makes 3 reporting streams particularly relevant: international payments and transfer via virtual assets, FDI, direct investment liability transactions, and external debt transactions. So we expect that this data will allow us to observe cross-border transactions settled with crypto assets and map it into the BIP. For international payments and transfers, licensed VASPs must report data monthly by the 5th business day of the following month. The reporting includes, among other fields, transaction date, economic nature code, quite similar to what we have in our traditional fax system, ITRS. If the transaction is an inflow or outflow, the resident identifier, crypto asset type and quantity, and reference value in Brazilian reais, and no resident information. From a BOP compiler perspective, the economic nature code is crucial because it links the crypto transfer to the underlying transactions, services, goods, investments, so that each record can generate the corresponding BOP entries. Another data to be reported to the Central Bank of Brazil is the total of purchase, sales, and exchange of crypto assets referenced in fiat currency. Together with this data provided by the VASPs, the regulatory framework and data collection systems were updated to allow and identify crypto-settled transactions to be reported in systems that support coverage for DI liabilities and external debt operations. In this case, the data is declaratory and reported by the borrower or the DI resident enterprise. So the implementation of this regulatory framework is phased. The regulatory changes entering into force in February 2026 with a transition period. And the reporting related to international payments and transfers becomes mandatory as May of 2026. From a compilation standpoint, the first step is data validation and consistency checks, and to in the second moment, integrate into the regular external sector statistics production process. Brazil is also developing templates to compile the positions of crypto assets. And we are developing these templates aligned with the Data Gaps Initiative 3, Recommendation 11, that talks about the crypto assets. This data that we plan to collect, it's not only for IIP, but it covers also the positions of crypto assets without corresponding liability. So even with this advance, there are a lot of gaps that it's likely to persist. The two main gaps are transactions conducted through self-hosted wallets and transactions carried out through VASPs operating abroad, outside the domestic reporting perimeter. And there is also an ongoing challenge that business models evolve very fast, so compiling methods and reporting often needed to continuous updating. So, thank you very much.
And thanks very much to you. And the next presentation will actually focus on something that you also mentioned as a challenge. The next presentation will be on Germany's approach for the compilation of cross-border transaction in crypto assets. It will be given by Thomas Gruhle from the Deutsche Bundesbank. Tobias, sorry. Now I made the mistake that I promised not to make. So Tobias is an economist statistician in the Deutsche Bundesbank since 2019 and tasked with methodological questions on external statistics with a focus on the topics of financial derivatives and crypto assets. The floor is yours.
Thank you very much for these kind words of introduction, and thank you very much for my co-panelists for these very interesting presentations. At certain points I might refer actually to that, and I'm a bit envious of Brazil because I have a feeling in some ways they're kind of a couple of steps ahead of us, so to speak. My topic today will be to explain to you our approach for approaching the collection of crypto assets as the Bundesbank, as the responsible institution for the compilation of external statistics in Germany. I'm not sure. There we are. So this is a brief overview. What I want to talk about today, especially what I want to focus about, are the challenges that we already have heard about from my co-panelists with respect to the compilation of crypto assets for external statistics, and how we choose to approach this at the Bundesbank with a bit of an assessment of how it is performing so far, and then look a bit into the future. What are the adjustments that we are planning to do? The motivation first, I'm going to be brief because on the one hand, you already heard from my colleagues how important this is, and I think most of us are aware this is an important topic. It is new to the BPM7 because it hasn't been around for long enough to be in the BPM6. It is of interest to policymakers, to researchers, but even the researchers that are already covering these effects of crypto assets on the economy are pointing out that the data gaps exist and that the data collection is kind of still in its infancy in this area. So what are the challenges that we're facing as statistical compilers of external statistics with respect to crypto assets? And there are a number, and I think one of the first things you will usually hear is the anonymity or pseudo-anonymity of crypto assets. So if you look at the Bitcoin blockchain, you can actually observe everything that's happening on a blockchain because there's an alphanumerical code. But what you can't see is actually who's doing it. Because there's no idea who is behind this code, or there's no list or ledger in that case. The next step is, that was also referred to by my colleagues from the IMF, the digitalization. And that is very similar if you approach external statistics compilers to ask these people what is the issue with digital trade and services. That can be done from anywhere. You just need a computer and online connection, and that makes it very hard to basically get a grip on that. And related to this is the high degree of dynamics, and it was mentioned by the IMF and my colleague from Brazil as well, that this is what we sometimes call a moving target. Because the crypto market, the crypto sector is just moving and developing so quickly, and that results in the next challenge, that is that the service providers, but also the products on offering, are very heterogeneous. So you have Bitcoin, but you also have stablecoins. You have stablecoins with the corresponding liabilities. You have even one without. You have crypto ETFs now, and this is very, very quickly developing, and that makes it difficult to track, especially with respect to external statistics, because you need to track something that goes across borders or is with non-residents, but you mostly only have access to the residents in your country. And that was pointed out by the IMF as well, that it is important to also look at the numbers beyond the border. So let's jump into our approach. As you will notice, at certain points during this approach, I will mention that we made certain assumptions, and during the assessment later on in the presentation, I will come back to these assumptions and try to explain how far I think they are performing so far. What we have in Germany in general for the external statistics, what we heavily rely on is a direct reporting system in general. If you buy stocks, if you buy derivatives, if you buy certain services from non-residents, you have to report for the system. With the system, there is a reporting threshold of 50,000 euros that we changed at the beginning of 2025. But otherwise, this is a general reporting system. So yes, households are included. If you're a household or a private person in trade, above this threshold, you have to report this. With non-residents, you have to report this to us. And if you go back to the slide from the colleague of Brazil, like you can imagine this very similar. There's a list of data points that we get from each report. What's the counterpart? There's a reporting code to indicate what kind of asset you're trading. Is it a derivative? Is it a stock? Is it a crypto asset? And so on. And this is the information that we can use then. What we also collect, or what you also have to report, is technically if you trade in a crypto security or if you trade in a crypto derivative, so like a digital version of a conventional asset. You have to report this, but we cannot identify it separately. If you are mining Bitcoin and collect or pay the fees with respect to mining, you have to report this to us as well, but in this case as a service, not as a trade of asset. And what we also said is like to our reporting agents, if you are using Bitcoins or if you're using crypto asset as a medium of payment, for example, if you use USD coin to buy Bitcoin, you actually have to give us both sides of the transaction, which is one of the more difficult parts that we thought would be in there, but like this is our way of solving this. As I have mentioned reporting codes to indicate the assets. So we introduced 4 reporting codes for the crypto assets. Why 4? Well, the first one is the crypto assets that are without a corresponding liability, Bitcoin being the prime example. Then we have crypto assets with a corresponding liability, and due to the structure of the financial account and the IIP, either the corresponding liability can be in Germany, so it can be domestic, or it can be outside of Germany, then it would be a foreign one. And the fourth one is a reporting code specifically for NFTs. What we don't collect currently is any stocks of crypto assets. What we do there is for the IIP, we accumulate the transactions. And there are data quality measures in general in place because this is our general reporting system. So this is the crucial slide, basically. The problem with crypto assets is how do we approach them? How can our reporting agent approach this issue? Is it an external transaction, and what are we dealing with? And this is what we came up with. The upper left part is basically, are we dealing with an external transaction, and who are we dealing with? Ideally, the people know the counterpart. This is then straightforward, and as everything that we do, you know if it's a resident or if it's a non-resident. If it's a non-resident, it's an external transaction. In many cases with crypto assets, you don't know that. Then we tell like our reporting agents, do you know the trading venue? If you don't know the counterpart, but you know the trading venue, rely on the location of the trading venue. And again, if it's resident, it's a domestic transaction. If it's not resident, it's an external transaction. And the last fallback solution, if you don't know anything, assume it's foreign, somewhere but foreign. This is a strong assumption. I will come back to that later on. But like this is the way how to approach if it is an external transaction. Then the second part is to the lower right part of this slide is what are we dealing with? Check first if it's an NFT. If it is an NFT, it should be readily identifiable. If not, we are at the fungible crypto assets. Then check, is there a liability corresponding? If not, it's a non-financial crypto asset, like Bitcoin, for example. If there is a liability corresponding, then check if it's a domestic or foreign one. And that's the second assumption is then, like, if you cannot identify where the liability is kind of located, assume it's a foreign one. So I promised you I will talk about the assumptions again that we made, and let's go through them and see also how far they performed in since we had the system in place since the beginning of 2025. First of all, the accumulation of transactions for positions. This is a strong assumption. Why we did this is, first of all, it's expensive to build up our own system for positions, and we are not sure how relevant this might be, because we're dealing the positions we need for financial crypto assets. And most of them are actually stable coins, so the market valuation changes should be somewhat limited. Exchange rate might be a different thing. And we thought, or like what we're considering, or like what we're looking at is the volume of these financial crypto asset transactions. If they reach a level where we say, okay, this should be relevant for the IIP in Germany compared to the IIP level overall, then we would need to change this transaction. Luckily, or however you look at it, so far this is more of a, compared to the overall IP, less relevant. So we think for now this is fine, but we need to keep that in check. The next assumption is the one where it said, like, if you don't know who you're dealing with, the counterpart or the trading venue, assume it's a foreign transaction. Why we did this? First of all, this should only affect a minor part of the transaction, only those where we don't know the counterpart or the trading venue, or where the reporting agents don't know this. And the alternative would have been to tell the people to assume it's a domestic transaction. We actually had this point with Carlos during the working group meeting at the beginning of the week, is if everyone actually follows the same approach, even if you have a domestic transaction and both think, like, I don't know who the other side is and report it as a foreign, the gross terms will be, flows will be wrong, but the net flows at least will be correct. And what we were actually a bit worried about when we introduced this is that, like, everyone will just make use of it and say, like, oh, I don't want to find out who the other side is, I just assume it's W19. So the indicator that we're looking at is how many transactions do we get with this someone abroad, but we don't know where. And this is where I will start presenting. We'll have a look at the numbers. In red, you see the W19 code reporting. And as you can see, they exist, not in every month, but they're not very strong. And there's no month at all, not for the non-financial crypto assets and not for the financial crypto assets in 2025, where this amount of W19 reporting would have changed the sign of the balance. So this is the non-financial crypto assets, and this is the financial crypto assets, and there the share is even less of the transaction. So for now, we are feeling that the assumption one, that we call it, is working for us. And then let's go to assumption two, is assume that if you cannot identify the counterpart or like the location of the corresponding liability, assume it's a foreign one. Our picture of the German market is that the German market is developing for stable coins and for financial crypto assets, but it's still much less developed than like the markets abroad. So this is something we need to keep in check. We need to be aware of how the German market is developing, but for now we think it's better to have this assumption that it's a foreign liability. And we get the majority of financial crypto assets are actually reported to us as foreign. We also took a look at the institutional sectors that are reporting to us because we were worried that like households don't have any idea about our reporting system, although it's well established in Germany. But interestingly, households and non-financial companies are the one driving the non-financial crypto assets, and the financial companies are driving the financial crypto assets reporting to us, which we find is very interesting, but what we take away is also there's no sector systemically missing from our reporting. The overall results so far, this is the year 2025 that I've shown you, are somewhat promising, but the volume is still very low. Here I have good news in the sense that I just checked the numbers last week before I came here, and while we are in 2025 at the single-digit million level of euros, we are now at a triple-digit million euro level, and also per month. And we also have a grace period ongoing because we changed this reporting law. And until the summer of this year, the reporting agent can still report with the old system. So we hope that this will grow further. And once this is over, we will approach the large reporting agents and see if we can improve this even more. What I also want to point out is that we had no transactions at all of NFTs. And we have a feeling that NFTs are less sort of like in the focus of international markets than they were a couple of years ago. But this would be very interesting if we're the only ones with this point, or like if other countries observe something different there. Yeah, let's give you also an outlook on the future, because we don't think this is finished at all, similar to what the colleague from Brazil told. In the short term, we're waiting for this grace period to run out so that everyone has to switch to this new reporting codes of crypto assets. And this will help us to have hopefully a very good picture of the market in Germany. And the next step will then be in the medium term to approach the large players in Germany and see if we can refine the system even further, can improve the quality, or even switch to a system that fully relies on the large players. that would be something we could do. We want to include or have the possibility to have a DTI, digital transaction identifier code, to be able to identify the system, the specific asset as it's traded. And in the long term, we would like to be able to identify separately the digital version of conventional assets. So let me conclude. As I mentioned, crypto assets, from the point of view of statistical compilers, external statistics compilers, are a moving target, as was pointed out before. And we think this is only a step that we're doing now. This helps us get a picture of the market. But it is very much an iterative process. We established now something, we will see how it is performing, and we will have to make adjustments in the future. We need to have a high degree of adaptability because the market is changing very quickly, and we need to be aware of that. And for countries, I think it's very important to take the conditions in the country into account when you set up a system. Why did we set up a system like this? Because we had a reporting system already in place, and we didn't have the impression that the German crypto market is dominated by one or two larger or like a low number of large key players. So we went with the reporting system. But if in another country it's dominated by some key players in the crypto market, by large crypto asset service providers, the solution might look very different. That's it from my side. Thank you very much for the attention.
Thank you very much to you as well. I'm pretty sure that after these very rich presentations, there is a lot of questions. We have roughly 10 minutes for questions, so I look into the audience. I cannot see much, so I hope the colleagues with the microphone see you. Yeah, there here in the third row, and then there at the back, please.
Shall I start? Thank you. Very interesting presentations. It's a growing, amazing field. Thinking about, excuse me, thinking about the approach, all of you focused on transactions and then building the stocks. Are there alternative ways to start from the stocks? So instead of accumulating, each country will have to undertake a lot of work individually. And if the exchanges issuers are very concentrated in certain countries, can't we not have some kind of reverse engineering trying to find the stocks? I don't want to say that flows are not important, but maybe there's another way of doing it. Thank you.
Thank you very much. Yes, please.
Thank you very much for all the presentations. I would have a question that is not so far away from the first one, and in particular looking at crypto assets without a corresponding liability. At the moment, we envision that they will be recorded in the capital account, but that also has an implication that in external statistics, we will not be able to identify stocks of such items, right? And researchers and users may be very interested in stocks of Bitcoins, for example. So then I wonder, what can we as compilers tell users when they come to us asking for this information? If I may be so bold, maybe can we also start thinking about the possibility of starting reporting stocks in the capital account? Is not something that we have done so far, but maybe it's something that we could eventually consider, as revolutionary as this idea might sound, or whether we should actually advise users to go to other statistical domain to get this data. And the second question that I would have in a way is, you know, all these assets have been around for quite some time now, and it is only couple of 1 decade or even more than 1 decade later that we really are putting the standards in. I think there's obviously good reasons for this, but at the same time, I think we need to somehow prepare for the future and try to see how can we become more agile in including new asset types in our statistical standards. Because ultimately, I feel like for crypto assets, we're a little bit behind the curve in including them in official statistics. Thank you very much.
Thank you. I think we have there in the third row, yes.
Thank you very much. I have a question to Mr. Tobias Grue regarding direct reporting system for transactions. So you mentioned the threshold of 50,000 euro, and I'm wondering, this threshold is, does it apply strictly to crypto or to all forms of investments, FDI portfolio and so on? And is it unique across the countries or does it vary?
Thank you. And we have one more there in the back, I think. Yes.
Good morning. Thank you for very interesting presentations on this growing topic. So as I understand, traditional BOP and international statistics are mainly based on direct reporting. However, we experience more and more decentralized finance, DeFi, and it allows users to transfer trade, land, crypto assets through blockchain itself. So isn't some problem to some extent when compiling balance? Thank you.
Thank you very much. I think for the time being, we had one very concrete to Tobias, and maybe we start in reverse order, but I think it's very interesting to hear the views of all to the other questions that were raised. So Tobias, we start with you.
So is this working? Can you hear me? Okay. Yeah, we'll try to keep the order of questions how they arrived. In general, yes. Obviously, it would be like it would be if you have a complete picture of the position of the stocks. You could do, and with the valuation changes as well, you could derive transactions there. That's true. But as pointed out, especially for the non-financial ones, stocks are not a part of external statistics because they're in a capital account. And this is the reason why we went with transactions. With respect of the question, if we could add stocks of the capital account, I think at the very least this should be a topic that should be discussed with the other statistical domains, because if we would just, and I'm not necessarily recommending this, if we would just go on and start reporting stocks of capital account as the external statistics, might be that the national accountants would feel that we like treating on their ground. The question about quicker adjustment, I can relate to that very well, and this issue. And I maybe want to refer to what the keynote speech yesterday mentioned, that we need to maybe have a different approach for these updates of the manuals, and maybe make this more dynamic overall, more agile, I think was the word mentioned as well. The other two questions, the threshold is in general for the reporting system. It's in no matter what you're buying, derivatives, stocks, crypto assets, is always these 50,000 euros. It has been lower for like several decades, and we changed it in the beginning of 2025. So it varies like when we choose to adjust it, but it's in place in general for all types of transactions. And the problem with decentralized finance, yeah, I understand it very well. This is one of the advantages of the current system. Even if you're like not trading on a trading venue, even if you're like just put it on a USB stick, the wallet, and send it by mail, you would have to report this according to our system currently. If you do, is another question, but like you would have to report this in the system. So this is also one of the reasons why we went with the system. But it's decentralized finance and all these other issues. This is one of the many challenges that we face as external statistics compilers.
Thank you, Tobias. Gustavo?
Well, in Brazil, the decision to capture the flows, it was made through alignment between the different areas that participated in the regulatory framework. And in this first moment was the priority. So in the second moment, we also want to keep the position.
Thank you. And last but not least, the IMF colleagues, so Venkat and Emmanuel.
Yeah.
Please lose the mic for this screening.
Yeah. Thank you. Thank you for questions. I should have expected another 10 minutes to answer more questions, but let me answer the first one. It is about stocks. Yes, always the way we said in our presentation, you might have seen that Stock data, still we consider that it will provide the best quality. We have to start with stocks, then going to flows. That is the best way of doing the things, and we completely agree with you. That is the reason that we are putting a proposal that we have to go to biggest actors in the crypto assets ecosystem, and we have to collect the stocks data, and then come to flows. And you might have seen that I said that regarding the data on flows, there are some issues in the sense that we have on-chain transactions and off-chain transactions. If I go to Coinbase, if I ask them stocks, they will provide, in our assessment, they provide very good quality data. I think that it is 99.95% is completely accurate stocks data, because they already provide that kind of information to several countries as part of their transparency reporting under anti-money laundering provisions. Suppose Switzerland can go to Coinbase telling that, can you provide holdings by my residents? So they will provide it. That's what they tell on their website. Clearly they tell it, and so they provide stock data is good. So now come to flows, on-chain transactions. The problem is, suppose somebody from Coinbase is transacting with somebody is having their account on Binance. Then this KYC information is missing for the counterpart of this transaction. So exactly we don't know with whom he is doing, whether it is with resident or non-resident. So that problem is there. So start with stocks. Completely agree. Probably we need to have agreement on that among all of us as well. And then second question is, I will answer one question, then Emmanuel will take the other one, is about, you were telling that crypto assets were there for quite some time, and it took us for some time to come to develop standards, and we need to have agile systems of statistical standards. You hit on the right point. We are discussing at IMF in the sense that through advisory committee on national accounts and balance of payments committee, IMF has this idea. Then obviously these are discussed with our committees, AEG and BOBCOM, that is called maintaining and updating statistical standards in future. How to do that? And this is the precise point. So idea is that whenever something comes up, this kind of new phenomena, shall we wait all the 10 years to develop that and then implement into statistical standards? Otherwise, we need to do it when it happens and after some time when you can implement it. It is there. Probably you can go to AEG website and Balance of Payments Committee website. This was discussed in the last 2 years in the meetings, and we are continue to work on that. So that is something you said the right things, and that is happening already. Probably let us see how it will take shape in the future. So Emmanuel, probably you want to take the other one.
Well, thank you very much for the questions. When it comes to, for example, for the stocks, so yes, for non-produced non-financial assets, they are not going to be included in the IIP. However, it has to be included, by your counterparts, in the system of national accounts. So, if you really need to get the stock data, I guess the best avenue is now to collaborate and cooperate with, the real sector, national accountants, because they should not only, collect, the stocks for the domestic sector, but also, vis-a-vis the rest of the world. So I think, if you're able to build a bridge, with the national accountants, that will hopefully, provide you the information that you need, for your users. So my point here is that, we need to have some increased collaboration between both, the balance of payments, and the national accounts. And I think, if you build that bridge, hopefully together you'll be able to, at least get the data that, you think you need. And just maybe quickly on the point where it comes, yes, I definitely agree that, we need to be able to be a little bit more agile, and we need to be able to produce the statistics, much quicker than we had before. But just, maybe, looking back, if we go back, from, the SNA 1968, or the BPM-4 onwards, you can see that progressively, we're making better and better progress, especially when it comes, to the financial sector and financial transactions. So I'm not saying that, our work is complete, but I think, if you look at, the evolution of the manuals, from 68 all the way, to 2025, we're making better headway, especially when it comes to, the financial sector, financial transactions, and financial instruments. Not that I'm saying that, the job is done. We still need, to work, to be able to produce, timely, reliable, data, for policy analysis. And that's going to take, a big effort because, the thing is that, it will be very difficult, or one of the challenges is how we're going to be able to implement, those changes, in a way that are basically be harmonized amongst all countries. And I'll just stop at that.
Thank you very much to all of you. I think it was said several times, we are discussing this since quite a while, and it was very ambitious to plan to cover it in 1 hour in an early morning session. So I think it's fair to say that we have seen a very interesting and very rich session, and we still have the rest of the day to pick up on the topics individually in the breaks. For now, I thank very much the presenters here on the stage for their insights, and I hope that the audience joins me in giving you a warm applause for that presentation. Thank you.
Okay. Perfect. I think you can take a seat. Okay, thank you very much, everyone, for interrupting the talk. I see it's a very interesting conversation you're having now, but unfortunately we're running a little bit light behind the schedule, so we need to go a little bit under tight constraints. So this will be a special session today, special because first we'll be talking about statistics in action. And we had a lot of reflection in the previous sessions, but one point which is also important is how do we make sure that our statistics reach the targeted audiences? So we will be talking about acting with communication. And that's precisely what Raphael on my left-hand side, Raphael Voss, you are a journalist. I think you don't need the introduction because yesterday you already chaired the high-level panel, but you are editor-in-chief as well in the Tygodnik Solidarność, if my Polish is correct. And you comment on economic and financial news as well. And you'll deliver a 10-minute talk on communication and statistics. So the floor is yours. Thank you.
So I will use the stage here. Hello again. Communicating with diverse audience. This requires some collaboration with the media people, so that's why I'm here and I try to give my take on this. Media people, as you know, is a very diverse group. It consists of reporters, media workers, commentators, influencers, podcasters, and they are working both full-time, part-time. But for this talk, for this take, I would treat them as a whole, right? As a media people, as a huge group of media people. But think of them as a media persons. My main take here would be: don't be afraid of media people. Don't underestimate media people. Because media people are people, like yourself, even if they look or behave differently than you. You shouldn't be afraid of media people because you have very lot in common. There is a common history, for example, of both professions. Both professions, my profession and your profession, can be traced back to the early 18th century England. As you all know, 1694, after Jacob Stuart has been overthrown and replaced by William of Oran, the Bank of England was established. And this is the very first central bank, and you are the direct descendants of that late 17th, early 18th century English history. And we, media people, can be traced back to the very same place as well, because England back then was a place where media was born. The reporters has been sent to the docks, to the courts, to the City of London, to Westminster, to gather informations and print it in the printed paper newspapers. And we media people right now are the descendants, the direct descendants of that. But this is not the only similarity. Your work and the work of media people might seem different, but in reality, the goals are similar. The ultimate goal is, in both cases, to find some structure and sense in the overwhelming chaos. It is to find a pattern and to show it to the others. But don't be misled by the popular perception of journalism. Journalists are not the people who are, waiting for Princess Diana and Dodi Al-Fayed coming out from the hotel to make a photo and sell it to the press. That's not what most journalists do. In reality, media people, they aren't less smart than you, they aren't less educated than you, they aren't less sensible than you, they aren't less honest or less integral than you. The difference is that they need, in their job and what they do, they need to find the shortest possible way from A to B. And this might look for a lot of you as a kind of the shortcut, and it might be a shortcut, but sometimes they're right. There is an easier, better, bolder way to explain something, some phenomenon, some statistical, economical, or whatsoever phenomenon. And media just do precisely this. Media people are a bit different from you because their professional environment is different than yours. The institutions where they work are more horizontal. Usually they don't need to decades to climb through the stairs in the hierarchy. You may find a lot of relatively young people in the media profession with quite big influence and quite big experience. It doesn't mean that they don't have this experience, that they don't understand what you are doing. This is simply different. And precisely because of this different environment that they are working in, you can have this tendency among media people that they can tend to take this cut the bullshit, let's go straight to the point attitude. It's not because they are stupid or not because they don't understand or not because they are not aware that reality is complicated and there are all shades of gray. They do know. It's not so complicated. Everybody knows that the world is complicated, but simply their task is to simplify. Never ever, if I may give you this piece of advice, never ever treat media people like mere communication experts. They are much more than that. Media people are not this, smart geeks who will show you the latest hip way of presenting your wonderful data. They are not those people who know the latest app. They are much more, and please accept it, because if you don't, you will just disrespect them. So, to conclude, I repeat my main take to you again. Do not underestimate media people. Try to like them, try to respect them, try to build some personal ties with them, and they will give you the same back as a reciprocity, because they are, most of them, humans. In the sense, but let me conclude with another piece of advice. At the same time, do not overestimate media people, because they are only humans, just like you. Thank you.
Thank you very much, Rafał, for this interesting talk. Indeed, as you said, I think we like very much journalists, so this is why we are pleased to have you here in this panel, and we like as well to connect diverse audiences. So journalists are part, of course, of this audience. We'll also have students later on in this session. So I think the message is quite clear here. And as you say, you do a wonderful job as well to make sense of the overall noise that we have around, and help us as well to pick the right signal, not just to inform better our policies, but also to inform better what we should collect and produce as statistics. And one point, perhaps, if I may react, you said, we should like you as well because you're human. You're very right. We are perhaps going towards a system of information which is increasingly intermediated by machines now with AI. So perhaps, going back to your foundational aspect of journalism might be also something really interesting to look forward. So that being said, I will look now at my right-hand side and with you, actually, Sultania from Sultania Bosheva Terzizan. I hope I'm pronouncing correct your name. You are from the National Bank of the Republic of North Macedonia, and we're very, very pleased to have you on the stage. You are serving as executive director responsible for many areas, monetary policy, research, and statistics at the central banks. And you will have a brief talk on user and reporters in focus, key findings from the latest satisfaction surveys on external statistics at your central banks. The floor is yours. Thank you.
Thank you so much. I really enjoyed the conference, and thank you so much for the organizers for having us today here. I believe that this conference and this platform creates synergy between users and reporters, and it is a rare one where we can meet and we can share our views. So today I'm going to talk about some results from our survey that we conduct for a third time in a row, and it is regarding the users and reporters and their satisfaction with what the statistics department is doing, so focus on the journalists as well. Let me just see how to change this. Okay, very easy. So what's the aim of the things that we're doing? Of course, we want to evaluate the satisfaction of users and reporters, and why we do that. Because this is a basis for us for improving the quality, relevance, and usability of official statistics. And these words you have heard yesterday, I'm going to repeat today because I believe that they are quite important. Quality and relevance, especially today, in today's world, when we are bombarded and there's a huge data proliferation. And I think, if possible, statistics and official statistic and its role is becoming even more crucial today, if that's possible, than before. And let me illustrate you why. I have looked for some estimates on our exposure to data, and what I could find online with the latest estimations were that an average person is being bombarded with 100,000 words per day, which means 200 to 300 printed pages. Then we are at least 4.5 hours online exposed, at least, to video and images, and also to 100 gigabytes per day of sensory equivalent data. So being exposed to all this kind of information, for us it's important, and especially as policymakers, to get this information to be of high quality and to be relevant. And this is why I think that statistics and official statistics is gaining even more relevance in this world that we live in. And of course, we want to reach, this also highlights another point, that we need to search for the best communication channels in order to send a message or to convey the message to the public. Because, as we all know, our data have value only if they're used. And the users are very different. They can be from researchers, but they can also be some common people. So this is why we try to always improve our communication channels. And I will give a brief overview of the key survey findings on data access, communication, and experiences of the users from one side. But then, as we are the bridge between the users and the reporters, even in our own bank, in my central bank, then we also need to know what the reporting burden is. And we have to know the experiences also with data submissions, with application tools, reporting forms and deadlines, because as the users' needs increase constantly, then the burden to the reporters also exponentially increase. And of course, for us, external statistics, I will try to put a focus on external statistics, is quite important as we are a small and open economy. And for us, these statistics has a strong policy relevance, and it has some methodological complexity. So it's, for us, it's important to see whether the users understand what we want to say and what our data are saying. And finally, why this is important for policy making, it is because this further strengthening of communication practices and our dissemination tools are key to ensure that that statistics effectively supports informed decision making, and we are more transparent, and thus we are continuously increasing trust and public confidence. So let me start with the user satisfaction survey, the design. We have 30 questions. Of course, we are not the only one that do this. Many institutions do it, from Eurostat, many national statistical offices, and also central banks. In our case, this is, let's say, survey that has been designed for our purposes. So it derives from the main ideas of all the others, let's say, of Eurostat surveys, but it doesn't have the same questions. It's tailored to our needs. The last round was conducted last year in September, and it includes different set of user groups, such as individuals, business entities, public administration, students, researchers, media, international organizations, and others. How we do it, we have questions that and satisfaction is assessed on a scale from 1 to 5, and in order to have consistency, so majority of the questions are the same in order to obtain consistency with the previous rounds that we have conducted in 2013 and 2021. However, we calculate average numbers, but we also have some open-ended questions where they can provide us with comments and suggestions. And also each survey round has some specific topic that is dealt within. And let me start with some, let's say, key findings from the user satisfaction survey. The first thing that we ask is if are the questions related to our website and our Nubestat, this is the main dissemination portal that we use, are they efficient and can they easily find the statistical information that they need? And the findings are that this dissemination portal is highly useful, the effectiveness also has improved, and this is evidenced by the higher share of users who consistently find the required information compared to the previous survey, which is presented on the left chart. And then with respect to external statistics, that is in red, the needs and the data presentations are also high, having in mind that 80% of the respondents state that they always and often find the data without any difficulty. Then when we ask if the information that they find on the website is useful and if it meets their requirements, the information also we get quite positive results, and the respondent says that we largely meet the user needs and that the average satisfaction rating amounts to 4, representing a slight increase to the previous survey rounds. And also the users are very satisfied with the quality of the website, or 81% of the respondents said that. The average rating is 4. When we ask how often, because for us it's also important how often statistics is used, and for which statistical areas do they mostly often use this data, the frequency shows that 62% of users use the data on daily to monthly level. And you cannot see it here, but if you dive into the question, we infer that they use it for analytical and research purposes, as well as for business and planning activities, which for us also was quite important. And on the right side, then you can see that external statistics is used less frequently, that the monetary statistics and interest rate statistics have been used most frequently. And we believe that this is because of how the statistics are released. External statistics is, as you know, with the exception of the foreign reserves, that is published monthly, it's published quarterly, so probably most of the users focus and use these statistics on a quarterly level, so less than the monetary and interest, which are reported on a monthly basis. When we publish the data, we also publish one small press release in which we try to explain at least let's say the basic trends that we see in the data. So for us, it was very also important whether these press releases contain quality information that will help to the users, and this is why we asked this question, whether they help them in the interpretation, and yes, the answer was that they really contribute to the interpretation, and we are getting a little bit better than before, so the average rate is 4.1. Also users demonstrate high level of satisfaction with the quality of the published data. The average satisfaction here is 4.2, and external statistics, because I said I will focus whenever possible on external statistics survey results, they also rate high when it comes to interpretation of the data and the analysis of the trends in BOP, external debt. Then for us, we try to be very open with our users, and we are very transparent. So we have designed several forms on how we communicate and interact with the users. One of them is being that we dedicated a special email address which is called Contact Statistica, and this special dedicated email address, anyone can write to us and ask data, and believe me, they really use it. They even ask us for data that we don't produce. So and this actually helped in the communication through time, because now the questions that we receive through this email address or direct contact is being lowering, which we interpreted as a positive sign. That means that the data and the methodological notes are presented in adequate ways and there are less questions. However, we are also interested in the fact that when the users ask a specific methodological question, how fast do we react to that? And as you can see, around 60% receive a response by the following day. And this is quite fast. My colleagues really put a lot of effort in this, and this actually shows the prompt and user-oriented approach by our statistics department. And finally, one of the most important questions that we also ask is what are the areas that they think that need the greatest improvement. And the latest survey, first, a positive thing also that we saw, it was that the need for improvement also has declined. However, there are still needs for improvement, and we tend to focus a lot on these possible gaps and design some other products or try to approach the users in their specific way. So what do they want? Of course, the first thing is the extension of time series and expansion of scope of data that is on our website, provision of more detailed methodological explanation, but with simplified analytical terminology. And this is a question, or this is a requirement that comes mainly from journalists. And then that we try to tackle by organizing a lot of seminars for journalists, just for going on the website, and also from methodological point of view, for presenting certain statistics and certain concepts to them. And of course, the researchers, they also want improved access to more granular data for scientific and research purposes. So I go forward now to the reporter satisfaction survey. For us, this is quite important because we have a huge reporters base. This survey consists of 30 questions, and the procedure is more or less the same, how they grade and the satisfaction. The main objective of this survey was to assess the performance of the National Bank as a producer and to obtain feedback from the respondents on possible improvements in the reporting process, because as the user needs increase and the needs and the requirements from statistical institutions and international statistical institutions, the burden on the reporters is also, as I mentioned, increasing quite a lot. So first we ask what kind of data types they report to the National Bank, and as you can see, the bulk of it, or 88% of it, it's reporters that report for external sector statistics. And majority of them report, I don't know, trade credit data or FDI source data, and we have a very diverse and granular loan-by-loan data source that we use in BOP. So external statistics and the reporters are quite important for us. We ask if the electronic applications are easy to use, and the majority says that yes, they are quite easy to use. The average score is 4.2 and a little bit increased. And about the submission deadlines, they also, most of them, or 88% of them, say that the data submissions are accessed as always or mostly appropriate, and compared to 2021, an increase is observed in these two response categories. But we still struggle with some reports. I don't know, with the report for the I don't know, capital for FDI, they always complain it's very fast, or about security statistics, they also complain about the complexity and the deadlines. So there are silver linings or things that can be further, let's say, improved. Then we asked how do they know how to fill out the forms that are required for statistical purposes, and they say that most of them gather this information from the employees or from the website, where we have a special part devoted only for reporting. And for us it was very interesting to ask them, do they know their data, where do they go, into which statistics, how this data is fed, and where they can see their input. And to be honest, an equal proportion of reporting entities are and are not familiar, as you can see on the pie, with where their data go to. So we, in the past, we tried to invite them to explain the data. It was not a very successful practice. There was not a lot of, let's say, interest from the companies. They're usually very busy, but I think that we will do some further efforts in order for them to understand how their data feed into statistical outputs and maybe just how they can use their own data. Then, as I mentioned, as we're very open and we pay quite a lot of attention to the communication, and we asked how the reporting agents are satisfied in the communication with our employees. And here I must say we have the best grades because the average score is around 4.5. My colleagues are really responsive and they really try to, I mean, we share the same goal of having high quality data, so whenever possible we even solve their reporting problems. We always communicate with them as we are a small country, as I said. So yes, we have very good communication, and when they approach us and when they have a question, what you can see is that there is an increased share of giving an information on, or answer for reporting in the same day. So I think this is one of the things that we should be proud of. And finally, what are the areas where they think that we should improve more? And these areas are in simplifying software solutions for electronic reporting first, and then followed by the forms and content of reporting templates, as well as the decision and instructions for statistical reporting. And in this, following this, we have undertaken quite of a wide-scale digitalization projects in many areas in which we really try to do that. First, to make it electronically, and then to make it as simple as possible. But we cannot do in all areas like that. At least we try to streamline where we can. So to conclude, the evidence or the results from these surveys, they provide strong evidence that for a consistently high and gradually improving level of satisfaction among both users and reporting entities, and confirm the effectiveness of our approach to statistical dissemination and data collection. But this doesn't put us at ease, but we look for any other room for improvement. And what I want to point out is that the finding from both surveys demonstrates that statistical quality is not limited to compilation accuracy alone. We statisticians have to think about this also from time to time, but also it can be shaped by communication, usability, and of course institutional interaction. The key improvements needed in the users field: more granular data, longer time series, clear metadata, and better tools. While the reporting process has been assessed like effective, but it requires further simplification, digitalization, and clear guidance, and maybe even division by user groups. This is one of the things that we are also going to do, how we approach through different communication channels and different complexity group by group, because researchers, for example, want one thing, journalists want another. And this is why we think that this feedback mechanism that has been established by regular satisfaction surveys proves to be a valuable instrument for us for identifying gaps, to prioritize our improvements, and to strengthen the trust between us, the National Bank, data users, and reporting entities. Thank you so much for your attention.
Thank you, Sultania. And without further ado, I will leave the floor now to George. George Diaz, you are head of the external statistics section at the ECB, and you will be actually talking about making communication of external statistics click. So it's a really interesting title. The floor is yours. Thank you.
Thank you so much, and good morning, everybody. I would like to start with a couple of questions to you. How many of you produce a statistical release? Would you please raise your hand? And how many of you have read a statistical release in the last 3 months? Okay, so I think we are in the right place to discuss about statistical releases and how important it is to structure statistical releases to reach a diverse audience, as already mentioned in the previous speakers. Now, so my name is Jorge Dias. I'm head of external statistics section at the ECB, and this talk is co-authored with my colleagues Raluca, Rocco, and Jurek. And you don't see it here, but there is a disclaimer. Of course, whatever we say here is from the authors. That doesn't mean that it's fully backed by the ECB. So this is still an ongoing research that we are doing. Then for the outline today, I would like to go through a bit of a motivation and literature review on statistical releases, because that might be very important for us to structure statistical releases going forward. And I would like to share with you some initial experiments that we have been doing in external statistics in relation to statistical communication. And I would like to show you in action 4 shifts that we propose, or 4 transformations that we propose to the current statistical release that we are doing. And finally discuss with you the challenges that are still ahead in that regard, and some concluding remarks. So statistical release play a very important social role, that is to inform the public of social and economic phenomena. However, statistical release come from a long tradition of being very one-size-fits-all and using a highly dense technical language that mainly targets specialists and market participants. And therefore, we have also seen a huge evolution in the communication, that nowadays we have so many channels to communicate. And this means that the statistical releases are reaching a more diverse and wider public than in previous times, which means that we are reaching a public with very diverse literacy and very diverse information needs for what they are looking for. So overall, this raises the expectations about official statistics communication, because we have to be more have more clarity in what we communicate, and we also have to be more transparent on what we release. And doing so, it's important for official statistics that we would like to reach every citizen, if possible, of course. And this is the importance of public good that it is for official statistics, that we need to reach out for the citizens that look actively for the information. So I would like also to share with you very quickly a bit of a story, a brief history of statistical releases communication, because I want to highlight 2 patterns from this slide. The first one is that the reach of the statistical releases has increased dramatically over the decades. In the 19th century, the official statistics were mainly just for official records, and just very few people would look at them. However, nowadays we reach to a much more higher audience, and we also have a new kind of development recently, that is the artificial intelligence that is also downloading and consuming these statistical press releases. The other pattern that we have witnessed is that the communication tools that we have used have changed very much. So in the past, there were mostly books with printed tables, and nowadays we have now very rich visuals with lots of interactivity, and this is also changing the way we can communicate with the public. There is no doubt that we are producing much more statistics than in the past, but here the key question is not to produce more, is actually how we structure the communication in a better way to reach the public. So let me just quickly also go through the literature review that we used in order to inspire us, in order to what kind of changes do we need to do to achieve what we want to, that is to have an inclusivity on the statistical releases. First, it's very clear that highly dense technical texts really do not achieve the main goal of communication, except for a very specific group of users. And this is because when we are writing too much and we want to be very detailed about what we are producing, can overload the human capacity very quickly to synthesize what is in the data. So this has been proved by experiments on cognitive science that this way of communicating can lead very quickly to disengagement, and this is not what we want. We want to have users to come and read our statistical releases. Another research that shows that showing the data alone is also not sufficient. We need to bring some context about the data that is being released. Otherwise, this can lead again to not knowing exactly what a figure means, and therefore can be a bit frustrating for the users if they find a number that they cannot make context out of it. The third point is that normally we have the tendency to write statistical release in the high standard, that with a high literacy need to understand it, and sometimes we even write in a way that only people with an economics degree can understand. So this is also something that we need to address because, as mentioned, we have a very diverse readers of the press release. So we need to understand that we need to vary our communication so that we are able to understand that the perceived communication is what we wanted to communicate. Because this is the other point mentioned in the literature, that sometimes we think that we are communicating in a way, but in actual terms, the reader interprets completely different the data. Okay, so these are, let's say, the no's, but then the literature also offers the yes, and what can we do about it? So we took a look, and then at least 3 avenues from the literature that we can use. That is, first, progressive disclosure. And this is a simple technique to drive the information in stages and not in one go. And we start with simple, but then we add detail if the user wants to continue the exploration. Then second is the narrative, and this links again to the context. So it's important to create a narrative that explains the context of the data and again allows the user to go deeper if he or she wants to. And finally, it's important to design the statistical communication with the various groups of users so that we are inclusive, and again, to use multiple channels, diverse channels, to target different user groups. Now, I would like to show you what we have now been thinking about, these 4 main shifts. And again, this is something that we are experimenting. It's not yet finished, this work. And we hope with this work that stimulates somehow a discussion about communication of official statistics. The 4 shifts are, first is the choose my level. So this is a very simple technique to create immediately various target groups, and the person that is reading can select how much deep they want to look at the information. So we are structuring the information in various degrees of complexity in the same press release. Then second is linking the statistics to everyday concerns. So this is what we call the relatable front page. Third, we call it storytelling or scrollytelling. That is there is a narrative embedded in the press release, but we give the control to the user when scrolling down whether they want to know more about the story. And this creates engagement. And then the 4th shift is about artificial intelligence, because artificial intelligence is now a new data consumer, and we need to provide precision on the statistical release when artificial intelligence downloads the data. Let me start first with the choose my level. Now, this you'll see here is the video. This is the current prototype that we have been working, and I will try to explain you what's going on. So you need to visualize that this is a web page with a statistical communication. And the first thing that you'll see there is this choose my level, which provides exactly the possibility for the user to select what is the level they want to go about the communication. And you'll see that as soon as the user opens the statistical release, there will be 3 buttons. One called overview, that is very, very, very sharp on the communication and plain language. Then a detailed button that explains a bit more, still in non-technical terms. And then there will be a button technical that would be full of the nice words that we use in the statistical dictionaries and these kind of things. So, and this is available, these 3 levels are always available to the user to change along the scrolling. Then the second point is relatable front page. When the user lands to and opens the statistical release, it will be presented with the key highlights of that release. So very quick, the user will know what happened, why should I care, and also we introduce relative units that relate to everyday aspects of life. So we present data as per capita or in relation to incomes that puts into perspective the information that we are releasing. So the third is the scroll and tell experience, and here it's about the flow of the information released to the user. And the user will start scrolling and so we have a narrative. We have prepared a author-driven narrative that logically presents what is happening in the external statistics in a coherent manner. And the user can then scroll down. So on the left-hand side, we normally have the text, where, again, it's always possible to define what level the user wants. And when clicking in the different levels, more information will come. And on the right-hand side, we'll have always an info board that has some interactivity for the user. It's limited interactivity, but it's enough interactivity to engage the user to explore the data. And in particular, we also include tooltips. So if there is a term that is a bit more difficult to understand, the user can go and look what that term means exactly. So the fourth shift is about native AI access, and here it's we noticed that artificial intelligence is downloading our statistical releases, and right now it's done mainly by web scraping technologies, which of course is very prone to errors. And in order to increase the precision of the interpretation by the AI, so the machines, we need to provide metadata and also the accesses to the data through the REST API protocol, and also these protocols in terms of JSON files that are very structured and allow the AI to consume the data in a more precise manner. And this is done embedded in the same press release. We don't need to have another format. For a human to enter in the press release, he or she will see the regular press release, but the machine, when entering the link, it will detect there is a machine-readable formats, and it will download those, and it will, with the metadata that we provide, it will allow to combine the information in a precise manner. And this is a very essential point, because if the official statistics do not do this work, then we will have then market participants and automatic aggregators doing it, and then of course we lose a bit our role in providing public, transparent, and very clear official statistics to the public. Now, the challenges. In doing this work, of course, we have some challenges that we need to face, and one of them is this point that I mentioned to you, perception versus actually the actual comprehension. And for that, we will not assume that what we have structured really is hitting the marks. So for that, we need to engage with the various diverse groups of users and understand whether the message is really passing. Second, there is this structural trap that there's always a trade-off between completeness and comprehension. We tend normally to write a lot about our work, about our statistics, but this also has the problem that excludes people, especially the non-specialists. So therefore, the solution is the tiering, having to choose my level, but here what we need to do is to understand exactly how to configure this choose my level, because there are different levels that we can work with. And finally, this point on the inclusiveness, we need to reach out, and this is again, it's I guess a duty from official statistics to reach as much as possible to our public. And the multi-channel delivery is key here, and it will help a lot. Then the third challenge is what it's called dumbing down objection, because we are introducing a narrative. We are the authors, and we are introducing an author-driven story behind. And we need to be very careful there, because we can frame the information in a way that can lead to a certain interpretation. And here, the main point is that independent official statistics should remain factual and should reframe to have a certain type of interpretations. But at the same time, to provide the full data set access to experts to increase the transparency, the trust on the work that we are doing, because then experts can replicate the results, can look at the data from their own perspectives. So this brings me to the end, and I just wanted to conclude basically saying that the message that I've been saying during this presentation, external statistics, it's a public good, and we should make an effort to make it accessible to everyone, and not exclude a priori some groups of the population. And we have introduced 4 main shifts for an improved communication of statistical releases. These are choose my level structure, relatable front page, scroll and tell narrative, and AI native access. And all this has been grounded in research. So we are not here, we are using what research and empirical evidence shows that works in order to progress in that respect. Saying this, I hope that then at some point in time when any citizen will read a statistical release on external statistics, they will not be indifferent and they don't find confusing, but yes, they will say, yes, now I get it, and they will understand what's going on. Thank you so much.
Thank you, George, and congratulations for this work. And by the way, I would also remind that the audience that the ECB is very active on LinkedIn. There is some, I think, post circulating in the room on the ECB data page, so feel free to subscribe there. I'm afraid that in the interest of time, we might need to skip the Q&A session just to give actually the possibility to also the other speakers to intervene. So I hope my panelists here will apologize myself to do this. So please join me again to applaud them, and then we will welcome the data challenge participants. So I would now call actually the ESC Data Challenge winning team. So Vaibhav Kapri, Parkshit Sharma, Kushan Kapoor from the University of Limerick to join me on stage, along with as well. Perfect. So please take a seat. And I would also like to call on stage the second winning team on the best project with a focus on the Polish economy, Levente Faludi Ozak, Andreas Manolopoulos, and Mao Railo from Bocconi University. Please join us. So perhaps a few words before we go to the end of the prize. On the ESC Data Challenge, it was the first edition of this data challenge open to students in European University, and we have here the winning teams. We had 42 students around Europe that have been actually competing for this challenge, so congratulations again, because it was very competitive actually to be here. 11 university and 16 teams competed. And the task was actually deceptively simple, I must say. It was actually to do a dashboard, a chart, so interactive dynamic visualization on external statistics by using the indeed ECB data portal statistics and also the statistics that we release on the BIS data portal. So again, my warm congratulations to the winning teams. I'd like as well to thank the ECB colleagues that also supported this initiative, Fausto Pastoris, Chiara Tori, and Justin Michalausku, that indeed make this possible as well. So I will now hand over the floor to Jacek first. Actually, no, George first. You will actually hand over the prize to the first winning team. Again, Vaibhav Kapri, Parkshit Sharma, Kushan Kapoor from the University of Limerick. Please.
Yes, so it's my pleasure to award one of the prizes of the two winning teams to this data challenge, and this is for the Vali, Parikshit, and Kusan. Very difficult to pronounce your names, but you are from the University of Limerick, from Ireland, and let me say a few words why you got this prize. And so your project was about evolution of global trade and supply chains trends, reshoring, decoupling, and trade restrictions. What stood out in your work was the timely analysis of how global trade relationships are changing, especially now around major shocks like the US-China tensions after 2018 and the sanctions era after 2022. a very impressive part of your contribution was the visualization work. And you use very clear interactive dashboards that transformed very complex trade data into very accessible insights. So congratulations for that. That's not an easy task to do. Therefore, the combination of this rigorous analysis and policy relevance of the theme that you chose and the effective visual communication made your project really to stand out. And I would like now that you join me in congratulating you for the winning prize.
Wonderful. Thank you very much. So now to the next team, actually, from Bocconi University. The floor is yours, Jacek.
Thank you, ladies and gentlemen. It's my great pleasure to present the winners of the Narodowy Bank Polski Special Prize for the best project with the focus of the Polish economy. We are very pleased to see young researchers showing the result of their work in the very clear and engaging way. Their work marks the important economic issues easier to understand and to understand for the wider public. What we like the most is not only the sound economic story behind the figures, which was presented by the young researchers, but also the wide use of the different tools and different type of visualizations to provide the result. So let me once more name the participants: Laurent Fauldi Orash, Andreas Manolopoulos and Mea Raulo, for the Bocconi University, the authors of the presentation entitled Impact of the Russia Invasion in Ukraine in an analysis of the Poland's macroeconomic situations. Congratulations.
Thank you very much. Amazing. So now you might wonder what they did to have this prize, indeed. So, and you have the most difficult, I think, task of the overall conference is to summarize everything in 5 minutes. No, we'll make a concession to 7, but with the apologies to being a little bit late. So we will start with the Universities of Limerick presentation first. It will be an interactive, indeed, presentation. So the floor is yours, please.
Good morning, and thank you all for being here. My name is Parikshit Sharma, and I'm from, and with me I have Kushan Kapoor and Webb of Capri. We are all from University of Limerick, and we are genuinely honored to be standing here today. We want to thank National Bank of Poland and other partners for organizing this challenge and giving us the opportunity to present our work. The question we started with is the one being asked constantly across policy, finance, and academic circles right now. Is euro area trade actually fragmenting? The world has seen sanctions imposed, tariffs raised, and supply chains restructured, and geopolitical blocs beginning to form. Rather than take the narrative at face value, we went directly to the data. Before the evidence, we want to be transparent about our framework because the matrix you choose determines the story you can tell. So fragmentation, it means the trade spread across more partners. On the other hand, rerouting means partners swap in and out but aggregate trade holes. We tracked 4 measures for our analysis. The first one is Herfindahl-Hirschman Index for concentration, top 5 shares including the trade share of top 5 partners in EU. Then we have ENP that defines the effective number of partners as the inverse of normalized HHI, and rank mobility to detect when the substitution actively occurring. Our analysis covers 20 years of extra euro area trade from year 2005 to 2024 across 14 partners that include both regional groupings and individual countries. Now, let's see what the data says. The HHI rose by 35% over the 20-year period. The top 5 partner share moved from 80 to 86%. So through all of these geopolitical shocks, the major partners did not lose the ground. However, there was one interruption in year 2022. The HHI dipped as the Russia's share collapsed following the sanctions. But by year 2024, it has recovered to a 20-year high. The network absorbed the largest single partner shock in the dataset and came back more concentrated than before. The question that follows naturally from this is who these dominant partners actually are and whether the concentration is stable or fragile. So I will hand over to Kushan, who will take you through precisely that.
Thanks, Parikshit. Now let us examine who stands at the center as trade concentration continues to rise. The euro area's largest trading partner is not a single country, but the other EU member that do not use the euro, which is represented as K11 in the dataset. Together, they account for nearly half of all the extra euro area imports, which is roughly 8 times more than the United States, which is the largest individual country partner, and Asia as a broader region being second. So while the discussion around the EU and China, or the EU and the US, are certainly important, they unfold on a much smaller scale than what people assume. That said, the country-level changes are where the geopolitical story becomes visible and the pattern breaks into 4 distinct trends. The UK shows a steady decline, falling from 7% to roughly around 2.5%. With the drop beginning around 2015, in many ways, Brexit appears in the trade data before it even appears in the treaties. Russia presents the sharpest shift in the entire dataset, collapsing from about 2% to just 0.2% within 2 years following the sanctions, and it was by far the fastest decline observed across any major trading partner. Trade with the United States remains relatively stable, though it increases after 2022 as the euro area moves to replace the lost Russian supply. And then there's China. China continued to grow through every major disruption, the 2018 trade tensions, the pandemic, and even the sanction periods. And none of these shocks significantly slowed the trend. In fact, the euro area is more dependent on China today than it was 2 decades ago. Now let us see the concentration and rerouting story has been so far about the shares. So now we go one level deeper and separate the imports from the exports for each of the partners. This is because the flows are not symmetric, and the asymmetry is where there is a glimpse of weakness. So let us take China for now. The euro area buys significantly more from China than it sells there, and that gap has been widening since 2018. And this is what we call asymmetric decoupling, where one flow is drifting while the other one is holding up. The import dependency is structural, but the export relationship is getting thinner. The UK and the Russia are the symmetric cases, where both flows decline together for different reasons, Brexit for the UK and the sanctions for Russia. The US is kind of like a mirror image of China. The euro area exports more to the US than it imports, and that import share rose up post-2022. Now I would like to call Vaibhav Kapri to take this discussion further.
Thank you, Kushan. Now looking at the shock period, I want to flag the figures here, which compares the period averages pre and post 2022, which is why Russia reads like 1.31% here versus the 1.9% baseline you saw in the earlier slide. Here we can see that the Russia's share more than halved, which is the largest shock in the data set. The US stepped into that gap, which has been already told by my colleague, and growing to about 5.2%. China kept rising through both the shock periods, and UK declined due to Brexit. What this basically tells us is that the decoupling stories are all different, and there is no single dynamic here. So treating them as one phenomenon called fragmentation would obscure all four of them. Now, let's move on to the rank mobility, which is year-on-year positional changes across all 14 partners. High mobility means partners are actively swapping their positions. That is the signature of rerouting in the real time. 3 years hit the dataset maximum of 0.43, which is 2015, 21, and 2023. Each corresponds to a period of active structural adjustments. Brexit build-up, post-COVID adjustments, and post-Ukraine sanctions. 2022 itself is a counterintuitive, where we can see mobility went to zero. Russia's trade collapsed, but no other trade partner changed their rank. The shock was absorbed through the volume and not the structure. By 2024, mobility is again zero, and the new equilibrium has locked in. The pattern holds across every shock. Mobility spikes and then subsides. Thus, we can see the network bends, but it does not actually break. Now, finally, let me summarize our findings. Trade is concentrating. Dependency is on the top partners is rising. Partners being swapped while the trade being held. And the ENP fell from 4.9 to 3.6, which means fewer partners are actually doing the real work. So we can say that the trade is rerouting and not fragmenting. Geopolitical shocks reshuffled through trades with whom. They did not reduce by how much or with how many. The network is more concentrated now than it was in 2005, and it has survived every shock we have thrown at it. I would now request the technical team to put up our dashboard, which we can show, in the interest of time, I think we can show it. Like this is our dashboard which we created. All these visuals we have taken from this dashboard only. And there, if you can click to the 3D view, which in this top right, this is an interactive design which we have created, which shows all the imports and which can show all the imports and exports in this. Thank you all for your kind attention.
Thank you very much, and congratulations for this amazing work and also for using our data in a very smart way. Over now to the next team from Bocconi University. You will talk about your project and show us indeed what you realized. Please, the floor is yours.
Good morning, ladies and gentlemen. I'm here with two of my colleagues, Mel and Andreas. We're undergraduate students at Bocconi, yes, the great Bocconi University. Mel here is pursuing computer science, economics, and management, and Andreas behind me, social sciences and economics, and I myself, international economics and management. Now, I would like to say we discovered water in the ocean when we established the fact that the Russian-Ukraine invasion had a significant impact on Poland's macroeconomic objectives. And it's not just any kind of water. We discovered heavy water. Now, this is a naturally occurring water with a structure different to regular water because it contains deuterium, which is a hydrogen isotope. And now you're probably asking yourself why I'm talking about chemistry. So forgive my allusion, I will get right to it. So our report will examine how the Russian-Ukraine conflict impacted Poland's macroeconomic objectives and how Poland's response diverged from the euro area. I'm going to give the floor now to Mel, and we're going to ask the technical team to also pull up our interactive dashboard.
I'd like to take a quick moment to briefly introduce our dashboard, as it was a central part of our submission. The idea behind the dashboard was to make the data more accessible as well as intuitive to navigate. The dashboard includes two main parts, which is the overview page, which gives us the key findings from our research, as well as the detailed analysis page, which goes through each figure one by one and gives all the figures through our three different sections of price stability, economic growth, and current account, as well as a brief description and the methodology. So now let's please begin with our first section of price stability, and I'll pass it over to Levente.
Now, for our first figure, we are going to decompose Euro area petroleum imports into value, volume, and an implied unit price. Now, the key finding here is that the initial divergence was actually price-driven and not volume-driven, as we would think. If we look at point A, we can see that the import value peaked at 165, while the volume 115, and the implied unit price rose sharply after the invasion commenced at 115. It then resumed back towards 2023, proving the fact that this invasion, again, was price-driven and not volume-driven. Now, if we move to our second figure, here we have a headline HICP separated into core, energy, and food contributions. And the bars show contributions in percentage points, and the bar height is going to be headline year-on-year inflation. The main finding here is that both Poland and the euro area actually saw similar reactions, but Poland a much significant, much more stronger divergence. We can see this by Poland peaking at around 117, 18 percentage points, and the euro area peaking around 10 to 11. Now, this was mainly energy-driven for both, but for Poland, it was also substantially driven by food and core contributions. Now, for our final figure in the price stability section, we will examine the exchange rate channel. So we can see Poland's energy HICP rises sharply to 40%, and this is followed by a dip in its near exchange rate below its January 2022 baseline, which shows depreciation pressures. If we look at the EA area, we can notice that it's much smoother. So the key takeaway from this figure is that Poland faced not only the common European price energy shock, but also rising exchange rate pressure that intensified inflation.
Now let's take a look at the economic growth section, where we want to look at whether the post-invasion period coincided with short-term volatility and whether Poland's relative output changed over the medium term. So the first figure gives us Poland's quarterly real GDP growth distribution, And we compute the quarter-on-quarter real GDP growth over the full sample, which is from 1996 until the present, and show it with a histogram and a box plot. The highlighted markers compare the immediate post-invasion window, 2022 quarter 2 to quarter 4, with the pre-invasion benchmark of around 2%, which is the turquoise one or the light blue one. And this suggests that the quarters closest to the invasion were associated with weaker and at times contractionary growth outcomes. The second figure compares Poland and the euro area using the cumulative real GDP growth, where both time series are rebased to quarter 4 of 2021 at 100. So as we can see, Poland's GDP index rises above the euro area path eventually, and this gap widens over time. Of course, we can't say that this is a causal estimate, and it does not mean that Poland went unaffected from the invasion. Rather, it suggests that it was able to adjust and that the post-invasion period did not coincide with a persistently lower relative output path. Instead, it shows relatively strong comparative medium-run cumulative performance compared to the euro area benchmark. And the final figure shows this change and the composition behind the performance. It compares the average expenditure component levels in 2019 to 2021 with 2022 to 2024. And the positive shift, as we can see, is not concentrated in one component, but it's split between consumption, investment, government spending, and net exports, where they all contribute positively. So overall, the growth section points to a short-run disruption, followed by comparatively strong medium-run performance, supported by the multiple GDP components. So having looked at this, let's move on to the external side of the economy, the current account.
Thank you. So for the last part, we wanted to talk about the current account, where we specifically decided to focus on how the invasion affected Poland's external balance, particularly the trade. So for our first graph, or I guess sixth, this is a graph demonstrating Poland's goods balance decomposition, split into two parts, one being trade with Russia and the other one being with the rest of the world. We also have the invasion period marked with a dotted line, and it is visible that immediately after the invasion, there's a sharp deterioration of the goods balance. A large part of this was coming from the decline with Russian trade, and this was consistent with an energy-driven terms of trade shock, which was when the import prices increased, particularly the energy prices, and the export struggled to keep up with that pace. From 2023 onwards, there's something particularly interesting, which is the Russia component has declined significantly, and this is due to the fact that Poland adjusted through trade reorientation and substitution, having less of a dependency on the Russian economy and their trade, which is shown by the lack of Russian imports. Although this was a step in the right direction, there was still vulnerability prevalent, as they're still in the negative area. For the next graph, we wanted to compare the current account with the goods balance. And if you notice, these two lines are incredibly similar, and this is because they have a coefficient of 0.88, which for us it was significant because it indicated that the external impact operated mainly through the goods trade rather than other current account components, such as income flows or transfers. And generally, these two graphs together show how there was an obvious short-run supply shock for the Polish economy. However, the retaliation is what was quite significant because they had a gradual adjustment process, which was seen by the substitution of Russian goods and the reorientation with less of a dependency, which is what allowed Poland to separate itself from the European area. I wanted to just begin the conclusion where remind you that our analysis started by posing the question with whether the Russian invasion on Ukraine coincided with clear changes in Poland's economy, which of course it did, but the specific thing we wanted to explore was whether the Poland's path diverged from the European area. And we received the conclusion that it did in fact, and a large part of this was due to Poland's changes in acting with the invasion, as spoken by my colleagues and myself. We wanted to thank you very much for having us here. It was a great honor for us to not only represent ourselves, but represent our university as bachelor students. And it's true what they say, that if you are the smartest person in the room, you are probably in the wrong room. And so it was very nice for us to sit here and learn from everybody.
Thank you very much. I think, yeah, we are running a little bit
Just 1 second. Just before we depart, if we could go back to our slides.
Yeah, very briefly.
Just 1 second.
A little bit behind. Yeah.
Yes, so just before we depart, we invite the audience to please scan the QR codes. It will take you to our LinkedIn pages. We would love to connect with industry professionals because it was an honor to be here. Thank you very much.
Thank you. So this is where communication meets advertisement. Indeed, we have it here. So I think we are good for the breaks now. It's just 15 minutes, but I hope you won't regret this. And thank you very much again for your attention. Thank you. Thanks.
Ladies and gentlemen, dear colleagues, so a warm welcome to the roundtable on the compiler's perspective from data to decision making. So after the discussions that we had about evidence from external statistics, use cases, and user needs yesterday, and also the inspiring presentation this morning on crypto assets and statistics in action, I think it's now really the time to bring all those things together to create a bundle of flowers and to generally develop the compiler's perspective on the issue from data to decision making. And in order to develop such a compiler's perspective and to further explore the nexus between data and decision making, I'm very happy to welcome my 5 distinguished panelists, so went in alphabetical order. A warm welcome to the President of Statistics Poland, Mr. Wojciech Kierpal-Wolan, to my left. Then also to my left, Ms. Aiga Ose. She is Head of Data and Statistics Department in the Bank of Latvia and member of the Statistics Committee of the ECB. To my right, you know, I would like to say Carlos as Assistant Director of Statistics Department and Chief of the Balance of Payment Statistics Division at the IMF. I'm also very thankful to, I try very slowly, Athanasios Tanopoulos, the Deputy Director General of Eurostat. I tried it so often yesterday evening in my room, and I was so sure that there can be no mistake, but that's typical. And of course, Caroline Willicke, Deputy Director General Statistics from the ECB. I'm particularly, so perhaps I have to say, in order to, in our panel, we'll have 2 rounds of discussions based on some questions that we have shared with the panelists in advance, and hopefully we'll have also some time at the very end. But before starting these rounds of discussion, I'm very thankful to you, Carlos, that you kindly offered a very short presentation to bring us to the topic. And the topic of your presentation is Mapping Global Finance Interconnectedness, New Statistics on Cross-Border Flows and Position. And so for the next 7 minutes, the floor is yours.
Well, thank you, Chair. And indeed, this is supposed to be a very short presentation. It's just an appetizer for what comes next, what really matters, the panel discussion. And in these 7 minutes, I'm going to present a paper that has recently been published in the Statistical Journal of the International Association of Statistics. And I would like to thank my co-authors, Venkat Yoshula, Yoji Ishikawa, and Yannick Damgar, with whom I have prepared this paper. So in the next 7 minutes, I'm going to show you how we map global financial interconnectedness in cross-border statistics, why it matters for policy, and how BPM7 help us do this better. So let me start with the big picture. So as we know, financial linkages have increased substantially in the last few years, and this means increasing interconnectedness across countries and also a much faster propagation of shocks. So the question is, how do we give policymakers the information that they need to map all these connections? And the answer has come across many times in these 2 days, is that we need sufficiently detailed data to detect vulnerabilities and identify risks in cross-border positions. So the first driver is financial innovation, digital assets, new intermediaries, and we heard this morning about crypto assets. It's a typical example that we are using very much lately. And you can see the importance in terms of financial stability, in terms of the volatility of the market capitalization of crypto assets. So BPM7 is introducing 2 important features to make it easier to handle crypto assets. One is clarification of the methodology, distinguishing between those crypto assets that have an issuer and therefore a corresponding liability. For them, the treatment is easier than for the others because you can treat the standard classifications of financial assets that we use to classify any other instruments. But the real novelty here were those crypto assets without the corresponding liability, like Bitcoin, for which we decided to treat them as non-produced, non-financial assets in the capital account. And the direct consequence of that decision is that not being financial assets, they by definition cannot be considered as reserve assets. So that's the first feature that is important in the new manual. A second one, which was not so much mentioned this morning, is that we are providing this information separately, which means that analysis is made easier by identifying transactions in those assets separately, number one. But number two, because this is a market that is in constant evolution, if there are changes in the future, like, for example, imagine that, I don't know, some crypto assets start becoming widely accepted as a medium of exchange and fit the definition of money, then we can perfectly reclassify these assets because they are identified separately in our accounts. So that's an important feature. Other important features have to do with the classification of non-bank financial intermediaries, and also the additional details being provided about derivatives. So the broader point is innovations keeps moving, and we need to adapt our frameworks to keep pace with those innovations. A second driver is globalization, and this has to do with the structure of multinational enterprises, global production arrangements, and especially financial centers. And that's the example that I'm using here is that of special purpose entities. So as you can see here in this chart, we don't have all the financial centers that we would like, but in some of these examples you see that the transactions and positions of special purpose entities are several times the GDP of some economies. So this is why it is so important to be capable of showing these transactions and positions separately. And this is what we do thanks to the introduction of an internationally agreed definition of special purpose entities for the first time in our standards. So we can classify them separately, And then we enable analysis of these transactions separately, which is a big advantage for users. And this helps us detect vulnerabilities much more easily. And other advancements that help us do that are the distinction between domestic and foreign control entities, trade by currency, and also a new definition of net international reserves that we have incorporated to the manual. But probably the most important change brought by BPM7 is the incorporation of the so-called integrated IIP framework, which provides a reconciliation between balance of payments flows and IIP stocks, starting or explaining how to go from an initial position to a final position through transactions, changes in prices, and changes in volume. And for this, I would like to use this example. This corresponds to a blog that we published in the fall last year. And it was in a context in which the markets were speaking about investors probably contemplating the possibility of shifting away from the dollar, de-dollarization. The reason being that the context of the second quarter of that year, where all the tariff wars, issues with sanctions, the depreciation of the US dollar, and the markets were anticipating that many investors could be shifting away from the dollar. Well, we were publishing at that time the figures for June 2025 of the currency composition of official reserves, COFR. And we wanted to see what the behavior of reserve managers had been on that occasion. And indeed, when we first analyzed internally the results, we could see that the share of US dollars in the total reserves had gone down significantly at that time. But then, when we decomposed those movements in raw data, we could see that most of the effect had been due to currency movements, and not so much by active diversification by portfolio managers. And this matters a lot because as we published these statistics in US dollars, I mean, this has effects also on all other currencies. And if you take a look at, for example, the euro or the British pound, it's not only that investors were buying additional euro or British pound, it's that they were actually, in net terms, disinvesting in these currencies, which changes a lot the picture. So the key message is, if you want to know about active portfolio diversification, you need this decomposition between the different components of changes in positions. So this was just, as I say, an appetizer, so let me come to conclusions. 4 key takeaways in these 4 components. If we start speaking about integrated data for risk monitoring, the stock flow reconciliation strengthens our ability to interpret changes in positions. Speaking about enhanced transparency, BPM7 adds information to track globalization, including SPEs, multinational structures, more detailed breakdowns by sector, instrument, and currency. If then we go to adapting to innovation, BPM7 expands the framework to cover digital assets and emerging instruments. And the last part, which is the most important one, which is policy relevance. Better external statistics and more detailed breakdowns support better macroeconomic management and financial stability. Now, even with these improvements, challenges remain, and the picture is not perfect, far from that. So data gaps persist in some instruments and sectors. Timeliness is uneven. Innovation moves quickly. And asymmetries, they were mentioned a lot yesterday, still affect consistency. So we are improving, but the picture is still incomplete. Now, looking ahead. So geopolitical shifts and evolving corporate structures will keep shaping what users need and will create new demands. And new tools like AI and big data can help us there. But the foundations remain the same. Strong standards, strong implementation, agility to keep pace with innovation, and most importantly, a strong international cooperation. And with this, let me conclude my presentation. Thank you very much for your attention, and I look forward to the panel discussion.
So many thanks, Carlos, for bringing us to this topic. And as you've mentioned, this paper has recently been published in the Statistical Journal of the International Association of Official Statistics. And I have to say, I read the paper and benefited quite a lot. I mean, there are many papers over this conferences. But anyhow, perhaps if you have somewhere a library, I would also recommend to put this article in. It is very usable. So in your presentation, Carlos, you raised some key points, I would like to say, but very shortly. So it was just popped up and then it disappeared. But that is a good chance for us to come back to this issue. And in particular, you mentioned the points there in the slides on policy relevance, adapting to innovation, integrated data for risk monitoring, enhanced transparency, and of course, BPM7 key enhancement. So I guess here in this panel and also in this room, there is a broad agreement on the relevance of this topic, but implementing this issue is much easier said than done. So fortunately, I would like to say we have broad and deep experience around here, and that helps to address these various points. So for the first round, and I would like to answer the following questions very shortly in 5 to 4 minutes. Let me say, so just where do you see the biggest hurdles in putting all these issues into practice? How can we overcome these obstacles together as central bank statistical offices and international organizations? And where do you see the biggest chances, including in terms of cooperation? And what does that all mean for the implementation of BPM7 and the new SMA? So very simple questions, and I'm sure that you will answer them comprehensively, and we'll start in alphabetical order. So Marek, first, up to you.
Thank you for the invitation. And so, because of the fact that I'm the lecturer in inferential statistics simultaneously, let me make sure that we understand this policy relevance, for example, in the same way, because it was the first point, so in this keynote speaker presentation. For me, it is the degree to which data and information directly address these real-world problems, so constraints faced by policymakers. And secondly, it is strictly connected with the risk monitoring. You also mentioned in your presentation about this risk that is very important. In the scope of, in our case, I mean statistics, Poland, I'm going to develop my thoughts maybe in the second round, countries' resilience and external vulnerability. And when it comes to the first issue, the first one, I don't want to sound trite, living in highly competitive and technological age, surrounded by AI technology, big data technology, so in the face of, global migration crisis, global security, where this prospect of this security is so uncertain. So undoubtedly, so national statistical institutes are facing more and more challenges. And so our mission is to recognize this new phenomena and to measure, accurately measure. So especially in the context, about you mentioned during this keynote speech, I mean sustainability and well-being. Well-being, you didn't mention about this well-being issue is very important, but it requires new data, new sources of data, and first of all, new integration of data, to be exact, new methods of data integration. My favorite sentence is, no matter what we say, is all about not money. It's all about integration of data nowadays. Look, so national statistical institutes gain, new customer, I mean AI, and new competitor. And so in this time of hallucination of AI, it is a great chance for our organization to be anti-hallucinogenic agent, anti-hallucinogenic remedy in toxic information environment of today's world. And for us, it is extremely important. And being more concrete, so how important data is reflected as SNA 2025. So where data is treated as intangible assets. And so it is another one evidence according to this well-known classification that it is the key issue nowadays. Regarding the second point of this definition of the this relevance and the risk monitoring. From Statistics Poland point of view, so this impact of multinational enterprise activity comes to the fore. And so this is about, everybody knows, about estimation, so how much gross value added is generated by, foreign and domestic, controlled enterprises. And our new, some kind of political mainstream undertaking in Poland, local content project. And we are involved in it. We are in the middle of preparing appropriate methodology, appropriate, sources of data in order to measure this scale of outflow of foreign capital. And at the same time, of course, so the power of multiplier effect on the economic growth. This is so the key issue from my side as a president of Statistics Poland nowadays.
Many thanks, and also that to put to our memories that we have this direct connection to relevant question in statistics and to measure the new phenomenon and the new methods of integrating data. And we have also a special session on that later on. So that's well under development. So Aga, what is your opinion with regard to the questions that we have raised?
Okay, it works. Thank you, Robert, and thanks also, Marek, for your insightful remarks, I should admit. I would like to focus on two closely connected themes that are becoming more important and more central for external statistics. And these are data sharing and data availability. These are not only technical ones, these are the strategical ones. For future relevance of official statistics and for effective monetary policy, not only monetary, but policy making. And Carlos also earlier highlighted that the world we are trying to measure actually is becoming more interconnected, more complex, and more digital. Financial flows moves faster, new instruments emerge rapidly, and economic activity crosses borders and sectors in a way that challenges our traditional statistical frameworks. And at the same time, policymakers expect from us more timely, more granular, and more integrated information to monitor risks, to support stability, and to guide decisions. All this together makes growing up between policy needs and the data that are currently available in our traditional statistical systems. One huge challenge we face is access to relevant data. And in many areas, we already have necessary information, but statistics producers do not always have sufficient legal, technical, or organizational access to use it effectively. One good example of this could be growing importance of global digital financial service providers such as Revolut for Latvia. Yeah. These institutions generate highly valuable microdata that are important for international transactions, for cross-border economic activity. And these data are very insignificant to improve further our data quality and our data granularity for external sector statistics, for tourism statistics, for household consumption analysis, and also for the measurement of cross-border services. And even in cases where we have access to data, we still face another challenge, and it is on fragmentation. The data we usually collect are for different purposes, using different definitions, standards, and even identifiers. And these challenges our further data integration more and further. And it is particularly visible, for example, in the area of mirror data, where we try to analyze asymmetries in bilateral statistics. Resolving them efficiently requires different, more detailed data exchange between statistical producers. At the same time, it also requires a strong legal framework and mutual trust between institutions. So, and last but not least, a challenge we face is data discoverability and timeliness. And as policymakers, increasingly needs real-time information, and especially in situations where there are economic instability. And here, we cannot ignore a rapid development of AI or artificial intelligence, as it also rapidly changes statistical production by supporting data collection, validation, and analysis. It also raises more important questions for transparency, for explainability, for governance as well. Those statistical producers and international organizations will have to develop further their technical capabilities and even create methodological standards to use these technologies effectively. So just to conclude all this, I would say that the future of external statistics doesn't depend only on methodological excellence, but it also depends on our ability to collaborate, to share data responsibly, and to adapt to the rapidly changing world. And if we succeed, we will not only improve statistics, but we also will improve evidence base for effective monetary and not only monetary policymakers. Thanks. That would be my...
Many thanks for complimenting Marek's view on policy relevance, with bringing the additional aspects on data availability, data sharing, also in the statistical area with us. So, Carlos, you have made the presentation, but is there anything that you would like to add?
Yeah, well, I mean, I think the points made by Marek and Aiga are super important and indeed on top of our minds. But I would like just to take a step back and come back to your question, Chair, about implementation. And let me just share with you what I believe are three very important components of a successful implementation of the new standards. So number one is that we have for the first time in the updates of the standards a common implementation window. So there is a shared target of achieving consistency with the new standards by 2029-2030. And this is not only important for the evidence, which is cross-country consistency. So in past updates, we have they have taken a long time for countries to adopt the new standards. In the last weeks, we received for the first time BPM6 based data from Haiti, for example, just to put an example. So imagine what this is for users of global statistics, trying to compare apples and oranges, data based on different standards. I mean, that's incredibly challenging. So hopefully this time around, we will be able to ensure this cross-country comparability much better than we used to do in the past. But in addition to this, there are two other advantages that are important and shouldn't be underestimated. One is that we create collective momentum and credibility for the whole movement. And this matters when it comes to discussing resources in each of the institutions participating in this process, right? And then the last one is also that there is a battery of help that is being deployed by international organizations in this period until 2030. So this is a great opportunity to benefit from that kind of help. The second element that I consider very important is the cooperation between national accounts and balance of payments communities. So, and also between institutions in the countries, because these statistics are many times run by different institutions in the countries. So for the first time, we have developed something together. Many times people were telling me, I mean, why do we have different wording for explaining the same concepts in the SNA and the BPM? So for the first time, now we have common chapters, common text, a common glossary of terms and definitions. And not only that, I mean, we are also continue working together, having a joint research agenda, which makes so this cooperation should continue going forward. And that's very important for many reasons. But most of all, to avoid duplications. I mean, we work separately in parallel on the same topics. I mean, this is very little efficient, and we are going to achieve much better consistency working together. And my third and last point, and this has already been mentioned by Aigan, I think is incredibly important, a strong international cooperation and data sharing. So we have seen in these 2 days many examples about how difficult it is to handle these things from an individual country point of view. So fragmentation, mapping global financial linkages, crypto assets this morning. I mean, how do you get access to the information that is kept in a foreign, a non-resident exchange? So this requires international initiatives, having common identifiers, shared classifications, and most important than anything, having data sharing frameworks. And as you said, Robert, this is more easier said than done, but this is very important. So to sum up my intervention, we need a shared implementation window, sustain the cooperation between different communities, and hopefully it will also be the government finance statistics and the monetary and financial statistics, and the system of environmental and economic accounts that will ensure full coordination between the different macroeconomic data sets. And then the third element, a strong international collaboration and data sharing. And this is to avoid that implementation becomes fragmented. Thank you.
So many thanks for also raising our attention to the practical implementation issues and also underlining the strong international cooperation and the need for doing that, for having consistent data at the very end. So, Athanasios, I think it becomes more and more difficult to join because we have policy relevance, data accessibility, practical implementation. So we are really looking forward to your additional points that you would like to bring in. So the floor is yours.
I'll say something, Robert. Thank you very much for the floor. I saw Robert Few a little bit ago, and then I was expressing to him my frustration about the fact that I have no longer what to say, because everybody has said everything throughout those days, and I realized I found myself not having anything to contribute compared to what was, what would be my original reply with respect to his questions. But I think I will try to go one step back, and despite that I'm a practitioner, let me put it like that, and I don't come from and I will try to kind of like come up with a theory. I mean, our essential impediment right now to data collection and to continue our business that has been taking place so far, and I'm saying that from the standpoint of the coordinator. I mean, I try to focus on what is my job, is to coordinate and compile and somehow assemble data that comes from different sources. I mean, different member states that have, to some extent, quite a few degrees of freedom in the way that they collect the data, but at the end of the day, they have to be harmonized and, in a way, coordinated. I mean, I have to say that I'm really frustrated to observe this departure from multilateralism, from this way that, from what we have been thought so far as being the standard in the decades that we grew up and after the World War. So, and this was coupled by a second phenomenon, which was the technological progress. technological progress, among other good things, it gave rise to decentralized ways of organizing our exchanges, to the decentralized media of exchange, to currencies, if I may call it like that. I hope nobody takes it takes an offense about that, or media of exchange that do not stem from a central authority, right? From a central bank, from a government, something like that. But instead, they're based on the collective knowledge of a network of users, and it's like really established at that, which we call them, I mean, for example, blockchains. Okay, so this is what crypto is about. Now, what we do in our case, we're found with a challenge to update our system of national accounts and come up with a European system of accounts right now that includes, among others, the work that has been done in the international community, in the IMF, of course, but everybody else in the BPM 7, that will have to reconcile all those somehow confronting forces, because on the one hand, we need more coordination, we need more harmonization. We call for states, for countries to exchange more information in order to tackle those challenges. But at the same time, we see that information provision, given the recent geopolitical changes, has become the subject of strategic filtering, if I may call it like that. So information has not statistical information and exchange of information that on exports or even of money flows or anything that is related to that can be the subject of, I don't want to use the word manipulation, but filtering, but for strategic reasons. So this is one of the additional challenges, and I have to say that I have quite a bit of trust that our experts are going to be able to work on that, because they're very experienced people. But I just wanted to highlight the challenge, because among others, I mean, we have to deal with the so-called data as an asset. I think it was Marek that mentioned that, or in the beginning. Data as an asset is one challenge by itself for the new system of national accounts as it will be transposed in Europe. But also of course, incorporation of crypto. This is really crucial in the way that we're going to deal with international, external sector and external transactions. So just to cut the long story, and I will come back to that later, I think this is the general landscape. Is there like those two opposing things that are really opposing to what we statisticians have to do at the end of the day. We have to harmonize, we have to work together to say, I mean, to tell to users a common story, use common standards and come up with a story that regardless of where it's going to be heard, from point A or from point B, it will be pretty much reconciled, or it will be the same. That will be from me for the moment, Robert. And again, thank you.
No, thank you. And to bring in also the coordinator perspective on harmonizing everything, and you brought in the technological aspects. And I think we all would like to share you that we have good experts, as we've also seen here around this conference, that we can trust that they find solutions. But anyhow, so now we are really much interested about how your solution looks like, Carolina.
Thank you very much, Robert. So it's not always a blessing to have a family name at the end of the alphabet, I'm finding out today. But definitely, as official statisticians, in order to really facilitate to go from data to decision making, as is the title of our, let's say, of our panel here, what is important, and I can probably only repeat what you were already saying, is on the one hand to really further develop our data sources and make sure that we go with the economic development and with the development also, let's say, in firms are organizing themselves, that then what we have, we link together in a meaningful way, and that we not only discuss between compilers and users, but of course also with our reporting agents in order to find best solutions. And maybe to go back to one topic that was very much analyzed yesterday, and which may be a good example to demonstrate this a little bit, is this question on how do we help policymakers, analysts, but also firms to analyze risks to global value chains. Because this, of course, we only need to open the newspaper to see that this is an extremely topical issue and will, I would say, maybe unfortunately, in terms of risk, remain so. So on the one hand, we can offer, unfortunately only in 4 to 5 years' time, with having official statistics on the ultimate investing economy, we can provide official statistics that help in this analysis with a perspective on who owns, who controls, who is bearing risks. So we go beyond the traditional focus of the immediate counterpart. So just one example where, of course, also the manuals really bring very tangible expansion for our users. But then, if one wants to maybe also map a bit the network of risk, maybe, for example, from a country's government point of view, international input-output tables are extremely useful, but they are also, if one wants quickly analyze whether production is being reorganized, they don't help because they are not very timely. So I think this is another point where we really need further work. And of course, we have this remaining problem of inconsistencies. I think we also saw yesterday in the keynote speech, again, there's a very nice chart of one of my colleagues on the asymmetries between the perspective of the US statistics, the euro area statistics on the relations between the trade relations between the US and the euro area. And if we could find a way to really ensure an effective data sharing and an effective working together with multinationals, so yesterday there was also, again, of course, large case units being advocated, we for sure could help to get to the users a much better picture than we have today. And in a way, it's sometimes even a bit frustrating if one is around maybe for a while, because this topic of sharing confidential data, even among really professionals that all need to comply to the same ethics and quality framework, remains extremely difficult. I think we have found some solutions to go around. In Europe, we have asymmetry resolution mechanisms, etc., where we bring the countries together, so Eurostat, ECB colleagues with the national compilers, and that helps a lot. But really, I'm wondering also how can we make this step a more courageous step in order to really improve further the quality of the data from this aspect.
Well, thank you very much. My biggest compliments that you found a lot of topics not mentioned so deep before. So not an easy task, and I promise that we will start the second round with you, so we go in the different order. So no, that was not your intention, but I mean, there should be a direct reaction. So many thanks for all that. And when listening to all of you, I simply asked myself, is there anything to add? But you raised, Caroline, that important point of also the connection to the reporting agencies, and that is perhaps one aspect that deserves a panel in its own when we talk about reporting burden, bureaucracy reduction, and we also have in practice later on then to find the balance between everything, and that's, I would like to say, a little bit of a restriction in our work. So for the time being, we have much focused on current issues, let me say. So the second round of questions goes a little bit more, even farther in the future direction. So to open the second round of discussion, I would like to come back to one lesson learned in crisis time like the COVID-19 pandemic. And here we have seen that official statistics often require to be resilient, agile, flexible, and flexible in particular with regard to future unknowns. So I would also like to say, as IFC Vice Chair, there is a nice IFC bulletin on this issue on the lessons learned from the pandemic crisis. It's number 62, if anyone in the audience would like to take note and to read it afterwards. But in this regard, let me raise the following 3 topics to you and ask you for answer then in 3 topics in 3 minutes. So also to have some more time. But Caroline, I guess you are prepared. So these 3 questions are: how to make external statistics fit for multiple needs in a fragmented and uncertain world? The second, to put it differently, how can official statistics be sure that coming out with new data according to the new standards in 2030 is still relevant and not outdated? And last but not least, how can we better and faster serve the emerging new user needs when we think about daily figures in the pandemic, data on tariffs were most recently, I would like to say, quite modern. So we are looking forward again to your answers in exactly 3 minutes. Caroline.
No, thank you very much. Of course, the question how to remain, how to be agile and flexible in view of new developments. Maybe let me bring here one aspect, because we are official statisticians, and we usually try to become immediately as perfect as one can. But maybe that's not, and this also the crisis have shown us, that might not always be the only approach we can take. And in particular, in another topic that I think all our institutions have been dealing with the last couple of years in the area of climate indicators, we very quickly needed to react in a flexible manner and to really take what was out there, of course, to collaborate with many also unknown stakeholders, but then also to not shy away to provide in the first instance data that might not match our usual quality standards. So I think one important aspect is also that we should, and I think we do it in the ECB, we do it in the statistical office, so that we also come with experimental data or even analytical data in order to provide something for analysis in a situation where we are still working towards our usual quality standards as enshrined in all the quality frameworks I think all our institutions have. And our experience is that this has worked extremely well, because it really meets a user demand on the one hand, and it also helps the statistical compilers really to go step by step, to experiment, to see also with other partners who are in the same ship how to move forward. So this going stepwise and then also be able to adjust, I think this is one aspect. Now, how to make sure that what we put in a manual, and then of course is extremely complicated to implement, like on the crypto assets, we saw that this morning, and then not be, let's say, always a little bit behind. I think that might indeed point to something that I think is being discussed, is on the agenda, namely that we might need to go away from this 15 years rhythm of changing the manuals, but to find ways to become more agile here, be quicker to react, while also not totally overburdening the, let's say, the community of statistical compilers that, of course, also face all the time the need to adjust to new requirements under tight resource constraints. Let me keep it here.
Yeah, many thanks. So I guess experimental data, other partners, more agile with regard to international standards, that's part of the answer. So Athanasius, what are your ideas in Eurostat?
Thank you, Robert, again. Few days ago, I was participating in a panel that I thought it was on foresight. I'm not going to talk about foresight now, because that was exactly my point, that foresight methodology was developed in an era then when you see events like crazy events that the ones we have been living in the last 6 years have been considered really tail events. Huh? Now this is no longer the case. Now, I mean, instead of, now this is our reality. On a daily basis, we have events occurring that are not really, could not have been predicted in, by a sensibly reasonable person that would rationally assign, you see, ex-ante probabilities on specific events. I will take what Carlos mentioned. I mean, innovation comes very fast. That's what he mentioned, you see, before, and this is true. Huh? It's not only the bad events that come fast. It's also the good things that come fast. And this is the reason why, instead of focusing how we're going to forecast and predict the next crisis, whether it's going to be a disease or a war or a combination of both, as statisticians, we need to work on our fundamentals. This is, by the way, what I would do if I were a student right now. I had a discussion a little bit ago, and I said back in my time, I struggled to learn code. I wrote my PhD in Fortran. I don't know. This is like unknown words for most of you, and this is completely useless right now, okay? And most of the fact that I learned back in school is useless. So, I mean, what would be the strategy right now to do? I mean, it's just to focus on the fundamentals. And to finish my intervention at this point, the fundamentals for us is what we know, what we're known for doing best, which is standard setting, and this is our comparative advantage, and classification, meaning to work on how much, on the fundamentals that precede counting. Huh? And this is, in my opinion, what we could do. I mean, if you consider this, if you think of it, allow me the simplistic terms, as a tree, instead of a little bit working on decoration in the leaves above the tree, we can work on the trunk. Huh? We can work on having good foundations in order to, wherever might be the event, the outcome that might come out from this trunk, we can be ready to tackle these types of challenges that will definitely focus. It will have to do with the data and the way that we could combine different sources of data, as colleagues mentioned before, how to integrate different sources of data. That's it for the moment.
Many thanks. So that we also have to work on our fundamentals to be fit for the future. And with regard to data integration, I think Eurostat has made a great job with regard to the new European Regulation 223, which is also about having data access to privately held data, and that I think can help a lot. Carlos, agility. So how do we get it? Or have we?
I guess this is not a typical panel in which you see people discussing and disagreeing, right? I mean, we seem to be very much on along the same lines. So yes, agility and relevance. I feel compelled yesterday when many were saying that it's desperate to have to wait 15 to 20 years to see standards changing. And I really feel and relate to this desperation. But let me say something. I mean, I think we have not been very agile also in getting to simple discussions and conclusions. And the reason why I'm mentioning this is because not every new economic development requires a structural change to the standards. So, I mean, the manuals are designed to provide some type of stability to both users and compilers. I mean, we see how costly it is to implement the new standards, how much resources and money it costs to change completely your systems to accommodate new requirements. So you cannot do this every second day. And from the user's point of view, obviously you need your long time series, and you want that when there is a change, also you take back this change and you are able to do your analysis from the very beginning. And this is obviously very challenging. But many of the examples that have been provided in the discussions, like take cryptos, for example. I mean, cryptos, showing them separately definitely requires a change in the standard components. But clarifying how to treat cryptos according to the current methodology is something that just requires discussion and an agreement about how to interpret the methodology. So for this reason, I think first that it's very important to distinguish between structural changes and changes in the interpretation of the methodology. And we can do this via supporting materials. We don't need to change the manuals. And we can do this with clarification notes and with handbooks, like the recently developed by Eurostat on data and marketing assets, for example. So, I mean, these are tools that we can continue working on. And we have now a joint research agenda, which will make decision-making much more agile. So now that we discuss together, we are meeting together, the Advisory Expert Group on National Accounts and the Balance of Payments Committee. We are meeting together in October, and we are going to meet more time jointly than separately, because most of the issues that we are discussing have to be agreed together. And it doesn't make any sense that we discuss them in parallel and we come to different conclusions. We better discuss together and we come to the same conclusion. And this is going to happen now going forward, which will increase this agility to react to new things. Now, in these supporting materials, we have two types of materials. We have materials that clarify the methodology, but we also have compilation guides that provide more practical advice to compilers. And the problem is that sometimes in these compilation guides, we start usually with the methodology. You saw the one that we were presenting, and blame on ourselves, Venkat, that we start by saying what is the current methodology. And the problem is that we need to realize that users and compilers are no longer going to go to the website of the central bank to pick up data or go to the manuals to try to find a response to their questions. They are going to use AI tools. And the problem with mixing interpretations of the manuals in different types of supporting materials is that we can confuse completely the AI tools. If they don't know where exactly they have to look for an answer to the question, chances are that they will be mixing up the different texts and provide a wrong answer to a question. And this happens more often than you can think. So we have developed this Talk to Manuals AI tool, and until we made it very clear, you can only look at this set of texts, it was looking everywhere. And then the chances of getting a wrong answer were much higher. So this distinction about, and instructions to guide AI tools about where exactly they have to look for an answer are also very important. So, and the final point that I wanted to make, which was already mentioned by Caroline, which is very important as well, is something that came up in my discussions with different people during these 2 days. So we were always saying, I mean, central banks usually receive a user requests, and the first thing that we do is we put together a data collection. Well, putting together a data collection might take years. And then on top of this, at the end of the process, we provide data with probably a lag of I don't know how much time, which is not exactly what is needed for certain policy questions. So you were speaking with Caroline, and rightly so, I think, about the use of experimental data. And this is very important. And the problem is that central bankers, we are risk averse, and we don't like to experiment. We like to be, always having very clear rules about what we provide. But sometimes, I mean, answering a policy question doesn't require carrying forward the same data collection forever. And just simply what we need is to go, look around at what we have and provide an immediate answer to a question. And this answer, also responding to one of the questions that I heard yesterday, can be very granular and can be very timely. Just to close my intervention, I put you an example. So during COVID, we realized that we didn't have a tool to detect real time what was going on with the economy. So we knew that everything was shut down, but it was very difficult for us to track what was going on with the economy. So we decided to put together, and we did it in 2023, something called Port Watch. And in Port Watch, what we are doing is we are tracking cargo ships, and this was essential since 2023 to track the recovery from the pandemic, which was much more irregular than one could have anticipated. It's not that everyone recovered at the same time. So we could see that economic activity was recovering very unevenly across countries. And we could do this almost real time thanks to that information that we put together. And now it has become essential with the Middle East war as well, right? I mean, we can, all these jams, traffic jams, we can follow real time. So this is a kind of policy response that we were not so much used to in the past, but for climate, for example, is something that we learn that we can do. So, I mean, in other words, different policy questions might require different reactions. So just to finalize, I mean, to me, keep the standards stable, because this is something that we need as well, but complement them with flexible tools that can respond in a much more agile way to new policy demands. Thank you.
Many thanks. So no need for me to sum up because you did it, what you say. But just to answer your point that this panel might be too homogeneous, and honestly speaking, perhaps that is one of the reasons why I like to work in statistics. It's relatively homogeneous, and I think what we are doing here, it is a kind of a contribution to the understanding of nations. Because whatever we do, I would like to say people would like to have accurately measures for things that happen. So with these words, Igor, I give it up to you for your contribution with regard to the future outlook.
Good. I'm a little bit confused because I don't know what to add, but let me try. These are difficult questions, and let me say then from the perspective of central bank, I think that the main goal for us is to maintain relevance in this rapidly changing world and fragmented world. We all know that traditional statistical production models were built for a more stable environment. However, today, geopolitical developments, financial innovations, digitalization evolves faster than we can adopt our regulatory framework and our institutional framework, even though. And yes, and it is also true for Europe. Heavily regulatory processes and fragmented data environments that also previous speakers, I think Carlos especially, raised up as the ones that slows our response to society. And by 2030, I'm more than sure that we will face new challenges. And from, I don't know, AI-driven activities and digital currency to cyber risks and fragmented geopolitical framework, yes. And yeah, resilience alone is not sufficient anymore for official statistics, and I once more can repeat that official statistics needs to be more adaptable, more agile, and I like that experimental statistics. I like the words that Carlos also highlighted on AI technologies and how to guide consistent and valid information on the metadata, yes. And for central banks, what it means new data sources, stronger international data sharing, and new technical capabilities, and even new technologies how we produce statistics. And what's most important, I think there will come also more flexible governance, just to adapt to a rapidly changing world. So that would be my key points. Thank you.
So many thanks. Yeah, indeed, digitalization, cyber issues, resilience, whatever are important issues. So now I would like to say the problem that Caroline May had at the very first round is after 2 rounds, this difficult job goes up to you, Marek. So is there anything you would like to put your attention to?
At the beginning, let me say that, I was also a little worried during this first round because having on board Thanos, so it was not so easy to me to be honest. No, it is a joke. So the thing is how to get some kind of equilibrium. But fortunately, he's my friend, and he was the former president of Statistics Greece. And coming back to the point, agility and flexibility is not an option. Now, this is categorical imperative, being in line with famous German philosopher Immanuel Kant. It is, categorical imperative for national statistical institutes nowadays. And so we are trying, I mentioned, first competition in the information market. And so extremely important, and so chance, opportunity for national statistical institutes to deal with this, as I said, garbage in, garbage out issue, you know, being in line with old-fashioned expression, you know. It is from the previous century. Now it is called house nation of avatars, you know. But being stick to the point, you touched a lot of things, you know, extremely important. The thing is how to implement a lot of them. Coming back from this official dinner, we discussed in bus, with Thanos about that we should find, even a few examples to get this dominant position in information market by national statistical institutes. As I said, it is, so the thing is, in other words, how to deliver real-time data, how to deliver real-time analysis. I got you the recipe. Integration, of course, is crucial. But so, let me share with you, because the wheel is in the details, let me share with you with two examples. My neighbor mentioned about tourism. It is my, you know, our, I can say, flagship, Statistics Poland. So together with National Bank, thank you for invitation and collaboration. So fruitful, really, believe me. And so we conduct survey. So I can say, I'm so sorry, one of the best in the world when it comes to methodology. Because so we're predestined, I mean, Poland, we have this EU's external internal border, and it's the reason why it's not so easy to work out this effective methodology. But we use data from mobile network operators, credit card operators, automatic number plate recognition systems. So we share the data with, you know, from road sensors with Germany in order to calculate the scale of, you know, movement of people. It is crucial. It affects BOP because having this appropriate number of this movement and expenditure at the same time, we are able to calculate this BOP in appropriate way. What is extremely important, this some kind of another one important thing to solve. Someday trips. I look at Thanos, Greece. Not only a lot of people from Germany come to Poland for one day. A lot of Poles come to Czech Republic, etc. And so, using this data, high-frequency data, we are able to prepare the scale of expenditure. So I'm going to look at some kind of data. And in 2025, you know, this new system for measuring the someday visitors. So cost increase in expenditure on Poles someday trips abroad by 7.8%, and foreigners in Poland by approximately 4.2% compared to traditional sample survey results. Not only sample surveys, but traditional approach, because you asked about beyond traditional approach. I gave you this evidence. This is crucial from your point of view. You know, balance of payments, at the same time GDP. Another one example, you know, it was absolutely gripping and riveting presentation by youngsters during the previous session. From my side, as the professor at the university, But the thing is, nowadays in Poland, you mentioned about this, you know, COVID pandemic and a lot of so unusual situation. For us, the thing is this escalation of the conflict between Russia and Ukraine. And now we are in the middle of, you know, developing a coherent research system, you know, for estimating spillover effects. And so using simple and sophisticated models. So I mean this, this counterfactual approach and this augmented synthetic control model in order to, you know, estimate the scale of value added, gross value added, and so divided this figure so between this households, enterprise, and you know, government sector. And look, another one important issue, and another one, so some kind of categorical imperative. So when it comes to, you know, some unusual situation, crises, and I couldn't agree more with Thanos that we should have also some kind of, you know, scenarios, prognosis, how to, you know, foretell the future in this context. And so, as I said earlier, so Statistics Poland has a comprehensive spectrum of experimental research, so as I could think of. But so maybe during the next. And at the end of the day, you mentioned about this journal. So I encourage you to read my article about this using big data. I'm so sorry for some kind of, you know, advertisement. Concerning how to implement extensive entropy method and big data sources in order to improve, you know, BOP. Thank you.
And Marek, I'm absolutely sure that we will also disappear. We will also share this article via the Secretariat with the whole audience. So many thanks for these examples. And I would like to say the different answers provided and the different organizational steps perhaps also included for bringing statistics in a position to answer questions. Let me say that's very clear. So now, the panel is almost over, but that means that there is a time for any remaining questions, observations, comments, whatever from your side, because you may have the feeling that important issues are missing. Then it would be really your chance, but also any other ideas that you would like to bring in is more than welcome. Yes, please.
Thank you. I'll try to be very brief. It will be difficult because actually you said a lot indeed, and it's getting very inspiring. So inspiring that it's difficult to go to lunch after that. But I'd like to reflect on what Thanos you said as well about, you know, going back to fundamentals. And this is also something we've been reflecting as IFC in a recent publication where we discuss about the evolving role of official statistics and in central banks, looking really far back in history. And in fact, we came down quite ironically to one bottom line. The more innovation is changing, the more we're going back to fundamentals. It looks like bizarre, but that's what actually we're talking about. I mean, how many policy speech we are reading that start with, we are living in unprecedented times, we are living through innovation times. How many of speeches that we're reading or listening are starting with, well, actually, there are some fundamental structural things that are there, and we should actually pick up as really the signal. So I agree with you that in a way, you know, we should actually look back at what we are and what is our comparative advantage among all this kind of noise that is surrounding us. So I would like to share a view here. If I project myself in, you know, 10, 15, 20 years, I would say that, before counting, as you said, classifying is more important. That's where we have comparative advantage. We don't have comparative advantage of data. I mean, data now is produced by everyone, literally. It was not the case a couple of decades ago where we had the monopoly of producing official data. Now data is actually produced, as we saw yesterday, by the Financial Times or other providers. Now, what we have, however, is how do we classify and so that we give birth to that number. And this is something that not only we can do, I think this is something we should do, because ultimately that's the responsibility of official authoritative institution like ours to do this. Yeah. Thank you.
Many thanks. So I'm not sure whether that was really a question or more a comment, let me say. Yes, please.
Thank you for sharing your useful, very interesting insights. I wanted to mention, maybe echo what was just said. Maybe we have all the data we have already. Maybe we need alternative presentations of the data that the data providers can put together, and I think the IMF can play a big role. So the trunk is there. It's about how do you slice the data and provide alternative presentations of the same data to tell the narrative or to help the policymaker make the decision. Thank you.
Yeah, many thanks. So let me also close this question, and I would like to ask you, if you would like to give an answer in 20 to 30 seconds, more or less. And if you don't want to answer this question, you can also answer my question in 20 or 30 seconds. What are your expectations about the topic of the External Statistics Conference, or the topics to be discussed in 10 years' time from right now? So very shortly, so a few seconds to think about it, because we talked about the future. And this question directly related to you. So we start here with you. Carlos, go this way around, and we stop then with me. Just very short answers.
I just wanted to say, Pinar, that if I take something away from this conference is the anecdote or the image of the octopus. I think that was very telling. That was excellent. So, I mean, I take the request, and we are aware that there is a role to play by international organizations, because we are asking a lot this idea of the need to cooperate, to data share, etc., but we are not finding a way to do it. And we have found some ways at the IMF to do it, which was serving as a platform, and we have done this for direct investment with the CDIS, for portfolio with the CPIS, but there are still so many challenges out there. We have the issue of remittances, where we have asymmetric access to the right information. So exchanging inflows and outflows across countries would be extremely useful to give answers to these important questions. So I take the point that we have a role to play, and we will be very happy to discuss with countries how can we find ways to help. But even in Europe, I mean, I was discussing 2 days ago with the colleagues from the working group, and they were finding challenges to get access to information that is available in Europe, but is not available in your country, which seems to me incredible, because in theory there is enough coverage at the legal level to have European legislation that permits us, to have something that could work at the European level. So we need to continue, looking for solutions across the board. And in terms of what should come next as the next topic for the conference, in 10 years' time, do I still have a job?
Many thanks. So we directly go on. Anastasios.
Yes, thank you very much. I very much agree, first of all, with the comment that Pinar made a couple of minutes ago, that data is there. Actually, the data is there. What we need to do is, and then I will come to the comment of Olivier, what we need to do is to wisely use it, And this passes through our job, through the job that we know best doing ourselves. I mean, to find the way to organize it in a meaningful way, and then start counting. Now, in 10 years from now, I'm sure that I will have to be an oracle or something like that, which is not my strong point. But we'll definitely keep on talking about the pertinence of our indicators in measuring the phenomena in our society. I don't know if we're still going to call it GDP or enhanced GDP, or we'll have GDP star or double star or things like that. But we will definitely discuss about the different sources that we'll have to use to benefit from. And my punchline is the fact that the way that economy and society is being like decentralizing, producing information that comes in different, not only locations, but also in different bits and pieces, and has to be combined in order to make sense out of it, then we also have to follow that way in our approach in collecting data and using data. I mean, gone are the days where we will find the top administrative source and or the top controlled experiment through which we're going to go to collect data out there. Now we have to do work in finding the suitable sources, including privately held data. I don't want to go too much into detail, but because there's no time. But yes, but then we'll have to do our work, the work for which we're known.
No, thank you. Given that we are at minus 3 minutes by now, let me just very shortly follow up on the sort of Olivier. I think one other aspect where we as statistical community can really make a difference is with respect to quality. Because, of course, a lot of data is out there. Also, let's say users know, broadly speaking, how to maybe link different data sources. But still, I think also beyond classification, I think to follow our quality frameworks and quality assurance mechanism and to really be picky on how we link various data sources and also push further for identifiers, etc. I think this is also one aspect that really differentiates us and which is extremely important when we want to make statistics out of data or directly also information that is fit for evidence-based decision-making. So, and for the 10 years, I leave to others.
Murray, that's to you. 10 seconds.
Sure. So some kind of my recipe and my vision. So gradual replacement of traditional statistics with, you know, this big data technology and administrative registers and all reliable sources of data, and being for, I mean, this is a recipe for Statistics Poland and National Statistical Institutes, widely speaking, and being a warrior of quality because of this, you know, our, as I said, compulsory being so trying to solve this problem of hallucination of AI. This is the huge discussion not only in Europe but in United Nations about so open our databases as a learning set for artificial intelligence. We mustn't forget about the quality. So this is the key issue. You mustn't forget that we are living in time where poor quality, high quality information is crowded out by, you know, not so good quality information in the context of fake news, misinformation and disinformation. And I'd like to close the last one, I promise, sentence. I mentioned about it. National Statistical Institute should be so an anti-hallucinogenic remedy for it. Thank you.
May I, yes? I think that I have a question. Will there be any conference? What comes to my mind is we will have our own AI assistants which will be discussing on the best code, what are the global tendencies in external statistics.
Well, I see. Well, that's for the organizers to think about it, I would like to say. And let me say, I was also asked by the organizers to make a conclusion. That's what I would like to do, and I would like to conclude in the way as you did, Marek. You mentioned Immanuel Kant. You said, well, agility and flexibility is a kind of a categorical imperative. I would like to reword it a little bit. It perhaps directly follows from a direct categorical imperative, because the general idea is, and this is what we can take perhaps home with all the ideas, we should do what we think should become a natural law. That all that we give the good examples and all the others will follow, and we can trust on them. Let's work on that, and I would like to thank the panelists and close the session with a big applause.
Don't do anything, just speak.
Okay, just speak. Yeah.
I think we have to wait a bit more. Okay, ladies and gentlemen, let's welcome you to the session on integrating data sources to provide novel information. I will repeat once more, my name is Aiga Osa. I am the head of Data and Statistics Department at the Central Bank of Latvia, and it is my sincere pleasure to be here and to be invited to chair this session as well. To keep it timely and constructive, I would like to ask the speakers, yes, to be disciplined in timing and have no more than 15 minutes for presentation. And also to the audience, I would kindly ask to keep or hold your questions until the end of all presentations. Today we have 5 excellent presentations and distinguished speakers from national statistical institutions, central banks, and international organizations. Together, the presentations will show how statistical systems are adapting to a more complex global economy where production is fragmented, firms are multinational, and traditional data sources are no longer sufficient on their own. We will now begin the first presentation, Rethinking Data Collection Systems for a Globalized Production Landscape. And it is my pleasure to introduce you with the first speaker, Sixto Muriel from National Statistical Institute of Spain. Sixto currently leads a large case unit and works directly with multinational enterprises. So Sixto, the floor is yours.
Well, thank you very much, Chair. Thank you to the organizer for inviting me to be here with you. Well, the idea of this presentation is to show you the upcoming plans that we have in the National Statistical Office of Spain for improving the data collection system on multinational enterprises in order to address the challenge of measuring global production arrangements in an increasingly global context, and specifically to improve the quality of the data that are collected from these MNEs. I will start by outlining the issues that have motivated this process of rethinking how to collect data from multinationals that are key for understanding the idea of MNE data MD data is the project that we are currently launching and developing at national level to address this challenge of collecting data from multinationals as requested by an accurate measure of the global production arrangements in a global context. And I will conclude with some key quick takeaways and reflections. Well, motivations. The first motivation is, of course, the challenge of globalization. Globalization is changing the world, it's changing the economy, and has radically transformed how firms operate and interact in a global context. In this new context, MNEs have emerged as key players, reshaping global patterns of global trends of investment, employment, production, trade, crossing national borders, and through an intricate network of affiliates, subsidiaries, and partners. Because global production is nowadays fragmented across countries. And however, statisticians, specifically national accountants, still try to measure gross domestic product. So the national contribution to this global production, the national contribution to the creation of a global value. And this is a typical supply and simple value chain of a multinational company. And this is what we would like to see and measure as statisticians. However, unfortunately, this is what our eyes actually see. Because there are parts of the production process of the multinational that take place abroad, and we do not see it. There are other parts of the production process that are carried out by units, affiliates, that are not sampled in our surveys. So we do not see them either. And in general, we all know that traditional sources as custom statistics fail to fully capture the economic reality of some phenomenon. For instance, when goods are traded without crossing borders, or when goods are crossing borders without being traded, without changing ownership. The second motivation is the birth of the Spanish LCU. The Spanish LCU was created in 2022 as a new division within the structure of the statistical office, dealing directly with the head and the managers of big multinational companies. We depend directly on the president of INE, which underlines also our very transversal role within the organization, because our work in the end feed out national accounts, business statistics, and also is closely related to the data collection. And we have in our portfolio 60 very big multinational companies that are operating in the Spanish economy, that are covering 4.2% of the total employment. It means 900,000 employees and 1.5 trillion euros of turnover. It means that we are covering a very significant part of the Spanish economy if we keep in mind that the Spanish GDP is around 1.6 trillion euros. And in this portfolio, we are analyzing, first we are delineating statistically these multinational companies, what we call the profiling of these multinationals. And we are analyzing this kind of global production arrangement and how they are recorded in the statistical sources. Processing, factory-less production, merchanting, intellectual property products, another kind of transaction where goods are traded and are not crossing borders. And look, in these 60 MNEs, we have found that in 48 of these, out of these 60 MNEs, they are involved in global arrangements, in this kind of global arrangements. And we have found also that in many cases, there are recording issues, recording deficiencies in these transactions. And in some particular cases, in 8, 9 cases, we have found very significant issues affecting hundreds of millions of euros. The third motivation is the evolving role of the LCUs in the international arena. The LCU are becoming key players in a statistical office, in national statistical offices. They are specialized in profiling M&Es and analyzing their global production arrangements, but they are evolving to models where the LCU carries out a full consistency checks of all the data reported by the M&E. And these validated microdata are feeding out our economic statistics. And here, the Netherlands or Denmark are leading examples. And ultimately, the LCUs are evolving to models where the LCU staff are real account managers of the M&Es, supporting the data collection from the M&Es through a centralized channel, as Canada, Ireland, or UK are already doing. And according to our experience in Spain, the companies are demanding to change the data collection paradigm in these big multinational enterprises, because they are really aware about the relevance of the macroeconomic indicators and the official statistics. They are really aware about the complexity of their business flows, and they are really aware about the impact of their flows in our statistics. And they are demanding, in many cases, to change the traditional approach of collecting data through their affiliates by only one channel connecting the statistical office and the multinational companies, and supporting, in the end, the data collection for all the business statistics. Only one channel that allows them a higher control on the data reported to the statistical office for statistical purposes, and facilitating to the statistical office also the control and the depuration of this information, and at the same time lowering the response burden. So this is the idea of the M&E data project. What we are proposing internally is an exhaustive, centralized, and fully digital reporting system, a one-stop channel connecting the multinational company and the national statistical office that will support, in the end, our entire system of economic statistics, that will be enabled, will ensure a full internal consistency of the business flows that are reported to the statistical office, and will facilitate transversal data cleaning and imputation for the statistical office. And why not? Opening the door to the provision of government-to-business, G2B, data-related services as a counterpart. For instance, a kind of statistical analysis of their business flows, their activities in the context of the sector that they belong to. But of course, we cannot change the engine of the plane while the plane is still flying. So we will start in a short term by covering just a particular statistical operation, which is International Trade on Services Survey, which represent our most urgent needs in terms of globalization measures. And probably adding some new variables that will allow us to face the new demands and the new statistical rules of the new accounting standard, the SNA 2025 and BPN 7. But of course, the project will be born from the outset with the final aim of supporting our entire system of economic statistics. Let me a brief methodological, technological note about the digital data collection. Our IT departments have considered different solutions, web services, the use of a kind of exchange file protocol, and they finally have chosen a very modern alternative, which consists of the use of a REST API, which is a very flexible alternative that will be aligned with widely used web services standards, and that will be based on the use of the JSON format, and will be very easy to integrate and to implement. And a key point of the project from the technological point of view will be also to store all the information that will be collected from the M&E in a centralized database, that will facilitate the management, the validation, and the traceability of the data, and will be connected with all the codification system and the metadata structures of the different statistical domains. So we will ensure the consistency, the traceability, the interoperability, and the reuse of the information. M&E data supposes a horizontal vision of the production of economic statistics that confront with the traditional stovepipe approach, the vertical vision of the production of each statistical domain. So M&E data is not only about the implementation of a new and fully digital reporting system. And it's not only about a project of combining information from different sources, M&E data for M&E, some traditional surveys for the rest of the business population. This is about changing mindset across the organization, and we know that it always takes time. This is the reason why we will start step by step, and we have started this year in 2026 with a proof of concept of the project, a pilot phase, using 2-3 selected multinationals, where we are going to try the new digital collection system. And once this proof will be successful, we will move on the second step, that probably will be in 2028, where we are trying to extend this new approach to a higher number of M&Es. And in the long run, the final aim will be to use this new approach for collecting data from M&Es to other statistical action beyond international trade on services survey. So just for concluding, globalization is changing the world, it's changing the way we see and we understand the economy. The large cases unit and the creation of large cases units represent a bold step toward a more adaptive and relevant statistical system. And this project, M&E Data, builds on this foundation, fostering collaboration between M&Es and the statistical offices, enhances both data quality and institutional trust. Together, all these efforts represent or reflect a forward-looking vision that will be very well aligned with how we see ourselves in 2030, in the coming years. And we'll try to be prepared to the implementation of a new accounting and statistical standard in 2030. So it's preparing us for the challenges of a rapidly evolving world. Thank you very much.
Thanks, Sixto. It was very inspiring in my mind, so good luck with next challenges. So we now move forward to our second presentation, an anatomy of external sector, evidence from Switzerland, which will be presented by Lorenz Wicht. Lorenz is a senior economist at the Swiss National Bank, whose research focuses on international economics and current account dynamics. So Lorenz, please.
Thank you for the kind introduction, and thank you for the opportunity to present our work. This is joint work with Pinar Yassin. We are both from the Swiss National Bank, so please note that the usual disclaimer applies. These are our own views. All right, so to take a step back in the policy discussion, we've seen in recent months that global imbalances and external rebalancing are very much back in the policy focus, both at the IMF or the G20. And the main question really is whether rebalancing is warranted, and if so, how do we rebalance? And this is a complex question. As we heard already yesterday, there is a real side of the question if we look at the current account, and there's a financial side to the story if we look at the IIP, the net position. This is, of course, tied together and underpinned by the two external sector foundations, the balance of payments identity and the stock flow reconciliation, that really needs no introduction in this particular room. The common denominator, however, is that when we talk about external rebalancing, the standard understanding by both policymakers and academics is that this is a purely macro outcome. So if there is a change, it's purely driven by macroeconomic forces. This, however, is kind of at odds with the substantial literature that show that for pockets of the external sector, firm-level outcomes, firm-level heterogeneity can in fact drive macro outcomes. This has been shown for the trade literature, but also for multinational production, and also for the current account in a recent paper. So in this paper, what we try to do is to bridge those two approaches and to analyze the role of micro-level heterogeneity in driving external sector outcomes in a comprehensive manner. So how do we do this? We make two main contributions with this paper. First, we construct a unique, comprehensive firm-level external sector dataset using data for Switzerland. Using that dataset, we establish three new sets of empirical facts on the micro-level drivers of the external sector. We look at three things: the micro-level foundations, characteristics of firms driving external sector outcomes, and choices. And what we find is that the external sector is granular, so across all outcomes of the external sector, from current account to the IIP. And there are strong interdependencies across real and financial linkages at the micro level. Turning to characteristic, what we find is that the macro outcomes are very much dominated by large, complex, and foreign-owned groups in the case of Switzerland. Relative to choices, we find that large firms behave differently. Their external sector linkages are more complex, they defy gravity, and they're also more exposed to foreign currencies. And with those results, there are important policy implications for the discussion that we're currently having. First, the aggregates, they can conceal the effective distribution of risks and exposures within an economy relative to the rest of the world. And so echoing to what Pinar's remarked this morning, access to more granular data can be key to properly assess and manage those risks. And by granular data here, we mean maybe a different breakdown that looks at small versus large firms. So for the rest of this presentation, I'll quickly walk you through how we built our data set, and then our main results. I'll keep it very high level on account of the time, and then conclude. So for this work, the data creation was really what took the most part, and we had to proceed in three steps. First, we gathered micro-level sources that underlie Switzerland's official balance of payments and IAP statistics. This is first the administrative customs data for goods trade, but then also many SMD surveys that are compiled in-house to compile the official statistics. That's the current account surveys, the capital linkages surveys, and then parts of banking statistics surveys that are relevant for cross-border relationships. In the second step, we had to complement those micro-level data sources with micro-level estimates. The idea in our approach was really to have a comprehensive view of the firm and not forget some pockets because firm-level data is not available. We did this for the following component for labor income, where the data is only available at an aggregate level. For portfolio equity and debt, in the case of Switzerland, we don't have access to SEC-by-SEC data. And we complemented also with some estimates of capital flows and valuation changes in the case that it was not readily available at the micro level. The third step was to put everything together in a comprehensive manner so that we can compare data sources. So what we did was to build enterprise groups using what we already discussed, we heard about in this conference, under grouping all entities resident in Switzerland that are controlled by the same ultimate institutional unit. We take this data from a commercial data source from Dun & Bradstreet that also gives us nice information on group structure and also some metadata. So in the end, we end up with a panel where we have the entire external sectors generated by corporations, both financial and non-financial, current accounts, cross-border, stocks, capital flows, and valuation changes. We have about 12,000 groups in the current account, about 1,300 groups on the financial side. We keep track of components, partner country, currency, and we have a time dimension at the yearly frequency from starting in 2016, ending in 2024. And of course, we keep track also of the direction of the linkages across the different outcomes. We do a pretty good job at explaining aggregate statistics. We cover about 84% of current account gross flows, so receipts plus expenses, and about 2/3 of stocks. What we don't have in the data are households, the government, the SNB. In terms of how we match net outcomes, which are generally what policymakers are interested in, we do a very good job at matching the current account balance for Switzerland. This is the top left figure. But for the NIP, for example, we have a very different picture from the official statistics. It's a negative net position, whereas Switzerland has a positive and a large positive position, meaning that most of the actual positive NIP is driven by the SNB and households. So with this data set, we can turn to our first results, which is that the external sector is granular. So in our paper, the relevant measure of group size will be the total linkages for group I. So we sum up all the linkages across the entire period, and then we rank the groups according to size, with a low rank associated with a large group. And what you can see is that the top left graph plots the cumulative share explained by the top groups in total linkages across all 4 outcomes. And this is very concentrated towards a few large groups. The top 5, for example, they account for about 20% of total external sector linkages. If you go to the top 50 or top 100, we are well above half of total linkages. So knowing what the large firms are doing, you know what happens in the aggregate. This translates to net outcomes in terms of current account and NIAP, but also the stock flow reconciliation. If we look at the current account balance, this is the right top graph, you see that the accumulated current account balance generated by the top groups really skyrockets for the first large groups and then slowly declines, meaning that smaller groups tend to have a deficit. And so the current account surplus is really generated by the largest firm. In contrast, if you look at the NIIP, this is the bottom left graph, you also see that the top 5, they explain for half of the position, the negative NIIP. It's smoothly decline, but with the top 100, you explain most of the actual position, the aggregate position. In terms of the stock flow reconciliation about dynamics, you mostly see that most of the activity or the movements happen within the top 100 firms. And there are strong offsetting patterns across capital flows and valuation changes. Importantly, so this is looking at different outcomes separately, but what we can show is that there are strong interdependencies across those outcomes. First, we show here the rank correlation between groups, between the groups in the current account and between the IIP. And you see this positive correlation between their ranks, meaning that a firm that is important for the current account tends to be important for cross-border stocks. This is not perfect, so there are some groups that are mostly active in the current account or the IIP, but you still see that they tend to be active on both sides. Another thing that we could look at was to revisit the macro identities at the micro level to see whether they hold and if we can confirm those strong interdependencies. And we see that yes, firms that tend to run a current account balance surplus tend also to run a surplus in the financial account. But this is pretty weak in terms of explanatory power. What we don't see is that a current account surplus translates into accumulation of stocks. This relationship is quite low. Importantly, on the financial side, this is very significant, and of course this is a law of motion. We expect to see something, but what we wanted to show with this second table was to say that valuation changes are a key driver of the change in cross-border stocks, or a key channel through which there is external rebalancing at the micro level. It's not all going through the financial account, which is an important insight for how we think about the external rebalancing in general. Now, so we have established the fact that large groups are very important for our external sector outcomes. And now we turn to characteristics. What are those firms, or how do we think about those firms? And the first thing we wanted to do is to establish that large firms in terms of linkages are also large in other dimensions. So we relate the percentile of the group, which is a normalization of the group's rank from 0 to 1, with low ranks associated with large percentiles, that we relate to employment and the number of entities within the group. And we see that both across the current account and the IIP, there's a positive and statistically significant relationship, meaning that those groups that are large in linkages, in terms of linkages, are also large in other real aspects of how we think about group size, think about group size. They also tend to be foreign-owned. What we plot here, and I'll focus on account of the time, because I'm running out of time, I'll focus on the left-hand side graph. We see that ownership, the share of Swiss ownership within percentile tends to decline over the firm size distribution. So the larger groups tend to be more foreign-owned. And you see above in the really largest percentiles, the share of Swiss ownership is below 50%. Now, what does it mean for their choices? I'll focus here on the current account. That's already two, yeah. So here what we wanted to understand was whether there is a change in the composition of linkages across the percentiles. And this is the case. We compute the share by component in those in the percentiles across components and see whether there is a systematic shift. And we see that large groups tend to rely less on goods trade, but rely more on other types of external sectoral linkages, such as merchanting, services, income. And that echoes one thing that our colleague from Costa Rica said yesterday, that looking just at goods trade might not be a complete picture of the activities of a multinational, and so a shock to goods trade might transmit through the current account through other components and have spillovers. In terms of country exposure, we wanted to understand better the forces of gravity. And what we did was to plot the number of partner countries and the average distance to a partner country over the firm size distribution. And we see a very strong very strong evidence for gravity. So larger groups tend to trade with more countries, but also trade with countries that are further away. Importantly, we see also that they match exposures between real flows and current account, real flows and financial flows. So if a country is important for the current account for a group, it will tend also to be important in the IIP. And this is not a new finding. People have shown this for goods trade, for FDI, but we can show that by excluding, for example, goods trade and FDI, the relationship still holds. And to complete the presentation, I wanted to say a few words about currency exposures. We did a similar exercise than the composition, trying to understand if the share of the currency exposures for a group differs systematically across the firm size distribution, and we do see that there is systematic differences, and importantly for the Swiss National Bank, for example, is to see that the groups use less Swiss francs, less the domestic currency, and are more exposed to foreign currency. And this has important implications for how we think about rebalancing, because those companies, I plot here the net exposures to the Swiss franc or to other currencies. We see that they have a net exposure to other currencies and a negative net exposure to the Swiss franc. The Swiss franc is appreciating, has been appreciating for decades, so it means that those countries are generating valuation losses on their cross-border positions. And if you actually plot the ratio of valuation changes to their stocks, you see that the large firms are actually more exposed, are losing more, have higher valuation losses, such that the burden of external rebalancing might not be equal across all groups, across the firm size distribution. I'm a bit over time, so I'll just leave you with the conclusion. Our main contribution is really this data that we have just started exploring. We do have, there's a large potential for future research. But importantly, this firm level heterogeneity demands some scrutiny in our policy discussions. Thank you.
So I think we challenged you with timing, but you were excellent on that. So yeah, good. The next presentation, data on multinationals within the financial accounts and the international investment position. First steps for the Spanish economy. This presentation will be given by Maria Garcia del Rigo and Ignacio Gonzalez Pascual. So the floor is yours. Is it working? Yeah, thanks. I wanted also to introduce you. You are both from the Central Bank and working in the statistics department and are contributing extensively to the development of external financial statistics. So apologies for not introducing. The floor now is yours.
Thank you. Well, good afternoon to everyone. Thank you. We would like to thank first the organizers for accepting our paper and providing the opportunity to share with you the update on where we stand. So we are going to present first step taken at Banco de España related to data on multinational enterprises within the financial accounts and the IIP. The structure of the presentation will be as follows. I will start with the presentation. I will start with the motivation and the scope of the analysis. Then I will describe the population building process. After that, we will move on to some preliminary results from the IIP and the financial accounts. In particular, Ignacio will go into more detail on how to break down multinational data from one of the main sources for non-financial corporations, which is the Central Balance Sheet Office. Finally, we will conclude with the main takeaways. So, well, the interest in macroeconomic statistics by type of control is beyond doubt. New manuals include a dedicated chapter on globalization, BPM 7, SNA 2025, And the definition of control is complemented with a practical rule, ownership of more than 50% of the voting power. In the manuals, the control breakdown distinguishes between foreign control corporations, public corporations, and national private corporations. For sure, another trigger for doing this analysis is the upcoming European FCC requirement, whose specific details are still to be defined. So, sorry. Turning now to the scope of our paper, the work is focused on the non-financial corporation sector. We analyzed a breakdown of multinational enterprises, distinguishing between the ones that are foreign controlled and domestically controlled, which we refer to as domestic MNEs. Results presented are preliminary, and through the presentation we will explain some assumptions that need to be taken into account. Results are presented on an annual basis, with 2021 as a reference year. So, yeah. In order to obtain data on multinationals, first we have to obtain the we have to define the population. The key idea is that we work for a consistent population between IIP, balance of payments, and national accounts from the beginning. We have established a data flow coordinated with the business register, and we exchange feedback between institutions. The initial population of non-financial corporations is provided from the business register and is therefore enriched with FDI data. In particular, we use the ultimate investing economy, defined as the country that ultimately controls the group. So, with the population defined, we can now move to the preliminary results for the IIP. But first, a quick note on data availability. For the IIP, the main advantage is that most instruments are available at micro level. And this allows us to cross the population with the data. However, some challenges remain for some instruments. On the asset side, deposits are not available at micro level, so, because we have mirror sources. Therefore, this instrument is not incorporated into these results. In addition, trade credits are partly estimated due to data limitations. With this in mind, I will present the patterns observed in the IIP liabilities. We can see clearly two different structures. FCCs are more linked to intra-group and direct investment relationships, especially through unlisted equity, trade credits, and loans. In contrast, domestic MNEs show a more market-based liability structure, with higher relevance of listed equity, debt securities, and derivatives. Turning to the asset side, differentiation also can be observed. FCCs are mainly concentrated in instruments that reflect intra-group financing. By contrast, domestic MNEs invest through equity instruments, both listed and unlisted. To conclude with the IIP, this slide highlights two different internationalization models as we initially expected. FCC tend to have a higher share of external liabilities, while domestic MNEs show a higher share of external assets. Now, before moving to the financial accounts results, let me briefly clarify the data framework. For non-financial corporations, final financial accounts figures combine multiple sources. Among them, the Central Balance Sheet Office is used for selected instruments. My colleague will now present the preliminary evidence based on this source.
Thanks to all the organizers and the audience. As my colleagues has mentioned, there is a growing interest in measuring the contribution of multinationals to national and financial accounts. We distinguish two kinds of multinationals: foreign controlled corporations and domestically controlled. Now we are going to share the first steps that the Statistics Department of the Bank of Spain has taken in this project. The Central Balance Sheet Data Office provides a very rich data sets based on annual financial statements. It includes about 850,000 companies, representing approximately 2/3 of the whole populations of non-financial corporations. The Statistics Department has developed an intermediary system that makes possible to obtain national accounts, financial accounts, from companies' financial statements. To move from the sample to the full Spanish populations of non-financial corporations that is provided by the National Statistics Office, we apply a grossing up process. This process we call MENF, Multiplier of Non-Financial Corporations, and it involves stratification by 37 sectors of activity, 9 sizes, and 3 legal forms, applying outliers detections and considering field demography. Each stratum is assigned a grossing up factor which scales sample data to population totals. Firms with special characteristics are assigned a grossing up factor equal to 1. The process allows traceability, meaning the results can be tracked back to individual firms, and the same process is applying for foreign controlled corporations and domestic MNEs. One of the questions that might arise is the quantitative importance of the grossing up process. In terms of number of firms, of companies, the sample of the Central Balance Sheet Data Office covers approximately 2/3 of the populations of non-financial corporations. But when we look at financial amounts, it covers for MNEs, domestic MNEs, and the rest, the residual set of non-financial corporations, the grossing up process is about 15% of total values. When we talk about foreign controlled corporations, the grossing up process only adds 50% to the sample. So overall, the impact of grossing up is relatively small. In this slide, we test the consistency of this approach. The idea is simple. For all the financial instruments, we compare the sum of foreign controlled corporations, domestic MNEs, the residual firms, and with the results obtained considering all non-financial corporations as a block. And as you can see, the results show very small difference, typically below 1%. The same check can be visualized more intuitively, and The graph confirms the previous results. For each financial instrument, the total obtained by adding subgroups closely match the total of non-financial corporations. Same process is made for liabilities, and the results are the same. Now let's look at the structures of financial position. This slide shows the compositions of financial assets by type of firm. Foreign control corporations have a higher weight in financial derivatives. Domestic MNEs show a higher weight in equity instruments. And residual firms show a relative large volume of currency of deposits. In relation with the liability structures, in general, equity instruments dominate, and the issuance of debt securities is highly concentrated in domestic MNEs. This slide shows the distribution of firms across assets categories. There is a clear distinction between economic weight and number of companies. Residual firms dominate in terms of number of companies, with a number close to 97%. But foreign control corporations and domestic MNEs account for a larger share of financial volumes, close to 60%. For liabilities, the pattern is similar. A large number of firms belongs to the residual group, but foreign control corporations and MNEs carry most of the financial stock. And next, Maria will present our main conclusions.
So, to conclude, the initial IIP results pointed these two distinct internationalization models. For financial accounts, the grossing up approach is promising, and it can be used for selected instruments, but further work is still needed to integrate additional sources. Looking ahead, progress will depend on future statistical requirements, especially for FCCs. And at this stage, the results are preliminary, and further work is needed to ensure full coverage and data quality. Thank you very much for your attention.
Thanks, speakers. So our next speaker is Miguel Diaz from Banco de Portugal, specializing in external statistics, financial accounts, and the international investment position. He says that ownership matters and has an excellent presentation, compilation and analysis of data on non-financial foreign-controlled corporations in Portugal's international investment position. So the floor is yours.
Thank you. So, good afternoon, everyone. My name is Miguel, and I'm from the statistics department at Banco Portugal, and this is my presentation on foreign control corporation statistics for the balance of payments in international investment position. So this will be the agenda for the presentation. So we'll start off with a brief introduction, then move on to the methodology, data sources, and compilation process for the paper. Then for our results, our findings for this work, and then we'll have some conclusions, and we'll look further ahead to see what goals we may have. So To start with the introduction, we can see that firstly, the motivation behind this work stemmed from a recommendation from the Statistical Committee of the European System of Central Banks, the STC, that focused on encouraging the compilation of external statistics with the identification of foreign-controlled corporations, FCCs. And so this work also served to then anticipate the regular production of FCC-related balance of payments and international investment position data, which should begin in 2030, and for which Banco Portugal has already started voluntary transmission last year in 2025. So for the analysis itself, this will be focusing on non-financial corporations, sort of like the last presentation, and then distinguishing between FCCs and non-FCCs, this for external statistics data, more specifically for IIP data, since it will focus on quarterly stocks from 2021 to 2025. And so to kick off the methodology portion, to better understand the concepts behind it, we can firstly ask the question of what is an FCC, what defines it. And so this is classified as a corporation whose head of group, their headquarters, reside in a country different than its own, of course. Thus, if more than 50% of a company's shares, its majority are held by a non-resident headquarters, then, and just a single one, then it is an FCC. And so after this, how do we determine who controls these FCCs? So we use the winner-takes-all approach, assigning a single financial investor who holds directly or indirectly the largest share of ownership. And so if this financial investor holds then a majority stake, then it is considered the UCP, the ultimate controlling parent of this company, and therefore its controller. This may also differ a little bit from other traditional FDI statistics, which follow the proportional approach. And lastly, now taking a look at our data sources and compilation methods for the analysis of FCC data in Portugal's IIP, we can see that to identify FCCs, we used information based on the annual report financial statements that all Portuguese companies must submit for tax and statistical purposes. It's called IES. And secondly, for the compilation of the external statistics themselves with this information, this is done using granular company-level data for all instruments, which then we divide into FCC data and non-FCC, except for trade credits and advances. So for this instrument specifically, since values are estimated based on exports and imports and their respective payment periods, so we applied a structure to this for FCC versus non-FCC based on direct reporting to Banco de Portugal for external statistics purposes. So, starting the overview for the results of this work, we start by taking a look at the overall impact on the Portuguese IIP, both for assets and for liabilities, in terms of total volume in millions of euros, and the FCC's weight in terms of total NFC assets and liabilities. So, firstly for assets, looking at the first graph, graph 1, we can see that FCCs do play a significant role on this side, accounting for approximately 35 to 40% of total NFC foreign assets over the period, maintaining a relatively stable weight throughout this time period. As for liabilities on the second graph below, these account for 60% of total NFC foreign liabilities until the end of 2023, and then rising approximately to 65% from the first quarter of 2024 onwards. The results presented are mostly what was expected for liabilities, as it would make sense that FCC's financing needs are largely met abroad, often by, of course, entities within their own corporate group, and whose headquarters are, of course, located outside of Portugal. And then, overall, we can see that the net impact on the Portuguese IIP for FCCs, for this sort of company, is a negative one, having assets with a much lower value than liabilities. So now, diving further into the analysis, we can now take a look at our findings in terms of the controlling country. This is the country in which the controllers of our FCCs reside. And now, looking at the amounts in millions of euros as well, we start off with assets, as given in the first graph on the right, and we see that the distribution of the main countries remains relatively stable over time, with two notable exceptions, Netherlands and the United States, because both of which become increasingly prominent in the later quarters. Besides this, we can also see that Spain, France, and Italy are also significant controlling economies for the FCC in our analysis. As for the liability side, a similar pattern emerges since the main countries' shares remain broadly stable throughout the time period, and for this side, on the liability side, the most prominent controlling countries are Spain, which are then followed by France and the UK. A clear standout from this analysis is that for both sides, both assets and liabilities, the impact of euro area countries is very large, which was to be expected, and this is a finding that will also direct our analysis up ahead. So now, going a bit further and having taken a look at what the data shows for the relevance of certain controlling economies in terms of assets and liabilities for our FCCs, we now take it a step further and try to find links between the controlling countries of our FCCs and what the direct counterpart countries of their assets and liabilities are. So this means that what we will try to do is investigate for an FCC whose controller is in a certain territory, if the direct counterpart countries of its financial instruments also reside within that same territory. So for this specific case, as you can see, we will be showing only the results regarding the controlling aggregates of the euro area and outside of the euro area, and of course its correspondence with the direct counterparty countries of assets and liabilities. Although there is in my paper data on a country-by-country basis. But now, then taking a look, firstly on our asset side, we can look at the first figure on top, and when comparing FCCs controlled by the euro area with those controlled by non-euro area countries, the former show a much higher concentrator than the latter of assets issued within this area by residents of the controlling area, comparing values of 65 to 70% with those for the non-euro area controllers of 40%. For the liability side below, we can see that the relationship between controlling country and direct counterpart country is much stronger for both controlling aggregates. FCCs controlled by euro area entities have over 90% of their liabilities held within the euro area directly, but in contrast, FCCs controlled by non-euro area entities show ratios below 70%. Some conclusions were taken from these findings. and these are more for the liability side, and these are that accounting for the role of equity and liabilities, which, as we will see next, should be one of the most important components, as these are corporations that whose controllers are located abroad. We can infer from this that FCCs are often either directly owned by their ultimate controlling parent or by intermediate holding companies within the same group, and which are located, of course, in the same controlling economy, in this case the same controlling aggregate area. Also, applying the same reasoning as before, and as we will see in the next slide, external loans should also make up for a huge portion of FCC liabilities. Thus, we can also derive from this that there should be a presence of group-wide financing arrangements, for example, cash pooling, typically concentrated in the group's home country. And finally, we can see that, of course, there was a discrepancy between euro area and non-euro area controlled FCC liabilities, and this may be explained by the fact that maybe some non-euro area groups will need to establish European headquarters in other euro area countries, because this may give them access to some more developed financial markets or more favorable tax regimes as intermediaries. Now, looking at a different perspective on the data compiled, we can take a look at an instrument analysis to see what instruments have the highest importance for this group of non-financial corporations, our FCCs. And starting with the asset side, shown by the graph on the right, three instruments clearly dominate our data, which are equity, loans, and deposits. And of course, and there's also an overall fairly stable distribution of instruments over time. For liabilities, with the graph on the bottom left, as you can see, these show a much higher concentration, with equity representing more than 2/3 of all FCC external liabilities. If we add on to that loans, these make up for almost the entirety of liabilities in the data, and this is consistent with what had already been mentioned before, since it is expected that FCCs are either directly owned or indirectly or by foreign parent companies, which explains the equity portion, and there's also possibly the presence of intra-group financing debt arrangements, and that should explain the loans portion. Now, as for the last component of the results part, we set off to see the distribution of value for our FCC assets and liabilities, taking into account their economic activity sector. As in the previous slides, we will start off with the asset side, in which we can see that the most important activities are manufacturing, wholesale and retail trade, scientific and technical activities, and financial management, insurance, and legal activities. As for liabilities, the figure is a bit different. Other activities are the most prominent economic sector, which includes every single activity not included in the other categories, and then followed by financial, management, insurance and legal activities, and also by manufacturing activities. Possibly the main takeaway from this part of the analysis is that our FCC assets and liabilities are fairly distributed across a large number of economic sectors, and therefore no clear trends appear in regards to the sectors in which foreign group investment focus on. And so, to now finish the presentation, we can take a look at some of the conclusions from this work, starting off with the fact that the compilation of FCC-related data for NFCs provide valuable insights into the role that these sorts of entities play in the Portuguese economy, more specifically their impact on the IIP. Furthermore, this was also very helpful in showing us that the external statistics framework at Banco de Portugal has proven adequate for the timely and robust compilation of FCC statistics. As for the key findings, as you can see over there, these are that FCCs account for around 65% of NFC external liabilities, but less than half of total NFC external assets, that most controlling economies are located within the euro area. Also that there is a stronger link between controlling economy and direct counterpart country on the liability side than on the asset side, especially within the euro area. That equity dominates FCC liabilities, with then for assets, equity and loans being the most significant instruments, and that there isn't a concentration of a single economic activity sector for our FCCs. As for future iterations of this work, these may try to cover both financial and non-financial transactions for these corporations, and we could also think of extending the FCC sample to include financial institutional sectors, since it may also be relevant to study investment trends in the Portuguese economy.
Thanks, Miguel. And now we can go further to the final presentation of this session, Measuring Sustainable Global Production, which will be presented by Elaine Estan from Asian Development Bank. Elaine is Chief Statistician and Director of Data Division, leading work on data and sustainable development in Asia and the Pacific. So the floor is yours.
Thank you. Thank you. First of all, thank you for having me. It's been a wonderful 2 days. It's my first time here in Poland. Lovely place and lovely people. Thank you. And I can imagine the number of thousands of emails that were exchanged in the process of organizing this conference, so hats off to the 3 organizers. What I want to do today is to introduce a data product that the Asian Development Bank has compiled back in August last year. Every year we publish a key indicators report. It is in its 56th year. Last year we are publishing the 57th volume this year. And last year we looked at the environmentally extended multi-regional input-output tables. And this is what I will be presenting on today. Now, many of you know the ADB has been compiling MRIOTs, or multi-regional input-output tables, for the last 10 years, and it's been widely used to look at global value chains analyses. And what we wanted to do was to support our member governments in understanding the linkages between emissions on the one hand and production within the countries, as well as across global value chains. And that's why we extended the MRIOTs to include emissions data. Now, the ADB takes the position that we are facing biodiversity loss, pollution, and changing climate. And all of these are eroding our ecosystems. And this has a direct link to sustainable development in Asia and the Pacific, because we believe, and we have estimated, that more than 75% of the region's economy is moderately or heavily dependent on nature. And these include agriculture, forestry, fisheries, and tourism. So all of these changes in our environment have a real impact on our region and our chances for continued development. And of course, reducing emissions is key to achieving development goals because of the strong association between higher emissions and extreme weather events that cause shocks to agriculture, infrastructure, and of course, labor productivity. And sustainability being a cross-border challenge, especially where our region is highly integrated in global value chains, and what's produced in one country is consumed in another within GVCs, then we need a way to come together to act regionally to resolve some of these environmental challenges. So if we want to reduce emissions across countries, we need to collaborate for regional action. And of course, the first basis is good data. And the first basis for collaboration is of course, harmonized data across countries that countries can then gather around to start talking about solutions. So that's what motivated us to append or extend the MRLTs to include 4 greenhouse gas emissions across 35 sectors of production and consumption across value chains from 2017 to 2023. And we do intend to update the data set regularly and in our process of updating the data to 2024. Our data set covers 72 economies, of which 29 are ADB regional members. And to the best of our knowledge, this is the most comprehensive and extensive up-to-date data set for the Asia-Pacific region. So from our data set, we have 3 key findings, which I'll go through in detail, but generally speaking, these are the takeaways. Asia-Pacific's economic growth exceeded emissions growth in the period of 2017 to 2023. And that's a good news story. That means the region is growing faster than the emissions it was producing. However, there's significant variation within the region. The second point is that Asia-Pacific's emissions from production are actually much more than the region's consumption. And that is not surprising because Asia-Pacific is the factory of the world. And thirdly, reductions in emissions are due to cleaner production in Asia-Pacific. You do see that, but they are not large enough to offset the consumption growth that we see in our region. And let me elaborate a bit more on emissions being the key factor of our development challenges. As we know, greenhouse gas emissions are part of many development issues: water and food security, infrastructural risks, impact on health, regional cooperation and integration, because as I mentioned, Asia-Pacific is highly integrated in GVCs. And with greater unpredictability in weather systems, floods and droughts will hurt food production and affect quantity and quality of water. There are also natural disasters damaging infrastructure and disrupting key service delivery. And of course, from the health side, you have heat stress and weather-related disruptions, which will have labor productivity impacts. And lastly, we found that vulnerable populations are not only the hardest hit when the disaster strikes, but they also tend to recover the most slowly. And communities are often left with fewer resources to adapt and to rebuild. So for all these reasons, tracking emissions at the economy and sector level will equip our regions, governments in our regions, to deal with the growing problem of climate challenges. This chart should not be a surprise to many of us. Asia-Pacific now accounts for nearly half of global emissions. And that, again, is not surprising. Asia-Pacific is home to some of the largest and fastest growing economies, about 60% of global population, and of course, an increasingly important role in manufacturing and supply chains. But when we look at how fast the region has grown in terms of GDP and how much is emitted, we do find a positive story. And what we did was we look at production-based recording, which accounts for emissions emitted during an economy's production activities, regardless of where the goods are finally consumed. We look at the changes in gigatons per CO2 equivalent. X-axis is the changes in GDP growth, and the y-axis is changes in production-based emissions. The 45-degree line tells you countries that fall on the 45-degree line tells you that they are growing economically as fast as their emissions are increasing. And you find that more than half, about 65 out of 72 economies in our data set are actually below the 45-degree line, which means that economies are growing faster than the rate of emissions due to production. Now, of these 65, most of Asia-Pacific economies are still above the horizontal line, so there's still some work to do in the sense that they are growing economically, but the emissions are still growing. Not as fast as you would have predicted on the 45-degree line, but there's still a positive growth in emissions. Europe and North America, on the other hand, are below the horizontal line, which means that they are growing, but their emissions during this period are negative in growth. And that's something our region can learn from. And of course, the finding was in US dollars current terms, but the same finding holds when you look at GDP growth in terms of local currency units. In fact, that is we have a stronger finding when we look at LCUs. So about 70 out of 72 countries are actually on the right side of the curve. The second finding is that when we look at production-based approach, which measures emissions based on where goods and services are produced, and then we look at the consumption-based approach, which looks at emissions where the carbon-embedded goods are finally consumed, and if you could separate the two, we get an interesting picture. Because Asia-Pacific is a net exporter of goods and services, you will find that the net emissions from consumption are actually lower than the emissions from production compared to the rest of the world. So on the left-hand side chart, you see that the bold line, Asia-Pacific's production-based emissions have been going up, and the others, rest of the world has been flat or declining. But when you look at the consumption-based emissions, you find that Asia-Pacific, which is the broken red line, has been rising over time, while the rest of the world has been flat. So this is a consumption story coming out of Asia as well. And if we look ahead, because half of Asia-Pacific is in the middle class, and then expected 1 billion people would join the middle class in Asia and the Pacific over the next 10 years, we would expect the broken red line to keep going up. So the third finding is when we unpack this final demand growth. So we break the shifts in emissions to three drivers: factors directly affecting production, intermediate input composition, and of course, final demand. And the first bar on the left is global final demand, and you see that it increased emissions by 12.2 gigatons in CO2 equivalent between 2017 and 2023. And of course, cleaner production globally reduced emissions by 9.2 gigatons, so the net increase was 3. But the second bar from the left, for Asia Pacific, we see that the cleaner production reduced emissions by just 2.1, and intermediate input composition by 1.9, but the final demand increased emissions by 7.4 gigatons. So the net increase for Asia Pacific was 3.3 gigatons CO2 equivalent. And as I alluded to, Asia Pacific final demand will be rising during this time and driving a lot of emissions growth going ahead. It needs to think much more than cleaner production, but also about the consumption side. Okay. So if you're interested in more findings and more data, please take a look at the QR code and the report. And I just want to link what I've been talking about to yesterday's discussion. I thought yesterday my key takeaway was that good statistics is the foundation for democracy, right? That's absolutely true. It's the first step to getting people together and talking about issues. We need good data. And I would suggest that the first step in good statistics is transparency. And that is why in that spirit of transparency, we've put all our assumptions, limitations, methodological choices all up in a report. And why do we do that? Because we want to be transparent, and also secondly, to facilitate peer review. And that's the second step in developing good statistics. So may I encourage all of you on a cold and dark, rainy night, and you have nothing to do, please take a look and then send us your feedback. I also invite collaboration. If you think that you can use this data set to work together and develop knowledge products, please do let me know. And another link to what we've been discussing yesterday, we discussed a lot about fragmentation. And we haven't quite asked the question, what is the environmental cost to fragmentation? And I'll suggest that this tool, this data set, is something that we can use to answer that question. So do drop me an email should you wish to collaborate and use this data set. I lost track of time. I hope I'm okay. But thank you very much for your attention. Thank you.
It's okay. Thank you, Eileen. And I think that, no, I hope you are not very tired after lunch, and I usually know that sessions after lunch are the hardest ones, yes, to get the afternoon. So with my pleasure, I would like to open the questions and answer session, so maybe colleagues with microphones can help.
So thank you very much for the good presentations and the excellent work that has been shown here today. I would like to ask first a question to Sixto on this idea of linking the to the M&E's data. On this link that you mentioned, is it to their accounting system, or is it beyond that and to their operational systems, and therefore to elaborate a bit on that, because that would mean different things. Then for Miguel on the FCC, what would be the single most important key ingredient to make what you did, because the details that you produce are very complete. What was the key factor, the single key factor to make it happen?
Let's have another questions. Okay, if not, maybe I then will go with my very open one question. And for each of you, maybe quite shortly you can answer to it. What do you see the most important opportunity and the biggest challenge in integrated multiple data sources? So maybe then we can start with Sixto. Could you please be the first?
Yes, thank you for the questions. First, referring to the question from DCB, Jorge. Well, the system that we have in mind is indeed very flexible. The idea is to make available a digital channel for connecting the statistical office and the multinational company. So the way in which the multinational will organize their data to be reported through this system will be up to them. I mean, they can choose to simply use an Excel table with a set of variables, because we like to talk about a set of variables instead of a questionnaire in this system. So they can organize in a simple table this set of variables. They can use a a client, a web service to transmit the data through the API REST, and it's very simple. But of course, the ideal way to do this transmission will be in the end to connect their systems directly with the system of the statistical office through this digital channel. But this is a work that will be faced by the multinational company if they want, and we can take time to make this. In principle, the system will function with a simple Excel file that will be converted to a JSON format and transmitted to the API REST. But the ideal situation will be connecting directly the system of the company with the statistical office. Thank you.
Good, thank you. Lawrence, maybe you could pick up my question.
Sure, I can try. So I'm a data user, I'm a researcher, so I'll have to answer from that point of view. So maybe I can give you the background why we started this big project. We had puzzles, we didn't understand our data anymore. The current account doesn't react to the exchange rate, the Swiss franc is appreciating, we have a huge goods trade surplus that increases despite the 2015 shock. And so going to the data, to the micro level data, was really our answer to understand what happens from a macro perspective. So that was the biggest opportunity. And in our team, we started from just understanding a couple of firms to having the entire picture. The main challenge was to get the data together, and it's been not easy because of confidentiality reason. We had to jump through hoops to also be able to link to do what we did. But I think for our understanding of the Swiss data, that has been key.
Good, excellent. Maria?
Okay, well, just to add something, but the biggest challenge, I think, to integrate different sources is to have consistency among them. And, well, I think new manuals have been doing like a great effort to be harmonized, which I think is crucial. And well, for example, in this case, on the FCCs, we are doing like a great effort, like from the beginning, to have the same population between the NSI and central bank, so we can assure this consistency from the beginning and not the other way around, which is more complicated.
Good. Ignacio?
Hello. I'm not very used to work with integrating different sources because we work essentially with financial statements. It, of course, has problems because we have lack of information that we try to complete with another sources inside the statistics department, mainly. But integrated with the financial statements. And with this way, we have some advantages. We avoid vertical discrepancies between the real and financial economy. We have no vertical discrepancies. We don't have asymmetries. We don't need to apply hierarchies. So I suppose it's very challenging to integrate different sources. It's rich, but it's challenging.
Good. Miguel?
Yes. So to answer George's question, first, so what was the single key factor or the most important factor to be able to get results like ours? I think it's the completeness of our data sources, and that's I don't really have any doubts about that. The fact that we have granular data in the manner that we have is what allows us to compile data such as this, whether it is regarding the counterpart countries, the instruments, to know at a company level what each company contributes to these aggregates is what allows us to do this, and also their characterization of if they're a foreign-controlled corporation or not, which is also a very comprehensive and a very complete data set on its own. So yeah, that's the most important factor, undoubtedly. And to answer the other question, I think sometimes maybe one of the most important challenges that we sometimes face, and speaking a little from experience, when trying to get some data, especially from direct reporting, sometimes there's a little bit of difficulty trying to meet entities a little bit of the way in trying to making them understand what is the data that we need, what is the data, what we actually need to produce and to compile the statistics, but in a manner that they understand, since sometimes we speak two completely different languages, and I think that's a huge step and a huge part of gathering quality data and then being able to integrate it throughout all of our sources.
Thanks. And Elaine?
Thank you. Thank you. That's a very interesting question and a tough one. The promise of integrating different data sets is simply, I think, that there are increasing returns to scale when we're talking about data. Two data sets can probably tell us much more than the sum of them individually. But of course, the cost of integration can be exponential as well. And from a managerial point of view, we just have to make the decision of when the marginal benefits are greater than the marginal cost, right? But in general, I would say that in this case, the EEMRLTs, we wanted to integrate as many of our regional members as we could. And in discussing with the regional members, I think we also built their capacity. So for example, if their SUTs haven't been published for a number of years, we could spot them and support them in developing more up-to-date ones. Or because we do balancing across SUTs in the SNA framework, we can also detect certain anomalies that we could then have that discussion with countries. And I think that has been really, really useful from the point of view of the Asian Development Bank. But certainly I think after a while, when you're trying to integrate the 100th data set, I think that's where there needs to be a judgment call to say we don't really need that anymore. Yeah, thank you.
Thanks. Sixto?
Thank you, Chair. Yes, I will reply also to your question. I will mention two different aspects related to the combination of sources. The first is the organizational methods, because combining different data sources usually means combining different teams producing the same theme or the same results. And this is always challenging, as I have mentioned during my presentation. We are transforming the way that we produce statistics step by step, and we are evolving to a more transversal view of the production of statistics, combining different sources of information. And it's always hard in organizations that are very traditional, as statistical offices or central banks. So this is a challenge, also from the point of view of the management of the human resources. And the second point is a methodological one, because when we combine different sources, we are in the risk of losing granularity, because different sources have different details, different granularities. sometimes we have very relevant methodological challenges to keep these granularities, which are really very, very important nowadays. But at the same time, taking the benefits of using these different sources. Thank you.
Very good. We still can have some time for some more questions. Excellent.
First of all, thank you very much for the very interesting presentation. I have a question to the Spanish colleagues, actually both from the Statistical Institute and the Central Bank. Could you elaborate a little bit about the collaboration between the Central Bank and the Statistical Office? Because this is what you are doing is looking on the same enterprises from two different angles. So are you able to confront the data from Central Balance Sheet Office with the data from the large case unit, or do you able to exchange data from the large case units, provide this information to the bank? What is the collaboration in this field, or is it, if it is not possible, what are the obstacles and what can be done in the future to improve this kind of collaboration? Thank you.
And I think we had another. Yes.
A question for Miguel, or for others who are basically incorporating different data sets. So my question is that when we're basically incorporating two different sets, do you respect the total aggregates? So for example, if you have a financial statement and the company gives you the total assets and total liabilities, but then you don't have the granular data that you mentioned, and you're basically substituting or complementing with other data sources, do you change, in addition, then the total assets, total liabilities? Thank you.
Good. Then Spain colleagues. Which one? Good.
Hello. Yes, there is a growing collaborations between the National Statistic Office and the Department of Statistics, the Statistic Department of the Bank of Spain. They provide us data about populations, and we share with them what we have called Project MEMF, that is only a source of contrast for national accounts, but we said. And of course, we compare our outputs with some statistics of the National Statistic Office, by the structural sample, structural survey of companies. Yes, and the results are promising.
Yes, I would like to add something about cooperation. Yes, I think that, for instance, in the example that have been presented by my colleagues from the central bank, there is a pillar of information which is the business register. And the work of the LCU making the profiling of M&Es is integrated directly in the business, in the national business register, and also in the EGR, in the European business register. And this is the pillar to make the disaggregation between foreign control corporations and domestic corporations. This is an example. But for the remaining works of the LCU, we have formally a group that we have called Globalization Group, where the central bank and also the tax office and, of course, the different compilers of the statistical office are represented, where we bring to the table all the results of the findings of the LCU, and we coordinate how these findings and when these findings are incorporated to the different statistical domain in a consistent way.
Good. And yes, Miguel.
To answer your question, yes, I do believe we do, but so we are very fortunate in having direct reporting of a lot of the in this case the financial instruments and of a lot of the data for all of the corporations of the data that we produce and that we compile. So so in terms of what we have direct reporting, yes, we just utilize the values that we are given, but for the things that we have to estimate, yes, we try to take into account the totals from the financial statements, especially when it comes to not just the external statistics, but also for our contribution to financial accounts. We always try to respect the totals and the totals when we're talking about the aggregates for the institutional sectors as well.
Good. And with this, I would like to sincerely thank all the speakers for this session, and again also to the audience. So with a round of applauses, and we can conclude. Yes. Thanks. And now it's coffee break.
So this is the angle from which it has more light. You know, the previous day I was not able to see what is going on. But welcome to the last part of this nice conference, and to our I would say last session, and which will be on digitalization and external statistics. The first presentation is going to be by François Robin from the Bank of France. Is next to me, and the other presentation will be from Grzegorz Dobrocek. If I'm not pronouncing well, I mean, just yeah, I'm really sensitive on that. And if I may introduce, we will go on for 15 minutes in each presentation. Unfortunately, the third paper that was supposed to be presented will not be presented because our colleague was not able to make it. And so we'll have 15 minutes for each presentation, and then another 10 to 15 minutes for questions if there are any. So I will start with François, and who's going to talk to us about uses of AI for FDI data collection. François Robin is a data scientist who started to work at Banque de France in 2015. He then worked for the Reserve Bank of New Zealand from 2020 to 2022 as a senior data scientist, and then came back at Banque de France as deputy head of international trade and foreign direct investment division, which is the balance of payments direction. If I understood very well, but François, correct me if I'm wrong, you're going to talk to us about how much AI can help automatize the tasks that you need to identify FDI transactions in your professions, and you're going to tell us what was the facilitating factors in that endeavor. So the floor is yours.
Yeah, thank you. This is correct. Do I still need to present, because the sum up was so perfect? And thank you to the organization for giving me the opportunity to present a data collection topic. And we will focus on FDI data collection because, well, at least in France, but I think in many countries, there are parts of FDI data collection that remain very manual. And in this presentation, I will show two use cases where we use AI and where we try to automate parts of the data collection process. So this is maybe not the right place to remind what an FDI is. You all know what it is. What I can learn to you is how we collect the data at Banque de France. So for inward FDI, we mainly use the databases from INSEE, which is the French National Statistical Office. And we do that on a yearly basis. So basically, we reconcile the capital ties between entities. And on the outward for the outward FDI, we do run a survey of MNEs where we survey about 1,000 MNEs, and the data is collected by the branches. And during the year, because we need some information between the 2 yearly exercises, we simply read the newspapers, which can be actually quite time-consuming, to try to detect some FDI operation. So, as I said, the survey is run by the branches of Banque de France all over the territory, because they do maintain some very strong relationships with MNEs, but it also means it has a cost. And the thing is, well, when you see the data we try to collect in the table, most of this data is actually in one specific table that is called the subsidiaries and affiliates table from the social accounts. And so quite often, branches actually look after this table to fill in the survey. There is one big issue with this table is that it's not audited, which means the data can be wrong. But still, branches strongly use it. And we actually do use it too, because when we have collected the data in the survey, we then reconcile the flows and the stocks. And when it is inconsistent, the first thing we do is we look after this table to check whether the data branches collected is consistent with this table. And up to today, it's been quite a manual exercise because we need to go to Google. Then we have 2 websites, Papers or INPI, which is a French public open data source. Then you download the document, which is a PDF. It means it can be either a structured document or unstructured document. And when it is a not structured document, it means you cannot control find the document, you cannot copy and paste the values of a table, so it can be very time consuming. Which leads us to the first experimentation, which is trying to automate its extraction. And actually, Banque de France is not the first to think of automating its extraction. Everything started with some people at INSEE in 2022, because they do also need this exact table. Well, it is the large case unit that needs it at INSEE, and they do use it for profiling the French MNEs. So we decided to collaborate between the corporate statistics and balance of payments between INSEE and Banque de France, and with some AI support to try to use the newer technologies. The big difficulty, well, one of the big difficulties of extracting these tables is that they are not audited, which means they are all different. They have different formats, different columns, different units, different currencies. There is no standard. They can be on several pages, on just one page, on landscape format, or straight. Then, to do the extraction, it works in 3 steps. The first step is to download the corporate accounts via INPI, which is in an open data source. Then we try to detect the pages of interest, the pages where the table is. And finally, we extract its content. After a little of pre-processing, data cleaning, where we try to clean all the text, we then use an algorithm that is fast text. It's a neural network based for detecting the right page. And since then, I have to say that INSEE has tried to use some multimodals LLMs, and these do not perform better. But when you see the table, we're quite happy with the current performance, but still INSEE thought maybe we could improve it. And I think that if multimodal LLMs do not perform better today, it is already a result in itself. It means LLMs are not always the best option. And then we try to develop a model for extracting the data from open source libraries and from optical character recognition libraries, because when we started to work on this topic, there was no solution as a software that existed, and we had some not so good results. And one day, a solution appeared, a SaaS solution, and it actually performed very well. And when we wanted to put the tool in production, technologies are evolving super fast, and today Microsoft actually does it. So we do use the Microsoft Azure OCR to do that. And so I think this is the second lesson of this experimentation, is if we could have waited a little more, maybe we wouldn't have spent time to develop a useless tool, because it already exists with Microsoft now. And so now the tool is in production, so the team is quite happy because it saves a lot of time. It's very cheap. And if you are interested, because, well, I think, so we do extract one specific table in one document, but it can be used much more widely. I mean, every administration would be interested in extracting some tables to start some data collection from PDF, I guess. We can provide the code. It's an open source code on the INSEE GitHub. So if you're interested, there will be the link in the paper. And if you don't want to wait the paper, I can give it. The second process we wanted to automate a little bit is the reading of the press articles. So in France, the team mainly focuses on two newspaper sources, which are FUSAC, which means Fusion and Acquisition, Mergers and Acquisitions, and Le Monde du Droit. In Le Monde du Droit, we can find some lawyers very happy to tell about their last big deal. And this is the way we can detect FDI operations. And when we think it is about FDI, then we have still to contact the businesses or the lawyers for filling the form. And this may complete the survey or the INSEE databases, yearly processing. So the first step is to extract the data. So on a daily basis, we do run a web scraping algorithm. Just note that we warned the two websites that we daily web scrape them for statistical production purposes. And they didn't say anything, so we suppose they do agree. And then we do have to, the main question we try to answer is this article about FDI? We firstly tried more than 20 different prompts with different LLMs, and we thought it would be an easy task, but actually the results were quite bad. And after that, we thought maybe we have to split the question into 4 tasks. I think one of the reasons the results were quite bad is that the newspaper do not relate precisely the operation. So for instance, if there is a French MNE that is acquiring a new subsidiaries abroad, the newspapers may not tell whether the acquisition is going through a SPE or through a different holding located abroad. We may, well, press articles may also lack some information about the financing condition. So we thought we should maybe split into 4 tasks, and we will focus on the first one, that is it about an investment? The second one is, can we catch any amount in the press article? And then this is about recognizing the entities and their nationalities. So for the first tag, we actually have a lot of models. From the very simpler one, regex, for regular expression, it detects some specific word in a corpus. To more advanced models, so one of the more advanced is BERT. So for your information, the French version of Google BERT is Camembert, if ever you are a French cheese lover. And in between BERT and regex, you have plenty of algorithms that are that may be a bit simpler than BERT. And we do also compare the results with an LLM, sorry. So this is a classification problem, which means we judge the results with the confusion matrix and the work curve. So prior to run some algorithms, we had to annotate training data sets. I can tell you the team was a little grumpy to annotate 1,000 articles, but at the end of the day, we have a data set that is not maybe that big, and we may need to increase its size in the future to make the results a bit more robust, but still, we annotated 1,000 articles. And one specificity of this problem is that we want to maximize the specificity, which means we want to avoid false negative, which means we do not want to miss an article that is about FDI. And to do so, we had to actually fine-tune the threshold of classification from which an article is classified in either true or false. We can do that with roughly all the algorithms, but the LLM. You may know that LLMs have a lot of different parameters, including one that is the temperature, because it generates, and the higher the temperature is, the more it generates some answer, and the more it is random. So it's quite complicated to fine-tune an LLM for now. And this is maybe why we get the best result with the stacking. So the stacking that is at the bottom right of the slide is a kind of aggregation of all the results of the other individual models. And so yeah, this is it. This is where we stand for now. We've started to work a little on the subtask 2. So catching the amounts is quite an easy task. But I think for the tasks 3 and 4 about recognizing and catching the nationalities of the entities in the press articles, we may need to wait for some more advanced technologies, and I especially think of the agent AI, because we may need to plug the press article database with business registers to be sure that we can do some precise matching. Thank you.
Thank you very much, François. Grzegorz, I think the floor is yours now. You will allow me to make a short presentation, Grzegorz, right? I will say that this is Grzegorz Dobrocek from the Central Bank of Poland. And he's going to talk to us about known and unknown growth of China's influence on the Polish economy. I saw a little bit of the presentation. I found it very interesting because it's quite a bit of around what we have been discussing so far. And let me say a couple of things about you. He is an acting deputy director of the Department of Statistics at the National Bank of Poland, supervising balance of payment statistics. He graduated from the Faculty of Economic Sciences at the University of Warsaw, specializing in econometrics. He has over 20 years of experience working on statistics at the central bank. For more than 13 years, he was a head of current account balance of payments, current account balance of payments division / right? I'm sorry. And my glasses cannot help me very much. Huh? He's a member of Balance of Payments Working Group in Eurostat, I know, and participated in several other international working groups. And that's it. So he is a member of the club. I have to say. I'm sure you know him better than me. So Grzegorz, the floor is yours. Huh?
Thank you very much for a very kind invitation. Hello, everybody. I know that we are close to the end, so I will try to not to speak too much. Our article, our presentation was prepared by me and by Wojciech Mroczek. We both from Statistics Department from Narodowy Bank Polski. And I will talk about this growing influence of China on Polish economy, known and unknown. Known because to some extent it could be observed in current IMTM test data in balance of payments. So based on currently available data, we could analyze structure changes in Polish external trade and also the influence of China on the whole economy. but also there is a new phenomenon that Chinese e-commerce platforms are growing and growing. Their importance every year, every month even, is bigger and bigger. So, and we believe that this phenomenon is not properly included in, currently is not properly included in a balance of payments. So this is two aspects about which I will try to speak a little bit. So let's start with the data. So as you can see, imports from China growth really fast. At the beginning of century, it was around 1.5 billion of Polish zlotys of euros, and now it's more than 58 billions of euros. And China became the second most important partner of Polish economy. What is important that this growth is not only in nominal values but also in relative terms. At the bottom you can see that at the beginning it was around 2.5% of Polish import. Now it's more than 15%. So it was really something which trigger for every economist to make some research. The growth is not only, in some value terms, but also the structure of the imports has changed very rapidly. At the beginning, mainly these imports was due to labor-intensive goods like textile, clothing, footwear, and other similar products. In the second phase, we saw that more and more advanced products were delivered to Poland, but mainly still it was some parts, components to production in Poland. It was so mainly intermediate goods, and I will a little bit say about it in the next slide. Nowadays, we see high pressure from China in almost every type of production. They sell in Poland and on European markets. Cars, mobile phones, machinery, and it is really huge pressure on our economy to compete with that production. Yes, so now I will say a little bit about this second phase when we started to import a lot of components for production. On the left, you can find two graphs. On the first one, you could find that it is very important to notice that the share of Chinese, when we take to account share of Chinese value added in manufacturing sector, in Poland this share is the biggest in European Union. Bigger than maybe in 3 countries there is bigger, but when you take into account some groups, it's the biggest. It's much bigger than in Western countries. It was for many years. It was very beneficial for Polish economy. We import parts, components for production, but and exports final products to European Union. Poland, in that time, became the biggest exporter of durable consumer goods like TVs, household appliances, washing machines, and so on. Everything because we imported a lot of components for production. Our products were much cheaper than products produced in Western Europe. So we were able to become the leader. And unfortunately, it's this history it's already finished. But when we think about this import of intermediate goods, we should remember that unfortunately it also caused some dependency of this production from China. And it was especially a problem during the COVID pandemic when there was some breaks in global value chains. It was really difficult for Polish economy to produce these products, in a smooth way. Another important, maybe I will say it on the next slide. Another phenomenon which could be observed in Polish foreign trade is that to some extent Poland has become a logistic hub for the gateway for Chinese products. After joining European Union, Polish has built, a lot of infrastructure, and on the other hand, Polish transportation sector appears to be, the most important, the biggest in the whole European Union. So we have, very strong transportation sector and good infrastructure. We are close to the biggest market in European Union, so too close to the Germany. So a lot of warehouses are located in Poland, and this phenomenon is growing. As you can see, we import a lot of semi-durable consumer goods, and of course, after some time, without any production, without any big value added produced in Poland, they are exported to other countries in European Union. In Poland has one of the highest share of semi-durable consumer goods in the whole EU. And we, in last years, we observe that this, huge growth in this re-export of clothing, footwear, and other consumer goods. Maybe I will say that it's important that, most of this re-export is done by enterprises which has, the origin in Western Europe. So to some extent, they are not, the headquarters is not in Poland, not in China. But all this also is changing a little bit. So we observe that more and more Chinese companies are starting to build warehouses in Poland. And the last and for us most difficult thing, because this last two slides were a little bit good for Poland, because we benefit from these imports from China, because we were able to produce cheaper, and we are also maybe this re-export is not so profitable, but nevertheless it produced some profit. But nowadays we are facing the very high pressure from producers from China, and we could see that especially after COVID and after introducing these tariffs on China in last year, China, more and more exports to European Union, and especially to Poland. So as I said at the beginning, we see now not only that parts and components are exported to Poland, but more and more final products, especially, for example, these durable consumer goods. As I said you before, we were the leader in that market in the European Union. Nowadays, China has the first place. Similar situation was with batteries for electric cars. In 2023, it was, the most important product in Polish exports. Nowadays, so only 2 years later, it almost disappeared because imports from China and some production in other European countries, almost completely demolish our production. And for us, it's a really big issue because when we calculate export similarity index between Poland's economy and China, you could see that it's very big. It's one of the biggest in EU, and it's bigger and bigger. So the problem is that nowadays, our export is very similar to the export of China to EU. So we are competing on the same, on almost the same markets. So it's very difficult for enterprises from Poland to compete with them. So as you see, in these last 20 years, China, from country which exports only, almost low-cost production or labor-intensive production, nowadays is a country which produce a very advanced product, electronics, cars, machinery, and competes, on almost every market with Polish economy. But I think similar situation is for other countries. Now I will switch to the second point, to this digital issue, to the Chinese e-commerce platforms. This is really something which is very hot issue in Poland, because these platforms grow very rapidly. As you can see on the graph, there are 3 main players: AliExpress, Shein, and Temu. Now Temu has the most active user among all digital platforms in Poland. For many years, we have one monopolist, almost monopolist, in that field. Nowadays, in almost 3 years, Temu has the first place in active in number of users, because still, when we think about the value, it's not so important. But nevertheless, the growth is very impressive. It is important to notice that this digital platform, that this digitalization is changing, the rule how international trade was made by many years. Usually we thought that, if you want to sell some products abroad, maybe you should make some, export or establish some FDI, or find some retailer in that country to sell products to the consumer. Nowadays, it's possible even for very small company to sell directly product almost to every person in European Union, because almost every person in European Union has access to internet. And it's something completely different. So we have a lot of very small companies on European Union market. And it is very difficult to capture all this trade because in Europe, but also in other countries almost in the whole world, it was this de minimis system. It was, introduced many years ago, more than 50 years ago, almost 70, because when you think about this traditional trade, who cares about some parcels sent from, I don't know, from Australia to Poland? It was, something negligible. So nobody cares about, the value of this product. Even nobody cares about the transportation of this product, because there was some agreement that, for example, when we are sending a postcard from, from Italy to Poland, we buy only a stamp in Italy. In Poland, this postcard is delivered for free, and the same is with package. If you send a package from China to Poland, you only pay a price for transportation in China. In Poland, it is delivered for free, because there are agreements between posts. It was, the rules were constructed for 20th century, but nowadays it's 21st. So it is, it's the problem. And it appears that this de minimis rule was a hole in the system that, not only for statistical system, but also for customs system, for tax collection, of course, for fair competition. And so in many places we made this hole, and it was because this digitalization, it appears in few years that a lot of packages could be sent directly from China to Poland or to other customers in other European Union countries. Okay, so when we think how to, as I said, this is a problem. That this de minimis system allow to not to fill reports, and in fact has caused that we have a hole is statistics. And when we think how to measure this phenomenon, firstly we could first guess is one-stop shop. It was something which was introduced especially for this phenomenon in Europe. It was introduced to help small enterprises, this established in Europe, but also this established abroad, to pay taxes correctly, VAT taxes, where they should be paid. Because when enterprise is selling product to Polish household, it should pay VAT in Poland. But if this enterprise is sell product in Germany, they should pay VAT in Germany. So as you can see, it's very complicated for small enterprise to pay taxes in every country where there are clients. So that's why this one-stop shop was introduced. And in that data set, we can find import one-stop shop, so information about how many goods were imported to Poland from different destinations, from maybe not from different destination, but from country from which there are seller of these goods to Poland. As you can see, this popularity of this system is growing and growing very fast. But surprisingly, most of sales is reported by Ireland, not by China. And we know that, from Ireland, there is no digital platform in Poland. We know that there is no digital platform from United States in Poland, because, for example, eBay was not able to build, or Amazon is not important player in Poland. So, and China, it appears that it is artificially low. So this data is not captured, this phenomenon. Another data source which we should take into account is information from credit cards. From credit cards, we could distinguish whether these cards were used during the travel. So for example, you during travel to Poland use this card, or whether you use this card via internet, so without going to the shop. And on the graph, you could see the same, that information about transactions made by Polish cards abroad via internet. Yes, and as you can see, the import for this data is also growing very fast, but the same situation, not from China. Yes, from China it's very, very low. So this not capture this phenomenon as well. So we tried to estimate this in different way. We find that using available information, it's possible to try to estimate how big is that sales on this Chinese platform in Poland. We use information from website traffic statistics. That information is very. First, we thought about that we should verify how many how often Polish people are visiting these platforms, but it appears that it's possible to just to find this information in internet. Yes, that they are already available, and there are a lot of enterprises which sell such a data for not so big money, and the same is with mobile application. And that in Poland there are some consumer surveys made among Polish residents, how much they spend and how often they are buying products on these Chinese platforms. So using this number of visits and conversion rate and average basket value, we could calculate, the sales of this Chinese platform in Poland. This conversion rate is a percentage, how many times you visit, how many times you should visit a page to buy something. Yes. So it's around 20%. So usually you should visit 5 times, for example, AliExpress and once you will do in these 5 times you will buy something. As you can see, the sales is around 10 billion of Polish zloty in 2025. These sales are growing very rapidly. Not only the number of sales is growing, but also the value of sales is the value of average basket also is growing very fast. So and these results are in line with knowledge which we know about the e-commerce market as a whole in Poland. It's almost 10% of this, the whole e-commerce market in Poland nowadays. So I have no time, so just to conclude, I will say that as you can see, the role of China in Polish economy is very big, and it was changing in time, and nowadays we see much higher pressure from China on Polish economy in different aspects. Thank you very much.
Thank you very much, Gregor. And as you mentioned, it would be interesting to see the similarities between the Polish economy and other European economies as regards their relations to China, although you have already mentioned some of them in your very interesting research. I will have to open the floor now for questions, if there are any. To both of the papers, as you can remember, we had one paper that was on, yes, I think we have a question. Yes, please. Please say your name.
Hello, everybody. I'm Leah from Georgia, National Bank of Georgia. First of all, thank you very much for your really interesting presentation. And I don't have a question. I just have a small technical note to Francois. According to the standard definition of FDI, the threshold is usually considered to be ownership of 10% or more of voting power or share capital, not just more than 10%, which was indicated in your presentation on the first slide. Maybe it's just a small technical note, but in practice it will lead to the inconsistency and the low quality of the data. So I think we should be more precise and more careful at every stage of statistical work. So, thank you very much.
Other questions? Let me collect, and then I will give the floor to François. Yes, please, there is a question down there. Yes.
I have a question for François. My name is Dominic, I'm from Gleif. You mentioned that in some cases the LLM did not perform as well as traditional methods. Did you consider whether this is maybe because the training data set was not large enough? And also, did you maybe investigate whether the LLM performs better on certain types of input data?
That's a good question as well for François. So, any other questions, please? Last call. Then I will give the floor to François for replies, and you choose which turn you're going to. Which one you're going to reply first?
Yeah. So I just wanted to sum up the FDI definition in one simple scheme on the slides, and not to put the whole definition from a manual. I think it was not the purpose of the presentation. And then for the LLM, yeah, so you're right. The data set is not large enough yet. And one of the next things that we're going to do is to extend it from 1,000 articles to 20,000 articles. And to do so, we will try to annotate them in an automated way, and thanks to LLM, but ranking them like with a scoring model. And in terms of certain type of data, so LLMs are initially not built for classification problems, I think. They are built for generating information, but not classification, which is maybe why it doesn't perform as well. And the last thing is that in the data, we have some very different text length. And I'm not sure the LLM is so good at dealing with it. One last thing I can say with LLMs is if you want to test LLM on big data set. I know 1,000 articles is not that big, but still, most LLMs from a small number of articles will reduce the resources they have. So we faced this issue. We tried ChatGPT, and from about 50 articles, it does a simply request on Google, which is not satisfying. Copilot acts a bit of the same. So what we had to do is to download version of Llama and internally so that we could be sure the LLM would use full of its resources. But still, it doesn't outperform the other more classical models.
So thank you very much, Francois. And any other questions? Because I probably have a follow-up question on. Any other questions? So allow me to add my naive question in this, because I don't know. I mean, whether if you have any indication of the cost savings in terms of time, instead of doing things brute force, the way that you did that at some point, you did brute force, and then at some point you decided to switch to this more like automated. I got the point, because in your paper that you say, of course, since reading PDF documents is something that is not specific or idiosyncratic to FDI only, right? It's so you can see it everywhere as well. So you have some like positive spillovers there as well. But I was wondering if you have some idea about what it has saved you, has spared you in terms of time and in terms of, I don't know, gained productivity, I mean, if I may use this type of terminology.
Yeah, so for the tables that we automatically extract, we think that today it puts maybe 30 seconds to extract one table, while before for the unstructured PDF, when you face a 400 pages document, it could be up to 10 minutes. I mean, from the moment you go to Google, then to the website, you download the document, then you cannot control find, so you have to up and try to find where the table is, and then to copy and paste yourself in a CSV file. It can be up to 10 minutes for the bigger tables, well, especially if you do it for several hours. And then we do extract maybe 400 tables a year. So it's not huge, but still.
It's still, it's also the fact that you mentioned that it's also the technique that may apply to other domains as well. So if there are no other last minute, I would say, questions, in that case, I will kindly ask you to join me in thanking my panel participants. And then I'll have to invite Robert, I guess, here in my position to give us the last take for this conference, concluding remarks.
So, dear colleagues, at the end of this two-day conference, I think it's now the time for us to summarize the last 2 days and to round off the picture of the conference and to take the picture with us to inspire our work. So what have we learned and what were the key messages? And honestly speaking, I think each of us will answer these questions differently, depending on the interest and tasks we individually work on. But I think that's a good signal, since this means that this conference has provided useful insights for all of us. So in these last minutes of the conference, I can only provide my individual answer to these questions. And the first fundamental message that I took from the presentations is that external statistics remain an indispensable tool for describing external reality and dynamics in an increasingly fragmented world, thus providing us an indispensable basis for information on economic policy decision. I think it was Philip Lane yesterday directly at the beginning who invited us to contribute to the understanding of global interconnectedness. And starting from the first session, I would like to say there were many, many statistical topics which will then come again and again during the whole conference. So one issue that directly started with the first session, when we think of the papers from the Bank of Italy and from Indonesia, is microdata integration. And we have seen it, I would like to say, up to that moment right now. A second message directly derived from the second session in statistical terms is how important international comparability of data really is. And we have seen that in the network approach from the Brazilian colleagues. Furthermore, for example, Costa Rica has mentioned the micro-macro linking and the derived policy measure from these things. When we take the next steps, so some of the key messages I would like to say in the round table, it was also very clear that macroeconomic statistics plays a critical role. And we have seen all the analysis taken based on purely macroeconomic statistics, and I think also the explanation of Poland and the current situation, it was a very good example. But also when saying that, also the missing granularity for linking and better understanding of ME, I would like to say was clearly mentioned. So perhaps one of the generalized statistical issues derived from that for me was the microdata use for policy advice. And here, of course, we are in statistics without jeopardizing data confidentiality. I think we all have, or many of us have successfully implemented for academic research data centers for having access to this data. But always, in many areas, also the connection between statistical offices and central banks. But we have also seen some examples where we see there is also room for improvement, let me say, even in this regard. So, but anyhow, I think it is based on all these good examples, now the time to broaden the perspective to allow for a better policy use of the data and also of granular and microdata, again, without jeopardizing data confidentiality, and there are very good techniques available, so I guess that we can have a good feeling in statistics. In presentations and discussions in the room, but also outside of the room, let me say, so during the breaks, we have also seen that statistical or official statistics are confronted with fundamental changes in its environment. And statistics have to find answer to these challenges. One of these things, at least in many conversations that I have outside of the room, that we are confronted with the phenomenon of fake news and alternative facts. There is a spread of news around the world on a daily basis, and some of them which even deliberately mislead and want to convey a wrong picture of the world. And in a complex world with a wide range of influences and relationship, widespread false reports lead to uncertainty. Even more and more generally, it is becoming increasingly difficult for non-experts to separate the truth from the false. So orientation is thus made difficult, and fundamental uncertainty has negative effects on economic growth, our well-being, and is a danger for democratic society, as Fritzi pointed out in her keynote. So what follows from all that with regard to statistics, and what answers provided the conference? And I think with regard to this point, the first message is official statistics must defend its core business. We should report the truth independently. This may sound easier as often, and it's difficult to do, so truth is not easy to understand, but to speak with Karl Popper, truth is a useful metaphysics. And perhaps let me add a clear guidance for official statistics. We have the fundamental principles of official statistics of the United Nations that underlines, and here I quote, official statistics provide an indispensable element in the information system of a democratic society. And in addition, let me add, accuracy is enshrined as a 12th principle in the ESS, European Statistics Code of Practice, and in the public commitment on European statistics by the ESCB. The second message that I take from that is that central banks globally rely on reliable data. Therefore, they should actively communicate the importance of independent and truthful statistics. And I think that's an ongoing task. One-off measures about the high value of independent collected data are quickly forgotten. But for sure, without reliable data, monetary policy would be blind and easily subject to political pressure. So, of course, communication is definitely not a new task in statistics, but of central importance. And in the session, Statistics in Action, Connection with Diverse Audience, that made it very clear. We have proved formats and developed new formats for different user groups, press releases, report, dashboards, databases, but also social media, influencers, and others. We saw the results of the user satisfaction survey in North Macedonia, and we clearly pointed out that still in our technology phase, human interaction with journalists and users is an important channel for us. Also, connection to reporting companies is an important and easy, I would like to say, thing that we may have to think in particular when developing electronic reporting formats. Feedback mechanism from users is an essential tool for developing communication. A key factor is easily finding and easy access to data. We have discussed it very often, and also in the breaks we pointed out, and here to the international SDMX sponsor, let me say, publications. I think jointly the Bank for International Settlements, the European Central Bank, Eurostat, the IMF, and also the OECD, the United Statistics Division, and the World Bank gave up in their first AI call a clear statement. They say, and here allow me to quote 2 sentences, "We will be working together with national and international partners, legal experts, and technology leaders to make official statistics discoverable, machine-readable, and globally usable. Ensuring that statistics are accessible, interoperable, and enriched with high-quality metadata is essential to safeguard trust and to strengthen the global statistical system." So work is going on, and I think that's good. And we have also seen examples like the machine-readable downloads access for AI agents of the ECB, which go exactly in this direction. Let me say, I think every contribution counts, so it's our task to make our results as easy as possible available and to find and to offer the access to our data, to offer well-developed search functions, etc., etc. And it's a permanent task, and we all can contribute for that, as we have seen. And we can be confident on the future, since the data challenge winners, I would like to say, reminds us and give us good hope for that. Some further messages that I take with me. Data must be easily understandable, and inconsistent data from official statistics can lead to a loss of confidence. And in this regard, I would like to say reducing asymmetries remains important in external statistics. And in her keynote, Fritzi developed the proposal to use the G20 Data Gaps Initiative, and particularly also its monitoring framework, to give this topic a higher prominence in the international statistical work and policy help, perhaps, for bringing the issue forward. We are in a competitive environment. ChatGPT, Google Trends provide easily and fast answers, but do not follow the high-quality standards of official statistics. We have seen many examples of making good data faster available, but also quicker updates of international recommendations, new breakdowns, new of which positions, would help to become faster and not to lose relevance without jeopardizing the typical statistical benefits of harmonized concepts and the consistency of concepts. So suggestions were made to address new economic, political, and statistical relevant topics by updating the international standards and G20 recommendations more often. And I also think this could make an important contribution to becoming faster in official statistics. Implementing the new standards very clear will be an important step for us to take in the next years to remain relevant. The session on making crypto assets in external statistics offered, I think, good guidance and ideas on practical ways forward. So the guidance note on crypto assets is foreseen for global consultation around mid-June, and I think we're all invited to participate to make it very practical. The integration of data sources provides novel information, and we saw many examples, not only in the last session, I would like to say in all sessions. This was one of these general topics that we could take with us. But not only in statistics. Data integration and privacy guarantee techniques to work with microdata offers flexibility to answer new questions for official data. At the same time, let me say, we did not talk so much about it, but we see that official statistics and independent scientific data analysis being reduced in part of the world. This is happening for various reasons. Resource bottleneck often plays a role, and this is not only relevant for official statistics, it's relevant for other public tasks too. But as we learned from the last session, and for example from the Banque de France, it is also true by experience that the use of new technologies can fundamentally increase the productivity of statistical data protection. In addition, digitalization, I think, is an accelerator for the production of timely and high-quality frequency data, also at the Bundesbank, but of course it's not the solution to everything. On the 4th of May, The Economist published an article, "Bad Government Statistics Can Cost the Economy Billions." The article referred to a new working paper by Nicholas Bloom of the Stanford University, Erica Groshon, former head of the Bureau of Labor Statistics at now Cornell University, and Duncan Hobbs and Mikkel Strain of the American Enterprise Institute, a think tank. So the authors came to the following estimation. Preserving trust in the integrity and quality of official statistics generate economic benefits of about $25 per every dollar spent. I think that underlines two things. The first, every current unit spent to statistics is a good investment, but as in a statistical environment, I guess we would all agree. But second, I would like to say it also makes clear our responsibility for providing accurate and relevant data for decision making, because there is a lot which depend on that. Last but not least, I think we all have observed that there are important similarities between statistics and organizing a conference. There is a lot of work to run the process smoothly. Like in statistics, if everything works fine, we take it for granted. If there is just one outlier, everybody will remember. But this did not happen at that perfectly organized conference, and that's a lot of work for many colleagues. So on behalf, I guess, of all of us, I would really like to thank, first, the organizing team of the BAS and the Irving Fisher Committee, the European Central Bank, and of course, the host of this conference, the National Central Bank of Poland, and its perfect team for taking care of us in the last 2 days. Secondly, my particular thanks also for the program committee in selecting and structuring this workshop, which is a lot of work many months before it happens. Many thanks. Let me also thank all the presenters for sharing their useful insight with us and the audience here in this room for traveling to this conference and to contribute to our lively discussions. And last but not least, the virtual audience for their time and interest in the topics and learning from the presentation and discussions. And also, let me say, the excellent work of the hotel, the bus driver, and the technical team at the very end. On behalf of all organizers, I wish all of us a safe trip home. I look forward to the next conference on external statistics, hopefully in 2 years' time. And with these words, I officially close this fruitful conference.